Yo, 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 yo. What's up, everyone? Thank you for being here. Now we need to find Kirill. Romy, can you find Kirill? Because he's missing. The co-host is missing. Hey, Ryan, how are you?
GM, y'all. Good to see everybody.
Hey, Richard. Hey, Joe.
Hey, Mario.
Oh, shit. Andy's here as well. Didn't expect Andy to be so early.
Joe, nice to see you again. I really enjoyed your Bitcoin analysis last time.
Hey, Ryan. Appreciate that. Good to see you as well.
All right, well, we're going to wait for KK to join. And he's got the whole agenda. So if he has any technical issues, we're pretty screwed. But I appreciate you all being here. So we've got a pretty full agenda today. We're going to kick it off with... So we've got a lot of panelists. We've got some controversial panelists as well. A lot of great discussions, a lot of great debates. We're going to be talking about... I brought some people from the Bitcoin space that have been around for many years, much before NFTs were even a thing. Just to get their perspective on the NFT market today, to get their thoughts on the market, and to kind of get different perspectives, because a lot of the spaces mainly have all the NFT leaders right now. So I wanted some of the Bitcoin OGs. I've been in the space since 2017. Ryan, when did you get into the space, into crypto?
I bought a Bitcoin on Mt. Gox, and then I lost it. Yep, so that was fun. And then I logged into Coin. I actually I bought some on Coinbase really early too, and I forgot about it. And I logged in, and I was like, "Holy shit, yay!" So that was my Bitcoin experience.
Do you remember in 2017, like most of the people that we talk about in crypto today were, a lot of the people back in 2017, Bitcoin Jesus, Jimmy Song, Jimmy Song. No one talks about them anymore, and now you've got that new generation, the NFT metaverse generation. Have you sensed that shift, or is it just me? I'm just following the wrong people on Twitter.
No, I think it's true, but what was everybody else think?
I think that they're totally separate communities. Like there's barely any crossover at all. They actually chart this. So there's like a bubble chart of how the crypto communities are like dispersed, and the NFT guys kind of live in their own bubble. It's like all the NFT guys have blue check marks, and like none of the very few of the Bitcoin guys do. Yeah,
and then all the NFT guys have the NFT profile picture, and you can verify it on Twitter. And then all the Bitcoin guys usually have the laser eyes, or they just don't have anything anymore. So it's and they don't like each other either. So
I like the guys that used to have .eth in their name, and then they pulled that shit. They're like, up down 85%. Pull that fucking .eth.
I used to have Ryan.Carson.eth, but then I realized, well, wait a minute, I believe in more than ETH. But I still hold mostly ETH. But I want to just say up on stage, we gotta do less of this tribalism. Shtick, hey, we're all in this together.
Nope, you're wrong. Bullshit, wrong. So this kumbaya bullshit is why everyone just got wrecked. So I'm the guy that's saying you got to have keys in your own position, not your keys, not your coins. I've been saying it for years, and then everyone else promoted it. Everybody promoted Luna. Everybody promoted Celsius. Everybody promoted BlockFi. Everyone treated me like shit. I was right. They were wrong. They're fucking bankrupt. They're wrecked because they didn't listen to me. They listened to everyone the fuck else. Everyone else was wrong. I was right. And so this pretend we're all on the same team shit. We are not all on the same team. There's real cryptocurrency. There's no counterparty risk, and then there's scams.
I've also been watching your evolution, Richard, as well since the 2017, 2016 days till today. I know there's a lot of people that you've got a lot of controversy around Hex, which we're going to touch on, and your take on the market is very, very interesting. So we're going to definitely dig into that later on.
Oh yeah, no, Richard, clearly, you have to have a custodial wall. I'm talking about ETH versus Bitcoin. These are both, No,
Bitcoin sucks. Bitcoin's trash. Ethereum murders it.
Well,
by what?
Fair point.
Can you do NFTs on Bitcoin? No. Can you do stable coins in Bitcoin? No. Can you do smart contracts? It's trash.
This is the guy. I'm the guy who sold all my Bitcoin to buy ETH. So you don't have to convince me. I'm just saying.
No, but it's the audience, right? The audience hears this shit like this false equivalence. You have to give time to both sides. We have to give time to evolution and to the turtle that's holding the earth up. Like, no, you don't get equal time for shit that sucks. Shit that sucks. Like, Bitcoin sucks. It's lower now than it was 5 years ago. You held that dog shit for 5 years to lose money. Why the fuck would anyone buy that? It's trash. It's had 2 inflation bugs where anyone could mint as many free coins as they wanted. Yet people say it's never been hacked. Yes, it has. They say it's uncensored. Say it's fucking
Bitcoin. Hold on, Bitcoin. I know we're going to go back to the agenda, but Bitcoin's been hacked.
Yes, twice. Once they had to roll back the fucking chain in 2010 because someone minted 6 billion extra coins. Oops. And the second time, it was responsibly disclosed by someone that could have just minted all the free Bitcoin they wanted, but instead told the devs, and the devs patched it saying it was a denial of service attack, but it was actually a mint as many free Bitcoin as you fucking want attack. And that was just 2 or 3 years ago.
Oh shit. Okay.
That was just 2 or 3 years ago. It's spaghetti code with no fucking written spec. Like it's dog shit, but everyone thinks it's good. They're like, no, it's had critical vulnerabilities out the ass constantly. There's no bug bounty program, no written spec. Peter Woolay just stopped being on like. People don't know shit about Bitcoin, dude. I've been in this since 2011, mined full Bitcoin blocks of my own solo, and like no one knows what the fuck they're talking about in regards to Bitcoin. It's crazy to me.
I love this. I think we're gonna have a heck of a debate. I think we're gonna have a heck of a debate.
It's already a great start.
Yeah, fuck. How many people do we have in so far? 1.3K.
1,300 people already, man.
Perfect. So yeah, man, just don't interrupt me, and let's kick it off. I'm joking. I'm joking. Yeah. So no, for those unaware, I was interrupted like, I don't know, 4 times.
We had anyone. Hold on, Ryan, you were there. Ryan, just 2 seconds. Ryan, you were there the last, and Joe. And I think it's Rebecca from Magic Eden. Was it Rebecca, or I got the name wrong? If I did,
Tiff.
I'm really sorry.
Tiff from Magic
Eden.
That's so
Sorry,
funny.
Tiffany.
Jennifer.
My bad, sorry.
But I am Tiffany. Nice to be back.
Tiffany, did I, to be honest, Tiffany, Ryan, and Joe, did I interrupt Kirill too much last night? If yes, I don't mind. We had a whole
Yes. Well, I swear, like
100%. Poor KK, I tell you.
Ryan, thank you so much. I really appreciate it. I swear.
Like, speaking the truth.
I've been trying to have to like fucking prove this point like over the whole week. Like we're just adding people into calls. Like, did he interrupt? Yes or no? And I'm like, yes. And I'm like, no. And the next one, yes. The next one, no. It's like I thought I was going crazy.
Well, all the people we added in the call are people I pay. They're in my company, so they're gonna go on my side anyways. So.
Mario is exactly like Kanye. He's just saying, wait a minute, just a minute, and then he's like, KK, I need you, and then you just interrupt him all the time. So just speaking the truth here.
All right, KK, you got me there, man. The mic is yours, KK. When you're finished talking, just say over, so I know that I can speak, please, man.
No problem, man. Man, you can actually leave the phone in another room and go do some exercise, like jog or something. It's okay, don't worry. Sorry. Anyways, all right. So, welcome all to the 5th episode of our Crypto Roundtable. Today, like just from the start as well, from the start of the conversation, evidently today is going to be a little bit crazy, especially with the Bitcoin maximalist and Bitcoin minimalist debate that we have coming up. And we also have a heck of an agenda whipped up, plus some super interesting panelists that are going to be coming up on stage. So we'll be kicking off shortly with a market analysis segment where we'll essentially have intel dropped on the latest price movements, predictions for BTC and ETH, as well as some info dropped on the latest developments in macroeconomics, so the CPI reports, etc. Today's title for the roundtable is The Dark Side of Bitcoin and Crypto. And that's exactly why we have the market analysis segment followed up by a Bitcoin debate section where panelists will be given the ability to discuss the downsides of Bitcoin. That's one.
And the downsides, hold on, you forgot downsides of NFTs as well. We're going to go into the,
wash trading, money laundering, etc.
Yeah, exactly, yeah.
So this will then be followed by Simon Dixon's Celsius segment, where he'll update us on the latest happening with Celsius and the DeFi meltdown as well. We sort of dove deeper into that throughout episode 4, but because of the constraints of the agenda, we sort of had to cut it short, but we've dedicated a full half an hour for this just so that Simon can explain exactly what's happening. And lastly, we'll have it all rounded up with a trends and opportunities section where we'll be discussing the latest trends and opportunities in the crypto market as well. Now, throughout the segments, we'll be giving away, and Mario, correct me if I'm wrong here, $10,000 worth of crypto and project tokens to a select number of lucky listeners that will stay with us.
So we got $5,000 worth of just USDT and then $5,000 worth of Faith Tribe tokens, which was one of our sponsors a couple of shows ago and one of the projects we work closely with. So Faith, a lot of people love Faith as well. So we thought we'll bring them in. And we'll do that. We'll start giving away project tokens, project we're invested in, not just some shit coins, as part of the giveaways, and maybe some NFTs as well, rather than just pure fiat. But yeah, that's a good intro. And also just remember for everyone that we have a Telegram group now. I'm going to pin the message. So we launched, that's actually fascinating. Do you mind, KK? I'm sorry to interrupt. Really didn't mean to interrupt. I hope it's not, it doesn't offend you in any way, but I wanted to introduce the Telegram group as well for everyone.
Did you pin it? Yeah, did you pin it or not?
No, I'll pin it in a sec. I've got the tweet ready. But for everyone listening, so what we did, and for anyone that hasn't done their space, one thing you could do, I did it first time on Clubhouse, is create a backdoor, a community where everyone can chat. We did it on Telegram and it just blew up. And we've got 42,000 members in 2 weeks. We did a fireside chat, there's like 5,000 active members there. So we're going to pin the chat in the Telegram. To win, to be part of the $10,000 in giveaways, you have to join the Telegram as well. It's one of the requirements. And we're going to also announce Discord. So a lot of people waiting for Discord. We're going to announce Discord. They're going to be giveaways on Discord as well. So I'm going to be pinning a link right now for everyone listening. And if you go there, you go to the Telegram group, Discord group. You can ask questions, debate, and we're going to have a lot of heated discussions. Don't hesitate to participate in those discussions. We're going to be reading your questions and seeing your perspectives as well as the audience. So I'm going to pin that now.
I think as per the heated discussions as well, the best thing that we could do is just keep it like constructive and relevant above all, other than just a bunch of panelists just shouting at each other, because I don't think it's going to be a good experience for the audience itself. But as I was mentioning, so throughout the segments, we'll be giving away $10K worth of crypto and project tokens to a select number of lucky listeners that stay with us from the beginning till the end. As always, our team is basically scouring the listener notes and making sure that the people that are eligible, so they've followed all the links and they're with us from the beginning till the end. So basically it's going to suck big time if we listed you as a winner and you're not there to claim the prize, because we'll just have to choose someone else. To participate, you also have to join all the links that Mario's pinning above, which he hasn't pinned yet, but I think he's on it. As per the roundtable, the past 4 weeks have been a major success, with all 4 episodes being listened to by approximately 150,000 people, if I'm not mistaken, so give or take. Last week's episode was on Solana versus Ethereum, and that episode alone had 40K people tuned in. We had some super valuable conversations with thought leaders from both sides on whether Solana is better than Ethereum from a blockchain and community perspective. You can find that episode on Mario's profile. Today, though, we're switching things up, with key points of focus being Bitcoin, an NFT hour, Celsius, and more. And we've got some special guests with us today, including Richard Hart, who was a former Bitcoin maximalist / evangelist, but then went ahead to create his own coin, or coins, if I should say, especially with Pulse being released right now. Then we also have Simon Dixon joining us, who's actively helping Celsius with their recovery plan, and a couple of others, which I'll announce along the way. And we've got some nice questions lined up for them throughout the duration of the show as well. And for the roundtable, for those unaware, again, probably the last time I say this, it was the biggest room on Clubhouse during Clubhouse's inception. Mario, our host, had tens of thousands of listeners in each room and was hosting rooms alongside some of the world's biggest celebrities and thought leaders, including Paris Hilton, Jay Shetty, and others. But after taking a short break to get NFT tech listed on the Canadian and European stock market, we're finally back, and we decided to move the show onto Twitter Spaces instead. For those who don't know me, I'm a growth hacker, which is basically a fancy term for a marketer, and a bit of a crypto and Web3 enthusiast, and I'll be co-hosting episode 5 alongside Mario. As mentioned before, giveaway prizes, etc. Now, major shout out to the sponsor of this space, NFT Tech. I think Mario can expand on NFT Tech more, as he was the actual co-founder of the company itself.
Yeah, I will in a second. Also, I've got Andy. I want to introduce Andy to the audience. Came in last minute. Really glad you managed to come in, Andy, especially with your involvement with the recent, DeFi liquidations and your insight there. So we didn't have you on the guest list because I thought you won't be able to join. But thanks a lot for joining, man. I appreciate it.
Andy, are you with us?
There? Can you hear me? Okay, God love her. He's there. He heard us.
Yes, I'm
Thanks,
around. Thanks, Mario.
I appreciate you being here. Yeah, so NFT Tech, everyone, is the sponsor. It's listed on the Canadian and European stock market. I co-founded the company and was the CEO for a period of time until it went public. And it's essentially like a portfolio company. So any retail investor could buy shares in NFT tech to have exposure to the space. And one of the few companies doing this for NFTs. We've got a lot of index funds for Bitcoin, for ETH, but not many people have done this yet for NFTs. So that's what NFT tech did. We launched it about a year and a half ago. But enough about NFT tech, man. Let's kick it off with the market analysis, KK. Then we'll introduce the guests and we'll start digging into the topic.
Perfect, 100%. Romy, in the meantime, just make sure that you're adding the relevant people for this segment of the show, just so that we can kick it off. And yeah, I guess we'll basically hop into the market analysis segment of the show. So a quick wrap up of just what's happening right now for those unaware. Bitcoin has been steadily forming lower lows and lower highs throughout the entirety of this week. The price seems to be slowly decreasing to retest the demand zone at 18K after a short-term rally towards the 21K mark. Ethereum, on the other hand, has dropped to its 1K levels, with the support of 1,000 being the critical part over the last few days. On a macro scale of things, the euro-dollar pair has broken parity, with euro-USD reaching 1.01 yesterday, and the US has released a CPI of 9.1% for June, which is basically the highest rate in 41 years, causing the stock market to fall. Now, as you all know, when stocks drop, people don't hedge with crypto, despite what we'd like it to be. So crypto falls too. And this is basically contributing to the bleed off we're seeing right now in the market. I'd love to get the thoughts of the panelists, though, with regards to just what's happening from a market perspective.
We'll kick it off with Joe. Joe, I know you did a market analysis last time. You want to kick it off for this show?
Yeah, definitely. First, thanks Mario and KK for inviting me here. Enjoyed it last time. I'll do, quick market analysis and then got to drop for other calls. But two major topics that I wanted to cover this time around. First one is, and it's very fitting with the title of the space, the dark side of Bitcoin and crypto. Many people, I think, view Bitcoin's and crypto's volatility as, something that scares them, and it's, a bug of the system. I like to argue that Bitcoin's volatility is a feature, not a bug. And so I kind of come to the conclusion that these extreme bull and bear markets of Bitcoin are a feature and they speed up the adoption process. So, the average person doesn't know this or may not be aware, but, the 2017 Bitcoin bubble and the 2021 Bitcoin bubble that we had were not the first time we saw this significant price rise and rapid decline. There have been countless other bubbles. In 2011, it rose from $1 to $30, crashed 92% back to $2. 2012 and 2013, it rose from $2 up to $250, crashed to 62, which is a 75% decline. 2013, 2014, it rose from 62 to over 1,000, dropped back to 154, which is an 86% decline. So, like I said, these massive price advances along with the massive declines are exactly how I think Bitcoin adoption will continue to play out. The bull markets bring in the network effects, including technology development, investment, ICE, Fidelity, and security from miners. The bear market drives out all of those who really don't understand what Bitcoin is, so they sell it and deeply regret it later. And I think this exact cycle is kind of going to repeat itself until weak hands are purged. People that, don't understand Bitcoin or maybe they were too leveraged going into a bear market. And I think the only people remaining, after Bitcoin falls 80% are really those comfortable holding Bitcoin. And I think the only ones left buying after it has fallen 80% are those well capitalized and have strong balance sheets, and they're in it for the long run. So that's my general take on why I think that Bitcoin volatility is actually a feature and not a bug, and it's speeding up the adoption process. Second major point that I wanted to make for this market analysis section is the whole debate on whether Bitcoin is an inflation hedge or a debasement hedge. So, many people have kind of said that Bitcoin has failed as an inflation hedge. We just had a record CPI reading this week. It came in at 9.1%, which was, a 40-year high. But meanwhile, Bitcoin is down significantly from its all-time high of 69,000. And in my opinion, I think a better way to describe Bitcoin is it's a monetary debasement hedge rather than an inflation hedge. So I think, CPI is a backward-looking metric. It describes what consumer prices have done, over the past 12 months. However, I think markets are forward-looking metrics. Markets are trying to measure what's going to happen in the future. And so in this case, Bitcoin certainly has held its narrative as its monetary debasement or inflation hedge because, we've had massive government stimulus, massive Federal Reserve easing, which occurred in 2020 and 2021. Bitcoin benefited greatly during those times. And now that the monetary stimulus is clearly being reflected in consumer prices, it took some time for that to manifest as businesses don't all immediately raise their prices at once. And since 2021, Bitcoin has fallen because the Fed has clearly said that they're turning off their easy money policies in an attempt to slow this inflation that took time to manifest. And since the Bitcoin market and the US equities market is forward looking, the market is pricing in an aggressive hawkish Fed. And so to sum it up, I think CPI, it looks backward and Bitcoin and equity markets look forward. And whenever the Fed inevitably reverses course and tries to stimulate once again, I think Bitcoin will be one of the best assets to own.
Joe, for the audience, could you explain the difference between a debasement hedge and an inflation hedge as well?
Yeah, absolutely. So kind of like I was mentioning, in 2020, we saw the Federal Reserve and, the U.S., central government get really aggressive, pushing out stimulus checks, dropping interest rates to zero, doing massive quantitative easing. We saw that occur back in 2020 and 2021. Like I said, markets, whether it's the U.S. equity market, stocks, or the Bitcoin market or the crypto market, markets are forward-looking. So when that occurred, that debasement of the dollar occurred back in 2020 and 2021. That's when Bitcoin started to, look forward to see this. Hey, inflation is coming. Like this debasement is happening now. Let's price that into the Bitcoin market, into the U.S. equity market. So Bitcoin had that fantastic run up, throughout 2020 and 2021. It went from its $3,000 or 3,000s low in March 2020 up to 69,000 at the end of 2021. But then we had this inflation manifest, which now we're potentially seeing or we're seeing record highs of it. But since the end of 2021, the Fed has kind of reversed course and they have taken a much more hawkish stance, meaning they're raising interest rates and they're starting quantitative tightening. So like I said, the market is forward looking. The Fed is trying to tackle inflation aggressively now, and that's really what's been bringing down asset prices.
Can you also, because I know that recently a topic of conversation has been how CPI is measured, so how consumer price index is basically measured. Can you expand on that, and can you also expand on whether you think it could be measured better? Because I remember hearing a snippet on a YouTube video about employees of the government basically going to shops with a tablet and just identifying the prices and then working out some average. Can you talk about that a bit as well?
Yeah, sure. So yeah, there's definitely a lot of debate on how to accurately measure consumer prices, and I think Michael Saylor has a great quote on this. Inflation is a vector. It's not something that you can just boil down to one number. It kind of depends on everyone individually, what they buy, where they live, where they buy or rent their house, what foods they consume. And so if you're consuming different goods and services compared to other people, you might be experiencing a different inflation rate. So I think at the end of the day, it kind of comes down to the government or the Federal Reserve is trying to, I guess, identify that inflation number in a very concise manner. But it's honestly just impossible to do, in my opinion. And I think, in the long run, with technology growth and processes getting better, population growing, more division of labor, I think, we really should see prices coming down, right? Like things should be getting more efficient. Food should be getting cheaper. Like if we have self-driving cars, or self-driving trucks, then we should be able to see goods and services delivered to us in a more cheaper manner. And in the long run, prices should actually be coming down. So it's kind of this interesting division where the monetary system that we have today is, focused on pushing prices slowly up over time, but we have this, technology deflation, which is just market reality, which should actually be pushing prices down over time. And I think we're kind of seeing this unique division, and two forces pushing in the opposite direction, and it's causing a lot of problems.
Mario, do you have anything to add to this? Also, another one for the panel, and I'll add it later. Go ahead.
No, I was going to say, get different perspectives on this as well. So I know, like Andy, Richard, you guys, and Ryan, you guys have been in the space for a long time, and would love your take on, do you see things differently this time, or is it just another correction and just a matter of time before we see the market recover?
I think this is just another correction. I mean, anyone who's been investing for any period of time just knows that there's cycles, and this is just another one. The world's not going to end. Everything's gonna be fine if you're holding good assets, right? Like the reason why I particularly hold ETH versus Bitcoin, and again, I'm not an ETH maxi, is just because everybody that I know in the space that's building builders just don't understand the utility of Bitcoin other than land, an asset that you hold that will go up. ETH and Ethereum is obviously what you build on. So that's why I've always focused on Ethereum and ETH. But this is just a cycle, is my opinion. Like, obviously not financial advice, but the underlying asset is good, and everybody should do the cash flow analysis on the Ethereum blockchain itself. Like, it actually generates cash post merge. Like, so this is a good foundation to build on. So I'm the same with NFTs. Like, good NFTs are gonna hold their value and grow. You buy ETH at 1,000, you buy a good project that's an NFT. ETH will appreciate over time. The project will appreciate over time, and if you're patient, it should work out. Now, there's a lot of low quality assets out there, and I think those won't recover. But I'm just going to be patient.
Does anyone disagree with the? We've said this before. Like, quality NFT projects are here to stay. Projects with a strong community are here to stay. Does anyone disagree?
I disagree. Yeah, I disagree entirely. So, Ethereum benefits like internally. So, the more developers that develop on Ethereum, the more projects that use it, the more it acts as a base liquidity layer for Uniswap or Sushi or whatever. The more rare the Ethereum coins get, and the larger the float of, like, all these projects need to have some of the ETH to do the stuff they want to do, and so it creates a float. So even if they don't want to necessarily be speculating in it, they still need to have it. And that all increases demand. And so, like, when you bring on new projects to Ethereum, it doesn't create as strong a substitute good. But with NFTs, the substitute goods are just more strict. So, you buy one monkey picture, someone else makes a toxic monkey picture, and then someone makes a monkey picture GAN, and then it's very hard to see how someone else's monkey picture pumping in price actually should affect your monkey picture's price. And so I think it's a lot easier to dilute the monkey picture market with more pictures than it is to be like, oh, like, we'll just make another ETH. I think it's a lot harder. I know it's a lot harder because I'm making another ETH. So,
well, but Richard, you're sort of classifying all NFTs as monkey pictures. You obviously don't believe that, right?
Yeah, I do. What are the non-monkey picture ones?
Then you need to research the NFT market. I mean,
no, you can just teach me now. I'm ready.
Okay, NFTs are a technology, right? They're
not
a JPEG. So you got to look at what the technology can do. They're tokenized assets.
But Richard,
so you're going to try and defend monkey pictures with ERC 721. and it's actual utility that no one uses.
I don't own any Yuga assets, so no, I'm not defending monkey pictures. What I'm talking about is 721.
So let's be serious that in actuality, apart from the technological argument, they really are just fake gambling. It's just fake gambling. You guys are buying loot crates. You're buying gun skins in Counter-Strike and hoping the price pumps with maybe less counterparty risk. Maybe.
No, well, you're conflating the technology with what people are doing with it now. Like those are two separate things.
Yeah, but people aren't buying your future optional fantasy reality that you think will happen one day. They're buying monkey pictures now. So you're just dreaming shit. Like people are getting wrecked now, and you're saying it's okay. They're getting wrecked now because it'll be okay later somehow. Like no, it's not okay.
I didn't say it was okay now. I said people need
not okay.
Like being
so Richard, I have a question for you. The concept of digital ownership, the ability to own something virtually without a central entity saying you own it, as a technology, do you not see value in that technology?
You guys understand that that's not what NFTs are? Let me explain to you guys what NFTs are. An NFT is a serial number loosely related to a JPEG, which may or may not still be hosted on the internet, and at any time can be swapped to dick pics, unless you use IPFS, and that's it. And most projects don't even do that. So you're not even buying the intellectual property. You don't have the rights. And I, by the way, am putting the F in NFT because when I fork Ethereum, all of your NFTs are coming as well. And so you think they're non-fungible, but I'm making them fungible because I'm giving you another copy on a new chain. So how's your fungibility doing? So it's weird that I'm like down talking my own bag, like hurting my own business by like alienating the NFT guys by just saying like, hey guys, I'm making your shit fungible. So, if you buy an NFT in the future, I hope you're getting the Pulse Chain copy too. Because it's going to suck for you to have to argue with the seller when he sells you the ETH copy and he sells somebody else the Pulse Chain copy. I would want both my copies. And I mean, like, NFT guys don't like getting robbed by fees either.
Richard, you're building another version of Ethereum? Like, what are you talking about?
It's already done. It's already done.
No one knows about it or uses it.
Oh, right. Yeah. But it raised $1 billion. That's how smart you are. That's how smart you are, dude. It raised $1 billion with a B. There was $680 million of stable coins sitting in the 2 sacrifice addresses. So tell me how smart you are and how up to date you are. I raised $27 million for charity. Did you know that? You probably didn't because you actually don't know much.
So Richard, I know you're referring to Hex, yeah?
No, absolutely not. This has nothing to do with Hex at all. So you guys are you guys crazy? Holy shit. So go to pulsechain.com, go into MetaMask, put the settings in there, and go fuck around with all your free coins. They're all sitting there. All of your coins that you have Ethereum are already sitting in the testnet. You can go trade them. And people have been trading them back and forth and having fun on the testnet for like 6 months or longer. And we would already be in mainnet, except my devs found some denial of service attacks they want to close up. We could launch without doing that and just hope no one attacks, but I don't feel like going down all the time like Solana. I'd rather stay up all the time like Hex. So I'm not, I don't want to like, I hate alienating all the NFT guys because I'm giving you a free copy of all your shit on a new chain with no AML, no KYC, no sign up. It all just fucking works. But I still think overpaying for serial numbers loosely related JPEGs is stupid.
No, but I think
and the technological argument that one day you could use it to secure other shit is retarded. No one cares right now.
Yeah, but no one cares right now. I think that the technological benefits of NFTs go way beyond looking at JPEG pictures of monkeys. I've been against I was against monkeys at a stupid time, when I could have invested in punks and apes and ignored the value of building a community around it. But then even, I see value in those PFPs. Do you see value in having a digital identity represented by one of those NFTs?
No, it's horrible.
The NFT, why is it horrible?
Because like, you don't even own the fucking property rights. Like the actual property right owner could come and file a fucking claim against you and remove your stupid NFT from you that you think you kind of maybe own, but you really don't. You're pretending you own it. You have no fucking rights to it. You don't actually own shit. You're just pretending that you do. And you get mad when other people copy paste your shit and pretend with you. We have real ownership of things. I really own the Hex logo. Like, well, a company really owns it, but like it's really owned. It's not fantasy shit where you get rug pulled and they just point the server somewhere else. They can just take your JPEGs that you think you own and point them to dick pics. and you could cry about it. It's the stupidest shit I've ever seen.
I'd be happy to have a conversation without swearing and kind of
oh my god,
inflaming this whole
oh
thing.
my god, dude,
this doesn't feel like a professional.
Can you explain to me what's wrong
conversation.
with cursing? Like, are you a school kid? Are you in elementary school, buddy?
Richard, I would agree. Like when we brought you on stage, and I've been watching you since the early days, and you've got an incredible audience. But there's a lot of people that get alienated by the confrontational nature of presenting a point.
Yeah, but you guys are costing people their life savings, and you think it's funny. Like,
we're not. We've never shilled a project before. We never will shill a project. Now I know there are people in the space that pointing them out and pointing out the imperfections of the space is the purpose of the show today. And we had a list of things that are wrong with NFTs. But there's, so just to kind of differentiate ourselves from the people that pump projects. I've never shilled a project. I know Ryan hasn't either, and he's invested a lot in the space. But also get your point, and looking at,
I'll curse less, but if you're telling people, if you're overcharging people for serial numbers related to JPEGs, I don't like it. And I'm gonna give everyone a copy of your stuff for free, so enjoy.
So Ryan, what would be your take on Richard's point regarding his concerns with NFTs as a technology?
I honestly need to research the technology he's talking about. I haven't heard of it till today, so I need time to do that to have an intelligent response. But this doesn't feel. I don't feel like I'm talking to someone who is open-minded, so I'm not going to engage anymore.
Right, cool. Well, Richard, I think this is a discussion that's worth having and preparing for maybe a future show. Would you be up to going on a different space where we discuss that exact concern that you have and the points that you've made? And then we bring in some people deep in the NFT space, some heavy investors in the space to go through that, through those points. Richard, you up for that? Richard, you there? You don't have to curse, but you can unmute if you want to answer.
Oh, I was muted. Nice.
Yeah.
Hey, I think that other guy is a coward. I don't know why he's such a baby. And yes, I'm happy to debate anybody.
Cool. Okay, do you want to go through the agenda, man? That took a massive.
Yeah, let's go. Get the next one.
We're just supposed to have NFT hour, and like Magic Eden just bailed as well because of the conversation. That's crazy.
Hey, welcome to the internet, guys. We got thick skin here.
We've got 2,800 people, no, 2,750 people listening to the space. I mean, it's our biggest space yet. So obviously the audience is enjoying the discussion. So for the audience members, actually, I'd love different perspectives on this. We have the Telegram and the Discord groups pinned in the space at the top. So go in there. Anyone that wants to debate the points made by Richard, welcome to bring you up. We have Tony Wood joining later on as well to discuss a few points as well. And Richard, I think you'd have a strong opinion on those points. But yeah, so while everyone's doing this, okay, let's get through the agenda, man.
Are you ready for NFT hour?
No, man. I think we'll go through directly to Bitcoin first, and then we could talk about NFT hour later, because I think all the NFT guys just kind of freaked out.
Magic Eden just went poof. It's like, what the fuck? I was expecting them to I don't know, debate or something.
Yeah, Tiffany will join back. I'll ping you in, but I'll let you go on with the agenda. And for everyone listening, just remember, make sure you follow all the speakers. We've got 2,700 people. We usually get 40, 50,000 listeners per show, including replay. So make sure you follow all the speakers. You join the Telegram and the Discord community to be part of the giveaways. And if you have any questions, any points you make, if you want to go up and speak as well, definitely let us know in the group. We've got the team watching the Discord and Telegram groups. Again, check the pinned tweet at the top of the space to join. There's a link there. But let's go through the first point, KK, in the agenda.
You want to flip it from NFT hour to the Bitcoin debate, or how do you want to?
Yeah, we'll go to the Bitcoin debate, and then we'll get some NFT guys to come in and get a debate going.
Or do you want to protect NFTs? You choose.
No. We'll talk about NFTs afterwards. We'll kick it off with Bitcoin and crypto.
I would love the Bitcoin thing, man, because the NFT dudes they don't want to hear what I got to say, bro. The Bitcoin.
Richard, apart from the tech, and I know that tech is the fucking fundamental part of it, because if the tech doesn't work, then everything goes to shit. But because I'm not a blockchain dev, the technical part sort of evades me. But you don't believe in any of the applications at all, even if the tech was fully functional.
So I can explain it to you. I love to educate, so I can explain this really clearly. When people create NFT, blockchains are just really expensive, really slow databases. That's all they are. period. They're the most expensive, slowest, crappiest databases in the world. They have hidden bit rot. There's a fork that just removes your data. You have to run your own computer offline to make sure that your data is still there because it might have been orphaned off in a fork. When you try and write to the database, sometimes it doesn't go through because the blocks are full, or sometimes it doesn't go through because your transaction got dropped, or sometimes it doesn't go through because you didn't bid for enough gas. And so it's actually a horrible, terrible nightmare for doing any type of development. The only reason that we endure any of this pain and horror to develop on these platforms of the world's slowest and most expensive databases is for censorship resistance. And so NFT projects run into a problem. And the problem is they want to issue people JPEGs. And JPEGs take X number of bytes. And if they add up the size of all their procedurally generated garbage art and add it all up, you end up with like maybe a gig of data. And then if you see what it costs to write a gig of data to the blockchain, you can't afford to do it. It costs too much. You'd go cash negative. And so what they do instead is they take the JPEGs and they store them offline in a normal web server. And then they store a hash of the JPEG on the blockchain because it's much smaller.
But you're happy, but you got IPFS as a solution. You got other solutions.
Yeah, I know.
Developed.
Yeah, sure. Right. That barely anyone uses, but they should use because it is better.
Can you explain IPFS to the audience?
Yeah.
As well?
So what
otherwise we're just
all IPFS is a web server, but it's based on the hash of what's being stored. So a hash is just a way to identify something, and then like you take all the numbers that make up the picture and you run them through this code, and then you get a new number that's a lot smaller. So it's like looking at a book. You look at the book and you're like, okay, I'm going to call this book the Bible. And then like that's the hash of that book. And then I mean, it's not the best example because there's different translations and but basically you can identify a big set of data by a much smaller set of data. It's just a name for it, right? But the name doesn't have collisions. So like it's a unique name that it will always equal that thing. So anyway, so IPFS is just a way to store data on a web server, but access it by the hash of what it is so that you know what you're pulling up is really the thing that you wanted. So it's like kind of perfectly built for NFTs, basically. And so for projects that use IPFS, at least there's a chance that what you think is yours really still is hosted on the internet somewhere. But with these projects that have centralized servers, they can make your NFTs whatever they want by just changing the thing on the server. Because you have some serial number that lives on the blockchain, and then their server lets you think it equals some JPEG, but they could just change that data and it could equal some other JPEG whenever they want. And that's not trustless and that's not crypto. So, for NFT projects that actually use IPFS, that's kind of crypto, right? It's harder for a middleman to come in there and just steal all your stuff. But these projects that don't use IPFS, they could just steal all your stuff. They could just give it to somebody else. They could hold it for ransom. They could be like, hey.
I agree with you. I think this is. Go ahead, man.
I wanted to say, what about on-chain? Like on-chain.
Well, there's not enough space. You can't because there's not enough space.
But on-chain,
the blockchain is not big enough to store all the JPEGs. It can't. It just fills up.
All I'm saying is on-chain monkeys. Let's say if we take on-chain monkeys, they're the perfect example of the shit is legit. I mean, like, there's no argument there.
Well, no, the argument is so you have reduced your counterparty risk, but now you still we're really just playing roulette, but instead of numbers on a wheel, we have monkey pictures. Like, it's just obfuscated gambling. There's no actual technical innovation. It's pure. It's just greater fool. So like Bitcoin's technical innovation was that it was the first peer-to-peer censorship resistant kind of attempt at digital cash, and it failed at that, but ended up being digital gold, and that was worth more. So yay. And then Ethereum was like, we're going to do the same thing Bitcoin did, but instead of just using the Bitcoin opcodes, you're going to be able to do turn complete stuff and do a lot more computation. And that opened up the floodgates of creativity. So now you've got options, you've got time deposits, you've got peer-to-peer trading, DEXs, everything. Like, that opened up the sky's the limit. And then when they opened up that Pandora's box, it released a lot of bad things, right? So you have a million rug pulls now. And it, maybe released a lot of good things. We'll see what gets up after the bear market, right? Everything pumps in the bear market. Trash pumps, scams pump. And then the bear market comes. I meant to say bull if I didn't. So during the bull market, everything pumps. And then during the bear market, everything dumps, and I do mean everything. And then it's like, what will get back up? And some things won't get back up. Like Luna is not going to get back up. But like probably Dogecoin would. So even though Dogecoin's down like, I don't know, 85% or something, it probably will get back up because it's done it for so many years. So even though it's not good technology, it has product market fit. It has a little bit of a walled garden due to its memes. And then that's enough to get back up. It doesn't have critical technical failures. But there's a lot of things that do have critical technical failures. So just because, just because IPFS solves counterparty risk, it doesn't solve this was a bad idea and overpriced in the first place kind of bubble risk. So bubble risk is different from counterparty risk.
Richard, other than the expensive apes and just the pictures and everything, if we talk about alternative NFT applications, like I'll just choose one random from the top of my head, like access to a certain community, for instance.
Yeah, they're all great. I think those are all fabulous, but no one's using them for that. So in a world where you're tokenizing access and shit, it's fabulous. But like, you don't have to overpay for access. You don't have to overpay for serial numbers loosely related to pictures. Like the price is the main issue. And that's why most people are in crypto. If these NFTs didn't have prices and weren't easily tradable, no one would buy them. It's pseudo gambling.
I actually agree with Richard on this one. On the aspect of I don't fully have an understanding of the tech, but with regards to alternative use cases such as like community access and that type of stuff, where it's more down to earth from a pricing perspective.
Community access is actually just even that is boring. Like, sorry to interrupt. I was going to say you've got so many applications of NFT as a technology, and I think Richard, what you're saying, like if you're using NFTs to tokenize your medical records.
Well, I can give you a perfect example of a good use of an NFT, like right now. So if you use Uniswap V3 and you open a liquidity provider position, you are issued an NFT that represents your liquidity provider position. It even comes with a funny picture. And so all of your liquidity positions in Uniswap V3 are NFTs. That's fine. That's wonderful. I have no problem with that. Someone else tokenized hex stakes and made them, one level of abstraction larger so they act like bonds. And those are NFTs. And so like there are layer 2 technical ways to use NFTs that have nothing to do with JPEGs that are, fine.
So perfect. So you look at the current state of the NFT market, unsustainable, Ponzi-nomic schemes, a lot of scams. But as a technology, if it's used properly, there's a lot of great utilities there.
You agree?
Man,
yes, I agree with that.
Your point. I'm going to let Andy speak because I'm glad he's here as well. So Andy, before I give you the mic, I just want to say, Richard, like you've got a very unique way of making your point. They're good points. Like when you start digging through it, you get to a good point. Usually we agree, but your way of making those points, man, you rub a lot of people the wrong way. But
I'm like the Kool-Aid guy that comes through the wall. It's the Kool-Aid still tastes good.
Andy, the mic is yours, man.
No, I think Richard is being very direct. I echo to some of his comments on the actual usage of a blockchain and whether there's a real need to have a business case, using blockchain or building on blockchain. Because I give advice to governments, I give advice to listed companies. I realize the biggest problem is everybody is just here for the fact. Just for the fun of it, right? And they do not really know exactly, the kind of cost that is behind it. Taking another step backwards, I have friends, who say that, STO, for example, securities token are the best thing, because there's no need to go through the middleman. It's a lot cheaper. There's no need to go through the audit. But again, these are all bullshit because there are other costs incurred, for you to be listed on an exchange, and it's not too much cheaper, as compared to a real standard, traditional listing, right? So I think that I agree with Richard. But one thing that I do not really agree with Richard is maybe I should put it this way. I agree with him that there's a lot of PFP or JPEGs that are in the space right now who are here for maybe some rug pull or some form of scams and so forth. It is a pain in the ass, and it is cheating a lot of people's money. Not only us as a crypto native, also all these new people, who think that it's the easy money, right? So all these PFP guys, all those profile picture guys, I think we have to really educate people that, you know, some of these things you just buy it because it looks nice, and do not really take this as a gamble, or maybe you want to speculate, or you listen to your friends saying that, oh, it's going to be 100x the next day. All these things we got to educate, and then we have to tell them that there's a lot of hard work, you know, in order for a profile picture to be a half a mil or 500,000 worth, you know. So we really need that education part. But I do not.
I give you a funny joke. I'll tell you a funny joke. If the NFT guys want to clap back at the crypto guys, just tell them, hey, Bitcoin dropped 72%, Ethereum dropped 83%, and Hex dropped 93%. So, you know, maybe the monkey picture didn't even drop that much. I don't know. It's hard to tell.
No, but that goes on to another joke. One of my friend went for I call it a scamina. So those guys went to offline scamina talking about investing in crypto and NFTs. You know, they were saying that since Bitcoin has dropped that much, you know, there's a very high chance that it's going to bounce back the next month. You know, and then the kind of APY that they are giving them as an example is so huge that I when I saw the PowerPoint slides, I really think that it is so naive. But the sad part is there are people who really put in the money right on the spot, you know, to those guys. So those are real upright scams, really doing a lot of scammy work. But I saw their contract, you know, the offline contract. It is very much foolproof, because whatever that they are paying, they actually get a certain goods in return, which is the shitty NFT, right? So that's another story. But I want to talk to Richard about this. You know, when you talk about the multiple chain and so forth, you can just replicate that. But if you are holding on to maybe a punk, for example, right? I agree with you about the copyrights and so forth and so on. But having it copied on another chain, on another string of data, or another string of hash that's being tagged to it, it does not mean that they are the original one, right? So
well, it might not even be. I mean, like, so this in the event, so the scammy stuff that is really full counterparty risk, where some guy controls a server and you beg him to like not change the JPEG. If they support the new chain, cool, you got stuff for free on a new chain. If they don't support the new chain, you don't. The real ones, like the IPFS ones that are more trustless, if the data on the chain is what mattered and the chain state was literally bit for bit copied, then, you know, now the question is an issue of liquidity. It's an issue of what is the market for you know, like, and we've seen this before. Like, we've seen forks that didn't go well. We've seen forks that did go well. It's really a function of, like, I think if people are tired of getting ripped off by Ethereum, if Ethereum fees go really high, I think that the ones on the alternate chain would be more valuable. But if Ethereum is very cheap, they might not be as valuable, you know? And there's a lot of middlemen. They're like for instance, Compound, right? Like, who runs their servers? Is there going to be a Compound pointed to the contracts on Pulse Chain? I don't know that they're building that out, right? Like, there's a lot of fake DeFi where you have to beg someone to do something, or else the stuff doesn't work anymore. You can't copy paste the community. So
to play devil's advocate though, and again, I'm more about the alternative applications. That's like what actually gets me excited, and the gaming aspect of it as well. So like actually Counter-Strike skins, even though this sounds like pretty stupid, like that's the type of stuff I'm interested in. But don't people buy expensive art to collect? Like that's the alternative side that I want to actually bring to the table here.
Yeah, so Richard, like you've a few years ago started buying a lot of luxury clothes and stuff, changed your whole style because of the benefits of signaling, and you know, signaling has benefits as well as downside. So the same you can have the same thing in the virtual world, even though that application.
He's reconnecting. Hold up, he's reconnecting. Richard, did you?
Sure, people buy expensive art, but it's a lot harder to replicate it because you can't go back in time. So like, if a guy made art and then died, he can't go make more art. It's very hard to replicate it. But like, when you have procedurally generated, pixelated, low resolution art that's only stored digitally and people can literally copy paste it, that's like maximum the opposite of like physical painting. Go try and find someone that can actually paint you a copy of it. It's like, it's a lot harder, you know?
No, but it's easier to check if something was, if something's original on the blockchain rather than having a piece of art and having to take it to an expert that has to review it and see if it's a legitimate one. And there's been stories of even experts that are meant to look at whether art is legitimate or not made errors. Where the blockchain, it's much easier to check something's legitimate. Now, if you're looking at whether a blockchain exists a decade from now, ETH is ETH from a decade from now, and the risk that poses and you can create it on ETH, that's a different discussion. But theoretically, it has the same benefits as physical collectibles, physical flexing in the physical world. Would you agree?
No, people. There's a certain qualia of experience in the physical world that you just can't replicate digitally. It's just, you've got two eyes, and your eyes can actually see depth, right? But we try and replicate that with 3D technology and televisions, and it failed terribly. They tried to shove 3D down your throat for 10 years. They gave up. So now if you go to buy television, it doesn't even support 3D because it sucked so bad. And so that's one example of the real world just always beating the virtual world. And, another example is smell, temperature, touch. So things that you can like physically interact with. And when you move your head around, they change. It's a lot different. And to tell you the truth, it's better. So I'm going to open something up in the real world. I haven't decided yet. Something outrageous because I've done the digital thing pretty hard for a while now.
I want to quickly intro.
Hold on.
I want to quickly intro two more speakers. I want to intro Irina, who's a crypto lawyer. Irina, are you with us?
Yes. Hi, guys. I am with you, and I'm really enjoying this argument. Richard is absolutely fantastic. There's so much I don't agree with him, and there's so much I agree with him. So, wonderful having Richard here. Definitely adding spice to the conversation, and I agree with Ryan. Let's keep the swearing a little bit down because we've got communities from all over the world listening, and to a US community it might be okay, but I'm from the Middle East and we don't like swearing. It's really, haram.
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 KK,
make sure you mute your mic, KK, when you're not speaking because
for sure. So
and you want to introduce Jack as well?
Irina, we have some questions for you with regards to just regulation and what's happening in DeFi for a little bit after, especially with Celsius. You have a couple of tweets that basically spoke about. Actually, do you? I think I've mixed you up with another speaker, but I'd love to get your thoughts on that 100%. Now we're currently discussing, this is the NFT hour, so we're basically discussing the application of NFTs and whether it's just a bunch of super expensive monkeys.
Yeah, the great thing being a lawyer, I have an opinion on everything, including things I don't know much about. That's being a lawyer for you. So I'll give you an opinion on absolutely everything. So yeah, glad to be here. Thank you so much for having me.
100% perfect. And then next up, we also have Jason Falovich. Now, for those unaware, Jason actually used to run at NFT, so the actual handle, on Instagram and a bunch of other social media profiles as well. Jason, I'd love to get your idea with regards to everything that was mentioned right now, just with regards to everything that Richard mentioned and your take on NFTs as well, considering how prominent you are in the space.
Sure. Yeah, actually, I founded the brand at NFT with Mark Cuban, just for some clarity, at NFT on every platform. And the question, I actually just came on, so if you want to restate that question, because I didn't hear it. What's up, Ryan? What's up, Dave? A lot of my boys up here.
Good to be. I'll let you listen in just so you know what we're discussing. But I see Jack's got his hand up, and I want to introduce Jack as well. Jack, you've been early investing in a lot of companies, ex-Google, and the founder of Image Shack. I'd love you. You've got your hand up, so I'd love you to take the mic.
Hey guys, very good to meet you. Basically, I am an early Googler, employee number 21. Started at Google in 1999, quit Google in 2005. Been in the image space, been in the crypto space from basically way early. Mined Bitcoin when it was $3. I think I actually sold Bitcoin to Richard at 30. So thanks, Richard. And Richard, totally agree with you on the NFT question when it comes to images and how images could be replaced. One thing that we haven't really talked about is the fact that the NFT itself, being on chain, can be used for the purposes of the gamification and what I would call a human API to the blockchain. So specifically for score keeping, a lot of NFT projects by themselves don't mean much if you're just selling and trading the pictures themselves. However, a lot of interesting NFT projects have roadmaps that can create all kinds of interesting storylines. Basically, you can fuse NFTs together, you can advance levels, you can mint more ERC tokens, ERC20 tokens by holding NFTs, then use those tokens to basically advance across the leaderboard, so on and so forth. So the way that I see the NFT space is actually a gamification layer that is on chain and can keep the score kind of like an undisputable representation of what your level is across the NFT roadmap. And pictures themselves don't mean much; they're just symbols how people can advance across the storyline. And that's what's really, really, really interesting to me, is because this is the first time it's not really about pumping and dumping of some sort of ERC20 token, but rather participating in a sort of a storyline that creative teams can imagine. So that's kind of like what we haven't talked about, but I see a lot of interesting projects out there that actually have the storylines that people can follow. So
it's all fun and games until your blockchain fills up, and then you're like, God, I wish we were centralized so we didn't have to pay $50 to mint something.
Yeah, but that's a separate question. Like, for example, blockchain is a new technology. Solana can go down, fees can go up, and so on and so forth. It's all the cost of playing, like, so to speak. Actually, I feel like
I like how you said Solana could go down, but you meant to say Solana's price could go down.
I think everything can go down price-wise and technology-wise. But speaking of, let's imagine the perfect world where blockchain actually stays on and it's proof of stake. We don't pay a lot of fees. At the end, one of the interesting ways to start on blockchain for the regular normies, I would say, is to basically participate in play to earn. And NFT roadmaps is basically what it is. It's play to earn. Again, you can start on level 1, you can collect some NFTs, then based on certain action within that gamified universe, you can fuse them together, end up with some sort of level 2, level 3, and eventually get to level 10. That is a representation of your effort of, it could be your collection effort, could be some sort of an action. But anyway, so the way I call it is a human API in the blockchain, where those humans that play, they don't really understand what they're doing, but yet they have the full ownership of their storyline.
So guys, just quickly, KK, I was just muted. Can you hear me?
Yeah, I can hear you loud and clear. I think Ryan has his hand up.
Yeah, I'm going to give the mic to Ryan and Evan as well, Evan Var. But before I do, we're gonna be bringing people on and off the stage, just because we've got the Solana creator of Solana NFTs. He works at Solana Labs. He's gonna be coming in as a speaker as well. It'd be good to get his perspective. So as we bring him up, we're gonna be cycling through the panelists as well, because we have a limit on Twitter. So Romy told me to inform everyone. But yeah, Ryan and Evan Var, please unmute whenever you like.
Hello. There's some interesting tech that I think it's important for people to know about when we think about long-term storage, and the cost of the blockchain. And I agree, it's very important to think about where these assets are actually stored, and are they controlled by an entity that can change that. One technology that I'm particularly interested in, I don't have any financial stake in it, is Arweave. So Arweave is a fascinating solution to storing assets for long term. So for instance, a typical 10,000K PFP collection, which I want to remind everybody is not what NFTs are. Like, that's just a very, very, very small subset of what they are, could be. But if they want to store all 10,000 of those, they typically are about 7 kilobytes each. It would, for 200 years of storage, it's 23 cents for the project to do that. So I think there's an answer now, which is good. Folks can use technology like Arweave, which has built sustainable long-term foundations to fund future storage. And for 23 cents, a project could, protect those assets for 200 years. So it's just, as we have these conversations, I think it's important that people know about those technologies and they do exist. Does that solve all the problems? No, but it is. It's good to understand that.
Agamva, feel free to unmute, man.
Totally agree, Ryan. Hey, Mario. So yeah, I mean, on a high level, we need to also, keep in mind that there's an entire generation currently that's being trained on, around blockchain technology. The 15-year-olds, the 18-year-olds right now, the new generation that's growing up playing Roblox, right? And all these other games. I grew up playing World of Warcraft and Call of Duty and Counter-Strike. And if we realize how far we've come so far with blockchain technology within just technically around 10 years or so, it's just mind-blowing. It's the fastest growing technology if you think about it, right? And my take is that, Richard, I agree with some of the things that you've mentioned, but then, if you take a step back and realize how early we are, and that currently these solutions are currently being built by builders, right? By us being so early in the space and using our brain on figure out solutions. This is, this is something that excites me on a personal level because, of course, blockchain is not perfect. What is though, right? And when it comes down to, someone shared an example earlier, like sharing your Counter-Strike or Call of Duty skin. Of course, that's going to happen. That's what everyone expects in the gaming community to happen, or the majority, not everyone, right? But you have to take a step back and realize if you kind of realize the progress that we've had this past couple of years with NFTs and the doors that are currently being opened to builders and brands and individuals and communities. This is the exciting part. It's not just trading JPEGs, but the fact that people are trading moonbirds and bored apes and, like clones, that's something that basically requires validation, and blockchain offers that. Before blockchain, that wasn't possible on a digital level, right? But now it's the beginning of how things are going to take shape within the next 5, 10, 20 years. And we're so early. So I agree, it's not perfect. But on the other hand, I don't see like generated art or NFTs in general going away. I think that the more people use blockchain technology, generated art is going to be like a smaller and a smaller, and art in general and JPEGs is going to be a smaller percentage, but that's going to keep growing. And especially once we see more, elements and assets coming in from the tech side, such as music and SBTs and, titles later on, and pretty much everything around it, right?
Yeah, so we've got. By the way,
So hold up, just to
Go ahead.
understand what Evan is saying. Evan, you're saying that the speculation aspect of it is bound to decrease in the upcoming years, and the utility aspect of NFTs is bound to go up. Is that your point? Because you cut out towards the end.
Yeah, sorry about that. Yes, absolutely. I'm going to give you one quick example. You have to also understand that there are new economies being built. Right?
Sorry to cut you off, but I just want to add one more thing towards your points. Richard is saying that the technology is flawed, so like I can't debate that.
He didn't say that. He said that the applications of technology now are flawed, but the technology itself has a lot of utilities, and we agreed on some of those utilities. Digital identity, digital medical records. We're invested in both companies doing both of these things. Right. Those are applications that make sense. Just the PFP aspect, Richard had valid concerns with.
So I think art's great. I think PFPs are great. Just don't ever pay for them. It's like it's fine. It's fun, but just
you
don't
pay for watch though. You pay for watch though, right?
IRL. He means don't.
I mean, so if you believe in the Lindy effect, the longer thing has been around. Yeah, but like try and go make a watch and see I've got $9 million of Rolexes, but I can tell you that it would be very hard for me to go start my own Rolex company, if not impossible. It would take me probably 8 years to try and ever get to their spec, but I could get to make an NFT next week.
Yeah, but you can also create a website next week, but it won't be Amazon. So I think the ease of creating NFTs doesn't diminish their value, just makes it easier to scam people with NFTs. At least that's my take of it. But I agree with. Go ahead.
No, I just want to add one more point, right? Like the economies and the ecosystem side of things, right? Like when I bought my clone, and then Nike around February airdropped me $20,000 worth of NFTs with the monolith for all the NFT enthusiasts that are here today. That was like something new, and that's gonna keep growing because we enter a phase right now with blockchain tech and NFTs in which you don't just buy, for instance, a Burberry t-shirt for $1,000 and that's pretty much it. You throw it away after a few years. You basically buy a digital asset that basically retains its value for as long as demand and supply makes sense. And then at the same time, those brands, those big players in the space that are coming in right now, reward you for your loyalty, reward you for being part of a community and for supporting that brand. So, that's just a small segment of NFT tech in general, right? But if you consider that and how this is going to change the game across multiple markets, that itself is astonishing, right? So you can't just say that NFTs are not going to make it because of the technology. Of course, the technology is not perfect, but do you realize how early we are? It's like saying back in 1925 that cars are not going to make it because too many people die, from car crashes.
We're in the beginning. I actually tweeted that today, Evan. Sorry to interrupt you, but we're in the beginning of the bottom of the first inning of NFTs, in my opinion. So go on. I just want to jump in because I do fully 100% unequivocally agree with you there. I didn't. Yeah.
So Mario, I need to go to a meeting, and so I've got to bounce. But I'm getting accused right now of not defending NFTs and sort of choking during this argument. And the truth is, I'm not going to get baited into an argument by somebody who's uses crass arguments and is a zealot. So that's just where I stand. I don't think it's professional. I don't think it's good for the space. And I've got better things to do. So take care, everybody.
I appreciate it, Ryan. Thanks for being here, man.
I agree with him. The refuge of the person that lost the argument is ad hominems. But the funny part is he's doing the ad hominems.
No, so I want to agree with so Ryan's point that he's made throughout the argument, for anyone listening as well, is not defending NFTs. I don't think was the case. I think we all concluded that NFTs have utility. There's flaws in the current model. I think Richard pointed out to the pricing and the valuation and people getting dumped on being one of the main flaws, which is understandable so early in the technology. We understand there's a lot of applications. We all agree on the applications of NFTs. We also agree that we're far from perfection. Now, obviously, Richard's way of making the points was a bit crass in the beginning, and it's tough. Even I was caught with I didn't know how to handle it initially, so I don't blame Brian for being caught off guard. And I think, Richard, you agree with me that you could come in pretty abrupt at times.
So, Mario, what did I miss here, bro?
I don't know. I'm listening. I'm trying to be respectful here, but we're not talking about IPFS and on-chain, and we're definitely not talking about on-chain correctly when it comes to NFTs. So it's just doing a disservice to the technology at hand. So.
But now's your chance to educate, bro. You're on the call. Just if something's not being presented accurately, fix it.
Richard, but I'm listening to you, and I'm just listening to you the entire time. I'm just trying to gauge why you have this hatred towards. Yeah, fuck JPEGs. Okay, fine. You want to go ahead and throw JPEGs to the corner, but let's talk about what NFTs are going to do. Let's take Alfa Romeo, for example, embedding NFTs into all their 2023 vehicles. How that's going to change the game completely. We haven't touched on that, and we're just talking about the 10,000.
I'm ready to touch on that. Please tell me more about that.
Hold on. I'm not finished. I mean, you're cutting me off. I didn't cut you off.
I said, please tell me more. That's the opposite of cutting you off. I wanted you to talk more.
You are cutting me off, but it's okay, Rich.
You talk more.
Okay, it's okay. I get it.
Go ahead.
You want to sound loud, but at the end of the day, let's talk about on-chain. Let's talk about the embedment of. We'll use the example of Alfa Romeo going ahead and putting it into their vehicles, which will allow the vehicles to go ahead and appreciate. We'll have service records that are on point, unlike Carfax, which if you use Carfax, you can go ahead and do shit to where you can erase things that have happened on Carfax, and that's been stated on multiple platforms. Multiple news companies have reported on that, and you're just touching on the 10,000 PFPs that are made on Fiverr and sold and most likely go dead. But let's talk about, I'm willing to go ahead and talk to you about on-chain NFTs. We can touch upon on-chain monkeys that literally came out with the first, I would say the first that I ever heard of, the first on-chain product out of all the garbage that has been put out here into the NFT space.
I just feel like everybody is making money on the pictures, but then saying like it's all about the tech, bro, and then dumping on everybody's heads like.
But hold on,
like nobody's using it though.
But Richard, who puts value on things?
I guess like the market.
Yeah, so you put value on the like you wear all these expensive clothes, right? So you feel that those Gucci suits cost $10,000, $40,000, $50,000, correct?
Yeah, like usually 10, I guess, like 5 to 10, sure.
Okay, so you say like that. I saw you in that green outfit. That I don't know how much it costs. I'm just gonna give a round number of $20,000 out there. Some people feel like JF here has that golden ape. He feels like, hey, it's worth $2.6 million, and so do 20,000 other people. They see it and they say,
I think
yeah,
it's worth more,
it is worth
but you know, that's not the argument here. I think it's worth more, David.
Here's what I don't understand. Here's what I don't understand. You're trying to have your cake and eat it too. You're trying to have your cake.
So what I'm saying to you is, you're trying to tell us that it all should be free. It's all overpriced, but ultimately the people put value on shit. I think Yeezys are overpriced. I think half the stuff that you wear is overpriced. It shouldn't be $40,000, $50,000. Like, what makes it that price?
Actually, I agree with this. So, Richard, would you say punks, let's say crypto punks, are they overpriced right now at a minimum price of $80,000 for one of those?
Yeah, yes, I think they are. So, like,
why?
So I'm gonna explain it. If my friend can stop revving the engine a little bit, bro. So, like, we're on a Lamborghini ride. So basically, like, we've got 3 issues here. Okay, issue
Did you
1.
Say you're on a Lamborghini ride, Richard?
Yeah, I'm on a Lambo. So, like,
that's very humble. I'm joking.
Well, yeah, I mean, it's funny. He's got it in quiet mode. So, like, issue 1 is counterparty risk. Everybody loses with counterparty risk. So if every NFT project could switch to IPFS instead of the counterparty risk stuff, that'd be better for everybody. So that's progress that we can all agree on, right? We don't want people getting ripped off. There's no reason for people to get exit scammed or hacked or whatever. And you reduce attack surface when you use IPFS instead of centralized servers. So I think we can all agree on that, and that's just a huge win for the call. The second issue is price. And I know you guys care about price because you had a segment earlier in the show where you talked about the Bitcoin price.
Richard, it's not true. It's not true. You know what I care about? When I have this Bored Ape, do you know why I have the Bored Ape? It's because I can go ahead and network with people that potentially maybe I can't even reach. And you know what? The Bored Ape events allow me to go ahead and get into these events and talk about the things that I want to go ahead and do. And maybe, just maybe, I can go ahead and level up my company to the next level. That's why I have a Bored Ape. And you know what? The price, if it costs 150 ETH, it was well worth it because I've doubled that by being able to network at these events. Take Ape Fest. When Ape Fest was at NFT NYC, well, you can only get into Ape Fest if you had a mutant or Bored Ape, and here you go. You get in. You know, some people obviously went there to see Eminem and Snoop Dogg rock the mic. That's great. Others went there to go ahead and network and maybe potentially meet Guy, who I think is, you know, as a project manager, phenomenal. How would you be able to meet Guy? You wouldn't be able to meet him without a Bored Ape or a mutant ape. But if you had one, you got to meet him one and got to go ahead and pick his brain for 5 minutes. That in itself, that 5 minutes can possibly change somebody else's life. It's the same thing what Gary Vee does to be friends.
So, Richard, I wanted to make that same point, Richard. Like, and another point is always the signaling. So I have a CryptoPunk as a profile picture, the same way you have beautiful Gucci clothes. And to be honest, you know, I started wearing branded clothes a few weeks ago, even though I hated the concept. I used to look for homeless every day, just because signaling did have an impact. Someone convinced me, Mario, when you're in meetings, it does actually play a role. So I have a CryptoPunk photo for that purpose. Why else do I have it? Why else do I have a verified CryptoPunk photo? I don't think it looks nice. I think it looks goofy. I don't like the thing on his head. But I have it just to signal to people like, hey, I'm not bullshitting. I did make some money and I believe in crypto. That's another signal. It's not just money. Do you believe that's not worth? So if you don't think that's worth 80K, and I don't want to seem confrontational, just really explore how you're thinking.
I'm like the world's grand champion of overpaying for shit for flex value. I got 9 million in watches, 3 million in cars, the world's largest diamond, which I paid 4.2 million for. I'm the fucking grand champion of overpaying for shit for flex value. But I like my shit to go
Not
up.
gonna lie, Richard. I'd rather buy a $4.2 million gold ape than a $4.2 million diamond. And maybe
100%.
Maybe I'm crazy.
100%.
I generally get way more value.
Yeah, but like I got like
2.0
100 articles in the mainstream press out of that. Like it was worth.
I mean,
so Richard, you just made
gold
my point. So like you went ahead.
Yeah,
and
because I agree with that point. Yeah, I'm making your point because I agree with it. Like, yes, flexing retarded shit does get pressed.
I actually turned down $4.5 million for my gold ape. That's how much value I put in it. Because this is my digital footprint. This is my digital profile. What the fuck am I gonna do with a diamond other than say I own that diamond?
First of all, I'm gonna say this: you own a Bored Ape. You don't. If you have a Bored Ape or you have a CryptoPunk, you don't need a blue check mark, especially in Web3 anymore. Like you have one of these things in your PFPs and you've verified it, you don't need the blue check mark. It's worthless. That's Web2 shit. Web3 shit. You got the top tier NFTs. You are now in the game. You are now able to access all the big time players from Web2 who are translating over here into Web3 into ours.
Are those Crypto Kitty guys in this? Did the Crypto Kitty guys get back up, or did they stay down, or like are they flexing like the ape guys, or I don't know. I don't know the prices on those.
No,
but it's not even that.
I would say
Go ahead,
I would say Crypto Kitties though are different because Crypto Kitties are not limited to a certain number of PFPs, so they weren't designed. That's why the price went down. So it's a fundamentally different tech to punks and apes because you can't have more than 10,000 punks.
By the way, aren't you able to just copy someone else's NFT, get the hexagon on Twitter, and that's it? You just own a CryptoPunk and you don't need the blue verification.
That's called fraud.
But it doesn't exist on the blockchain if you do that. Like it isn't the original doesn't exist.
Your Twitter can't verify that it's original, and then it does the opposite.
Yeah, but can somebody like legally enforce this? Seriously, like out of curiosity.
Legally enforcing using someone else's punk or ape?
Can I ask you guys an actual question?
Legally enforce you using somebody else's punk as a profile picture.
You can. Yeah.
So the most popular NFT is the ape stuff, right? I think.
Yeah, apes and punks. The words are
do they use IPFS or is it all just counterparty risk?
Edward, do you want to take that one? You've got your hand up.
Well, I didn't want to take that one, but I wanted to come in and first of all say hello and how's everybody doing? I'm Eddie. I work with Solana Labs and the top 20 or so NFT projects. I come from DeFi and I love everything, all of this. I don't have a particular stance on either side, but I wanted to have a conversation with Richard because like everyone keeps arguing with him and just like defending their bags. I actually want to talk to him about the application of some of the tech that these NFTs have and the stuff that I've actually been building and the stuff that's working and that's there. So what's up, Richard? Congratulations on Hex.
Thanks, man.
It's been referenced
by the way,
in a ton of my
I'll give you the mic.
Go ahead.
Quickly, Richard, I want to ask you a question just very quickly. Yeah, so CryptoPunks was not on-chain. So I'll answer that question before we move on. Wasn't on-chain initially, but now is on-chain. So they're on the Ethereum blockchain and apes as well. But yeah, go ahead, Edward. Sorry to interrupt, man.
No, you're good, brother. How's everyone doing? Good morning.
Good, man.
Morning.
Thanks for being here.
So, I mean, I just wanted to talk about just some of the things that I've been personally working on with my bare hands with NFTs and how I think that it benefits everyone in here. So I was a little taken back and confused with your lack of support for NFTs, given how big you are in the space. And that's fine. You know what I mean? It's cool. Maybe you don't know about some of this shit that's going on. So I just want to tell you about it and, give me your opinion on it. There's a lot of people that are in this space where NFTs came second. A lot of us are DeFi guys, Bitcoin guys, Bitcoin maxis, and I support all of that. I think Bitcoin's the future. I think it's fucking awesome. And I think NFTs kind of came second, right? But now what's happening with Solana and the amount of active wallets is that NFTs are becoming a point of entry where like my aunt or uncle, I just tested this with them. We released this tech at NFT NYC. We have something called Cupcake. All your cell phones have all NFC readers inside them, right? So imagine going up to something, tapping on the sticker, whether it's a painting, a skateboard, a concert ticket, a vinyl record, whatever it is. And within 30 seconds and 2 clicks, you have a custodial wallet that your cell phone number owns and an NFT in that wallet without having a fiat on-ramp, without having to convert a whole bunch of tokens to USDT, USDC, understanding that nonsense, waiting for 7 days for Coinbase to say you can have your money and all that shit. So I think it's like really special to have some things like this as a point of entry. Like how are they going to buy Hex if they're afraid of crypto? But they're willing to tap their phone on something and have a decent experience, and come in that way. So that's like one way.
I agree with on-ramps, bro.
Yeah.
I think on-ramps are great. So from the on-ramp perspective, I just want to see people take minimal. So like the networking angle is great. I just wish it costs less. The on-ramps is great. I just hope that they're low fees. Like you guys got to remember, crypto was invented to get rid of middlemen and increase efficiency. And so like I see tokens that perform taxing on a transfer, and that's literally maximum fee instead of minimum fee. And that's the opposite of why crypto is invented. Or I see counterparty risk. It's the opposite of why crypto is invented. So things that help on-ramp users, hopefully with minimal risk, things that don't have admin keys, things that don't have counterparty risk. I like a lot of this stuff. So, and look, I got in at Bitcoin mining at 50 cents, bought it at 30, jumped right down to 2, held it down 93%. So my first experience with Bitcoin was the bubble, but it worked out in the end, right? So like, even though I got in through a kind of sucky way, it worked out in the end. So I like some of these points you guys are making.
I got a question, Richard, about your diamonds. I think it's pretty cool you own that. No disrespect at all. So with the transparency of NFTs and everything on the blockchain, like I know what my gold apes are worth based on rarity and such. How do you know you actually own the largest diamond in the world? Like, there could be someone that just doesn't give a fuck to flaunt that, or they want the clout that's sitting with a diamond.
Yeah, it's true. There could be a bigger one somewhere else for sure. And you know what? You guys are going to be able to help verify more because I'm going to make an NFT out of that shit. Even though I tell people, look, don't overpay. If they won't take my advice, I'm going to offer you the world's biggest diamond NFT. I think I'll have 5,555 copies because 10,000 worked out for the apes guys. I think that's their supply. I'm going to jump in the game, but I don't know.
Well, Richard,
all right. So what's the tangible asset?
I just want to make sure Richard. Sorry about that, David. I just want to make sure that it's not all just like a freaking big nonsensical thing. Like I've literally met tens of thousands of people like in real life. I met with Gucci yesterday. Like we're talking about authenticating their fucking merchandise using some of this tech. So I mean, I just want you to kind of have an open.
Bro, I buy Prada shit. Hey, listen, for real, I buy so much money in Prada shit, it's retarded. And some of my items come with a blockchain certificate that I don't know how the fuck it works, but apparently I can go look up my shit's authentic on a blockchain somehow. And everything I buy comes with some RFID shit too that apparently somehow I can verify my shit's authentic. But here's the funny part. I don't know how to fucking do it. And I'm not sure it can even be done, to tell you the truth, because they advertise it, they hype it. But then when you go to like actually check it, it's just like a blockchain. Some guy was telling me, hey, man, I'm running my own node. I'm so hardcore. It's going to take 33 hours to download it. And I fuck with it. I'm like, hey, I'm sorry for the cursing. I tell him, listen, man, how do you know you didn't download a fake client? And he goes, oh, I verified the SHA-256 and the PGP. First, I know you didn't. You lying, okay? But second, how do you know that those two numbers you're verifying against ain't fake? And he eventually has to get it into his head that it's all social verification. That's how you know anything is real, is from the social aspect. Because like you could be talking to a parallel Eclipse network. You could be talking to, scamware. Like who here actually compiled their own client? How do you know whatever wallet you're using doesn't just send a copy to the devs of your keys? You don't. Nobody in here is complying with their own wallet. It's not happening. Who's generating their seed words in a Tempest cage to prevent, of your seeds through EMF radiation? Nobody is. Like we're all taking some shortcuts, reasonable shortcuts, I hope, to like have some convenience with this stuff. But in the end, like it all comes down to trust. Like in an industry built to remove trust, there's still a lot of trust.
I think you talk a lot about flexing. Flexing your diamond, flexing your world class Rolex collection. I mean, listen, it's dope. You're driving a Lambo, dope. That's you need money to do that shit. Cool. I mean, from NFT perspective, I gotta be honest. Like, I can buy fucking NFT, and yesterday I sold a CryptoPunk, and Bill Murray bought it. That's for me. That's pretty fucking dope. Like, I can't really speak like that outside of chain because I wouldn't probably know what Bill Murray bought of mine or what he's purchasing, right? So, there's an element beyond just this is a piece of, it's a JPEG for whatever purpose it is. Bill fucking Murray, one of the legends of the industry, came of entertainment, came into our space and bought a CryptoPunk for me. There's something to be said.
That is cool. I like it.
Actually, John, I know you got your hand up.
I hope he makes money on it.
And then David.
Yeah, sure. I actually I love Richard. I listen to him on a few podcasts. So, but I would be curious if there would be anything that would get you into NFTs because you just are so against them, and I'm just curious what would get you your foot in the door for that.
No, for real. I'm going to
Richard,
launch a 5,555 copy NFT version of the world's largest diamond, which used to be called the Enigma. It's since been renamed the Hex.com diamond. I'm going to do that. I mean, it's easy. I just have to choose. I'm going to basically, I don't know if I want to give away. I guess I could give it away because I still have the biggest diamond. So I'm going to take a picture of each of the 55 facets. So this world's biggest diamond is 555.55 carats, and it's cut to have 55 facets. And so I'm going to take a picture from every one of the 55 facets to make each NFT slightly unique. And then I'm going to customize the backdrop of what they're in front of, license or have created some type of kick-ass media. And I don't know whether I'm going to regionalize it because it works so well with rap songs. I'm probably going to make it regional. And so you'll have like your version of a different angle of the diamond, a picture of it, and then regionalized backdrops. And I think that would be fire. I think that would, as far as NFT stuff goes, I think that would hit pretty hard. But then I hope people don't overpay. But look, markets, as you guys all said, the market set the price, and people treat this stuff like pseudo gambling, and so the prices can get pretty silly.
So what would be the price that you would open at then?
I had never even thought about that, dude. I didn't even know that was a choice I had to make. I never got that far into the thinking.
So you could do a free mint, or you can go ahead and start off at some, it's 0.1. I don't know what platform you.
I think maybe a reverse auction would work pretty good. I think a reverse auction would be a good idea.
But what do you think your NFTs would be worth, though?
I have literally no idea. I mean, I've savaged the NFT community a lot, but I'm also trying to save you guys with gas fees with Pulse Chain. So it's hard to say, man. It's like 50-50. Half hate, half like, I don't know.
Richard,
no, but it's like if I paid like
$10,000
for it, is that
I
overpaying?
can't tell if you're kidding or if you're really going to do this, but either way, this has been entertaining. I just want to throw one more point out there, and then you guys can continue to argue with each other. It's just amazing.
I don't think it's an argument. I think it's just a passionate debate.
Yeah, I just don't. I don't know. It's just goofy. I just wanted to share one part that was like fucking fascinating for me about NFTs and application, because that's what I care about. I have to be a megaphone for these devs and these tech nerds that don't know how to, share what their technology is to the real world and reach the masses. And I've done this with Lyft, with Postmates. I have a decent track record. But I was taking a walk with my favorite Ponzi app, STEPN, and I was earning tokens walking down the street. And I saw this lady who came up to me at the end of the beach, and she was like, "Yo, are you on your STEPN walk?" She was like my mom's age, right? And I was like, "What?" I was like, "Yeah, I am." I'm like, "Isn't Solana awesome?" And this lady had no clue what Solana was. She had no idea that she was using crypto. She had no idea she was on chain. This woman fiat on-ramp money, converted it in an app, transferred it from wallet to wallet, purchased an NFT, walked with the NFT, earned a DeFi shitcoin, and then transferred that to USDC and got it to her bank. And like that shit is fascinating to me. So if NFTs can help people get on chain without knowing they're on chain, then I'm fucking happy. I don't care who has a bigger diamond or a bigger ape. Like, you guys are all awesome, and I'm supportive of everyone up here. But I just think that the mass adoption is closer than we think. There's really cool tech. I literally met with the CEO of Gucci 2 days ago, and it was fascinating how interested he was in this. So yes, and what is it, Richard? I think a lot of these stuff that are on your Versace suits and shit, a lot of these guys jumped in early and threw RFIDs on their shit and didn't have a clear path of anything. But that's my job to come and fix that. I'm going to do a damn good job at it. I haven't failed at much yet. So I just wanted to come up here and share that I see the mass adoption happening. I'm really excited about it. I love Bitcoin maxis. I love Solana. I love ETH. I love all of it. And I think all you guys are great. Just wanted to come in, share my sense and a couple experiences. And I'm going to step back down so you can bring back speakers. I knew you had me on schedule, but just wanted to say hello and give love to all you guys. These spaces rock, Mario. So thank you, bro.
I appreciate it. Thanks a lot, man. Thanks a lot. We're bringing in Tony. So Richard, are you up for a debate? I've got a lot of people, and I'm sure you're going to guess, sending me messages about Hex. Do you mind if I bring someone to debate the projects that you're currently working on?
Did you guys notice that I never mentioned anything about Hex at all? Like, it just does its own thing. I never even talked about it.
You touched on it, but didn't talk about it. That's true. But are you okay if we bring someone to debate them?
Yeah, dude, I love debates. Debates are awesome.
Hey, Richard, what's the value of that diamond?
I mean, I paid 4.2 for it. I think I got a really good deal. It's, one of a kind, one in the universe kind of things, space diamond. I don't know, 20, 30 million, probably my guess. But, I think that luxury good purchases get hit really hard when the stock market dumps. So, maybe it'll be a bear market, but I bought it so good. I mean, maybe it's only 8 now, but there's no way you're going to get that for 4. Like, it's going to be impossible.
How long ago did you buy it?
I think I bought it like 6 months ago, maybe.
Oh, gotcha. Cool. I was just curious, actually.
Cool. So I'll refresh the space.
I paid crypto for it, dude. I paid for crypto.
Oh, really? All right.
Yeah, Sotheby's took crypto for the hammer price, which was 3.6 million pounds, and then they wouldn't take crypto for their money because they're scared, and you had to do a bank wire for that part.
All right, I like that. That's cool.
Cool. JF, I'm gonna refresh the room and introduce Tony to get into the debate with Richard. But everyone that's listening, I think that the space, the agenda changed pretty quickly. But I appreciate you all being here. We've got 3,200 people listening, which is a record. I didn't expect.
I mean, like it still is like NFT hour. But I mean, like the agenda, the agenda that we had like whipped up, like we wanted to discuss wash trading, NFT money laundering, etc. But I think we covered a couple of pretty valuable.
Man, I'll be honest. I'll be honest. I've been watching Richard. I've known Richard, and not personally, but I've known Richard since I got into crypto, and I've watched some of his videos, and I know he's very polarizing. And I knew that if I bring Richard, I was talking to Bob. I'm like, Bob, how do I moderate the room? Richard's coming. He's like, who's Richard? I'm like, watch this video. I'm like, Bob, what do I do? He's like, Mario, I don't know. You're on your own. So it was a tough one, but it turned out really well. But Richard, I appreciate you being here. I appreciate everyone that joined the stage so far. So before we kick off the debate, just want to tell the audience, thanks for being here. If you have questions or if you want to participate in the giveaways, we're not giving away a $4.2 million diamond, but we have $10,000 in giveaways. Make sure you click on the link in the pinned tweet and then join all the communities on Telegram, Discord. We don't shill any projects. We've never shilled a project. I'm not planning to shill any project, not even the ones we're incubating. So you can join the groups, participate, ask questions. We're reading all your questions, and we're trying to ask some of them to the panelists here as well. So click on the pinned tweet at the top of the space to join. So you have to subscribe to the newsletter, join Discord and Telegram. And make sure you share this space. And of course, if we announce your name as a winner and you're not in the space, as you know, you don't get the prize. So you have to be in the space and be listening when we call out your name. But Tony, are you here, man? Make sure you have good audio, Tony. Don't fuck it up again, please.
I swear, Tony, are you on a Nokia, bro? Like, what the fuck? How long did it take you to join?
Honestly, Twitter is about as efficient as Solana's uptime, so it's just a bit laggy on my end. Sorry about that.
Yeah, man, your I don't know if it's connection or your audio. Is it your connection or your mic?
I think it's the connection to Twitter. I keep on clicking join, but it's kept on clicking that. Hey, look,
I can hear.
You're going.
I can hear you now. It's all good now.
Yeah, okay.
It's all good now. All right, man. So you wanted to come up on stage to have a chat to Richard about certain questionable things that Richard's doing, and Richard's not an easy person to debate. He's been in this space for a long time and knows what he's talking about. But you've had the courage to come up. I'd love you to take over the mic, man. Ask any questions to Richard, and let's dig into the points that I'm sure a lot of people, including a lot of people at DM me, want us to address.
Yeah, for sure. And Richard, it's nice to meet you. You're OG in this space, followed a lot of your work. These are less questions about you yourself and more questions about just the Hex token. So nothing about you personally. But yeah, it's nice to meet you, man.
Hey, pleasure to meet you, bro.
Yeah. So these questions are mostly about Hex. Just before we go into it, I'm just going to give a quick description of Hex. Please do correct me and interrupt me if you feel like I'm misrepresented in any ways, just to kind of give everyone a bit of a backdrop on what we're speaking about. Are you okay with that?
Yeah, everything sounds good.
Yeah, so Hex is a token on ERC20 token on Ethereum. The utility of Hex is that you can stake it and earn rewards in Hex. Once you invested in some Hex, you can stake it and you can expect to earn a good API on those Hex tokens if you choose to lock it up from anywhere between 10 to 5 days. And after that, you can sell the Hex token for profit. That's what the Hex website states and is also what the token is generally used for. It claims to be a certificate of deposit, and it claims to generate an API purely through inflation. I have said nothing wrong there, correct?
I mean, you're breaking up a little bit, but it sounded pretty good. The minimum stake length is a day. The maximum is 5,555. I mean, yeah, that was probably one of the better explanations I've heard. Yeah, it sounded pretty good.
Okay, so I just want to not misrepresent your token, and I got most of this information from your website. So basically, let's start from the very beginning. The first question is does it go through the Howey test? Is it a registered security? Because I went to your website, and one large aspect of it is, hey, we're not an actual security, we're a certificate of deposit, which could be argued a bond is a part of the security listing. How do you see people that say that you're a security?
Oh, well, I'm like the grand champion of explaining this to people. So you asked the right guy. Security laws are made to protect people, and people get scammed all the time. People run away with their money. Like you just saw Celsius file Chapter 11 bankruptcy today. I warned everyone, told them to remove their money a year and a half ago, I think. Some people listened, others didn't. So what do the securities laws do to try and protect people? Well, they state that if you give money to a common pool with the expectation of profit solely from the work of others, and there's critical entrepreneurial or managerial effort, then you may have a security. And so these are the legs of the Howey test, and those last two were kind of added on, not case law legs, but just they wrote them. The regulatory agency just wrote them. They're not actually tested in case law, or they're not from case law, which would be stronger. People don't realize that, like, just because a regulator says something or writes something, it doesn't mean it's actually so. And the regulators sometimes win in court and they sometimes lose in court. And what makes things truly so in America is the judicial branch, of which the regulators are not. They're in the executive branch. And so case law and jurisprudence is really what decides. I mean, just recently, actually, the SEC got annihilated. Yeah.
Yeah. So sorry to interrupt you here.
Yeah.
But again, I do agree with what you're saying. Some of it is true, some of it is less so, in my opinion. But this is actually, the Howey test is actually not established by the regulator. The Howey test is established after R.V. Hari, which is actually American case law. And the
I know
Howey
that.
test,
I know that. I agree with that. So I'm telling you the first legs of the Howey test are from case law, but those last two that I added with critical entrepreneurial managerial effort are not. So the first part,
also critical entrepreneurial effort is no longer considered a big part of it. The Howey test only consists of 4 parts as of active enforcement, which is
I know that, but I'm adding parts outside Howey, like family likeness test. I'm going above and beyond them. I'm showing you things that the SEC has said they care about that is outside of case law. I'm being more descriptive than you required. I'll just tell you about Howey if you want, but I'm telling you that you should also care about critical entrepreneurial effort, critical managerial effort, and family likeness test, in addition to Howey. So we'll just talk about Howey, right? Because I guess I went too far.
It's easier for
it's
most
fine.
Of the
it's fine.
listeners too.
It's okay. So Howey basically is, are you putting your money in a common pool? So let's take Celsius. Did everyone's money go into a common pool? Yes. Okay. Now let's take Hex. You buy Hex. Where's your money go? It goes to someone else. It goes to someone else that had Hex. It doesn't go to some company called Hex. You bought from somebody else. Okay. And now where do your rewards come from? Did someone else give them to you? No. You mine them yourself like a Bitcoin miner. You're the only person in the entire world that can possibly mint your reward. You're the only person that has those private keys that can mint that reward. And so you, through your own computational effort and through your own work, generate your own product, something that never existed before, coins that never existed before. You mint them into existence out of your own labor. So if you look at Howey, it says expectation of profit solely from the work of others. Okay, well, who are the others doing the work? There ain't no company. It's you. You're doing the work. So since you generate your own rewards, it's the family likeness test would state that Hex is most similar to Bitcoin. The only difference is that we use Ethereum miners instead of Bitcoin miners, and we pay you to lock your coins up instead of blow up the environment with SHA-256 mining. But other than that, it's just Bitcoin, the proof of work change. And so it fails like almost it feels like all the legs of Howie because there is no central entity, there is no critical managerial effort or work. If I died and Hex.com went offline, it wouldn't matter at all. Literally, there's 10 other front ends you can use. It's totally irrelevant. Like me and Hex.com, it doesn't matter for the project at all. It launched sufficiently decentralized as well. We had multiple front ends at launch. You know, we have immutable code. So people right now, Bitcoiners attack Ethereum by saying that Ethereum is a security because there's a group of guys that decide things.
Hey,
and
Richard,
they decide, yes.
Yeah. So this part is pretty understandable, and I think everyone's pretty much caught up to this point. That's an interesting take on how you guys does not fit the Howey test, which I do respect. I want to actually focus on the Hex staking a bit. Sure. Right now, Hex is offering 40% APY. Where is that APY coming from?
Inflation.
Okay, so in your site yourself, you claim that inflation is the kind of ultimate deterrent for keeping money in the US dollar because the government is stealing from you. How is inflation making new money? And how is inflation here actually increasing the amount of money people get?
Well, it doesn't. That's not where the majority of the gains come from. So Hex's price went up 1,000,000% in under 2 years. That's 10,000x. That's before staking. So if you never staked at all and you bought January 5th of 2020 and you held to like, yes.
That's not answering the question. My question is, where is that money coming from? Let's say if I stake 100 Hex and let's assume Hex is just like $1.
Yeah, it comes from the same place it comes from in the bank, but you probably don't know how banks work. So I'm going to teach you that in a second too. So
are you guys a fractional reserve bank? I'm pretty sure on your site you specifically said you're not.
No, I'm saying that all yield comes from inflation everywhere. The stock market yield comes from inflation of the US dollar. The yield in your bank comes from inflation from the US dollar. The yield in Bitcoin for Bitcoin miners comes from inflation of Bitcoin. The yield in Hex comes from inflation of Hex. Like the yield everywhere globally is from inflation of different things.
I think you're using inflation return as two different terms, and in terms using.
Oh no. Okay, so I'll use the more specific term, monetary expansion. But now no one will understand what I'm saying. Yeah, but no one will understand what I'm saying now because they don't get that. Like they don't know the clinical technology like we do, the terminology.
So let's talk about that then, because how are you actually getting that active return? Because from
it's more similar to a stock split than it is actual. Okay, people think inflation is bad, but it's actually not. You're gonna love this one,
Richard. A stock split doesn't increase the actual value of the stock; it just makes it easy for people to buy a whole stock. My
Correct.
question again.
So let's say you owned all the Hex. You owned it all. You owned it all. And then you staked it. And you minted yourself some extra Hex coins. Now, I'm going to ask you, where did your yield come from? Because that's what you're asking me. And it's the answer is that in reality, you just minted yourself some more of what you already had. And so now it's the exact same example and the exact same solution, but you're just adding more people. It's just Bitcoin mining, dude.
So more people coming in is the way that you could earn that API. Let's say I earn 20 extra Hex, just need to sell it to new people for me to get my money.
All speculative instruments have the property that they go to zero if everyone sells and no one buys. The real estate has the property that if everyone sells at once, it goes to zero. And if new people don't buy, the prices go down. Stocks, if new people don't buy them, the prices go down. Everything, life, all human life dies if you don't keep making new kids. Like life has this parameter that you need to exceed the entropy. You have to export the entropy or you literally die to heat death of the universe. And we do export entropy.
Agree. On a massive scale, yes. And when we over exaggerate everything, yes. But my question is actually right there on the bubble there. It is basically the whole thing of, hey,
you're trying to call it a Ponzi because prices only go up if new people enter. But unfortunately, that is everything. That is all human life. That's the stock market. That's Bitcoin. It's just Bitcoin with a proof of work change, dude.
Richard. I never claimed Ponzi. It's clear. It's interesting that you said that because I'm trying to ask you exactly what the revenue model is, and you yourself admitted that it's.
Well, there isn't a revenue model. It's like the revenue model for a baseball card. It's like what's the revenue model for a collectible?
For sure.
It's the same question. It's like,
yeah. So Richard, I'm not going to insult intelligence. You know what a commodity is, and you know how commodities are priced. How are you a better Bitcoin when the way to
less negative externalities.
And next,
we have less negative externalities,
but
and we're more secure.
But the way Bitcoin is actually minted and the way that Bitcoin is actually produced, at negative externality is what it gives its commoditative value.
No, because you could swap the proof of work. No, Bitcoin should swap its proof of work to proof of stake, save the environment, and stop dumping the price every 10 minutes. Bitcoin miners buy electricity and pollution and sell the price down. It's disgusting for everybody involved. It's horrible. We know we've got.
It's also how its price is determined. But this conversation is not about Bitcoin. It's about Hex. Let's go.
No, but Hex is just Bitcoin with a proof of work change. It's literally the most similar thing in the world to it. We just use different miners.
Well,
we use Ethereum miners instead of Bitcoin miners.
You have a constant expansion outwards. That's not.
No, but look, no. Okay, this is what everyone misunderstands. When was the best time to buy Bitcoin? When the inflation rate was the highest. And after the fucking halvening happened 4 times, it's limp now. It can't even make a new all-time high 5 years later. It's lower now 5 years later than it was 5 years ago. It used to be 20K 5 years ago. Now it's 19K. Why? Because the inflation rate's lower. Because it's too heavy now. So a high inflation rate was amazing for Bitcoin early. It was the best time to buy. Totally centralized ownership, when Satoshi owned 100% of coins, was the best time to buy. When it had no liquidity and was listed nowhere, was the best time to buy.
Yeah, look, Richard, we're not talking about Bitcoin. We're talking about Hex.
All those same things I just said hold true for Hex as well.
Yes, but Hex is only a speculative instrument as far as no value as a transfer of value, which your site itself claims.
Yes, it does. It's more secure than Bitcoin. You understand Bitcoin's had 2 critical vulnerabilities where anyone could print as many free coins as they wanted. Hex has had none. And Hex is unlikely to have any because it's more secure.
What you keep on saying is more secure, but you're still relying on the Ethereum network.
No. It's not true because they don't have the same failure mode. Ethereum is more likely to have an inflation bug than Hex is, even though Hex runs on Ethereum. Because Ethereum's consensus code is closer to the node. It's not isolated in its own smart contract. It's not modular. Bitcoin is more likely to have an inflation bug than Hex because Hex's consensus code cannot be changed. They make...
Okay, I think you're talking about security from founders instead of security.
No. I'm talking about attack surface from bugs. The majority of flaws in Bitcoin and in cryptocurrencies in general are inflation bugs. Monero has had an inflation bug. XLM has had an inflation bug. Ravencoin has had an inflation bug. Bitcoin has had an inflation bug. There's tons of inflation bugs everywhere. I'm talking about computer security.
Yeah, okay. Let's stop computer security. Let's just talk about economics. The utility of Hex is so you can stake it to get more Hex. Is that statement accurate?
Not really, no. Because that activity on its own, it allows you to delay gratification, which is the most successful investing concept that's ever existed in the history of concepts.
Yeah, that's only if you believe Hex itself is going to appreciate in value. But to do that, the only real utility of Hex is to stake it and earn more Hex.
It sounds like you're trying to disprove proof of work networks. You understand every proof of work network has this property that inflates. All proof of work networks inflate.
I'm talking about a pure utility level. Am I correct in saying that Hex itself, as the utility that most people use it for, is to stake it and then earn more Hex?
Actually, only 10% of people stake, which is why the rewards are so high. If more people stake, the rewards would be cheaper. It's only got a 3.69% inflation.
Yeah, that's actually my next question. If everyone stake Hex in a perfect world, if everyone's investing in Hex, everyone's stake Hex.
There's something super important. I have to tell you. Not all inflation is the same. If you have no negative externalities and you have no electricity bills to pay and you have no mining companies to pay, then it's just like a stock split. You're just making more tokens for yourself. If you were the only guy that held all the Hex and you minted some more tokens for yourself, that inflation literally cost you nothing. You just wrote yourself some extra tokens. The reason that people don't like inflation is because the people that get the inflation usually sell the shit out of it and hurt the price. That's why people don't like inflation, is because it gets sold.
Wait, so Richard, actually, I want to talk to you exactly on that aspect. What happens in 5 years when most of your stakers are unstaked and get their return?
It's a huge fallacy that everyone has. They think that there's some single point in the future where the behavior of the market participant changes. And the reality that we've measured is the exact opposite. When I first started bragging about how long people stake their HEX, it was like 3 years. Then it was 4 years. Then it was 5 years. Now the average stake length in HEX is 5.8 years. The stake length keeps going up. New wallets keep opening. It keeps working with 100% flawless operation. So you're dreaming of a world where everyone has to end stake at the same time, but in the reality, the measurable world, everyone just keeps staking for longer.
Okay, so wait. I actually want to talk exactly there. Your point is that, hey, look, people were going to keep staking for longer, and this is going to keep going. Is that not exactly what Bernie Madoff told to his investors?
I don't know. He never scammed me. I'm not sure exactly how I'm not sure what his sales pitch was. I don't think his sales pitch was that. No, I think we're the opposite of Bernie Madoff. So basically, like your question is like, this is similar to like you asking what happens if everyone sells other Bitcoin at once, or what if no one buys Bitcoin anymore? It's a silly question.
I think you're trying to isolate yourself, and this is a great debate tactic that personally I use a lot. Is you're trying to isolate yourself from the question instead of talking about HEX. You're attacking Bitcoin's weak aspects to get aspects of Bitcoin.
They're not weak aspects. Listen. My stake length keeps going up, but you're trying to tell me like it sucks somehow. Like no, it's perfect. It's what we want.
No, I'm not saying it sucks. My question is when it comes to HEX. The utility of HEX is you can stake it to earn more. This is straight from your website. And your website has a literal page to describe exactly how it's going to do so, to ask people, say, hey, look, please invest in this, put your money in this, put out like 100 in it to try. It is a risky asset. Your website creates all of those things to specifically say that these are going to be risky assets.
It's just funny that you focus on the 40% yield when the actual yield was 1,000,000%. I think that's hilarious. Your orders of magnitude focused on the wrong thing, but you don't understand that. The vast majority of the gains in HEX are USD price appreciation, not staking. And only 10% of people stake, but you keep talking about staking all the time. It's crazy.
Look, we're talking about the staking aspect because when you tell everyone that there's a 40% APY, what I know after if everyone 100% people do stake, that's only 3%. That's
no, but the actual APY is thousands of times higher. But I'm just afraid to tell them the truth because it'll scare them.
I think you're also misappropriating because the way you got to that APY, and Richard, I'm just being very honest here, it's by other people coming in, believing in exactly what you just said, saying, hey, look, if I lock up my money, it's already did a 20x, it might do 20 more, it might do 20x, it might do 20 more, which constant new investor money coming in, that's
I am the #1 champion of warning people about volatility in crypto. My website says that crypto drops 85 or 95% all the time. My website, this stuff might stop working and go to 0, and you'll be very lucky that it works at all. Like go click the disclaimer on my website, or go click how it works. I'm like I'm the most truthful guy about how risky blockchains are and how when Bitcoin.org gets hacked and it has a scam on the front, Satoshi doesn't do a live stream to save Bitcoiners, but I do. Well, I'm the #1 guy out there trying to prevent people from. It's weird that is the guy that created a yield generating product with no counterparty risk. You hold your own keys. That in a reality where everyone just got bankrupted and lost billions and billions and billions of dollars, I'm getting attacked when I literally built the solution. That's crazy to me.
I'm not attacking you, Richard. And my question is very simple because, again, at the end of the day, this is how the calculus works, right? Let's take it on a very micro scale so we can kind of show all the audience, it's making it way easier to understand. Let's say you and I, Richard, you and I, both have HEX. You're the creator, so you hold currently, I think, 50% of the sacrifice. Let's say you hold 5% of the HEX, and I hold another 0.2% of HEX. Both of us stake. And both of us stake for the same amount of time. We're both expecting us to gain more HEX. And the way that we're doing that is by staking. And the way we think that more HEX is going to be valuable is through previous price appreciation. So the way that we're actually going to have our exit liquidity is coming in from new money, new people investing and believing the same thing we are. How is that not a not fair statement? Like I said, and
no, but I don't understand. So you're framing. No, but you're describing a free market, but then framing it as though it is evil, and I don't understand that. So yes, the market decides.
A free market has exchange value. A free market has exchange of value. I'm saying that on this specific asset, where is that actual value add, and where is that basic value line?
Right. Okay. Okay. Do you care about security?
Yes, I do.
Yes, you do. Yes. Do you understand that Hex is literally more secure than Bitcoin? Literally. I don't think you do.
Look,
I think you hear me saying the words, but I don't think you believe me.
Look, even if I'm taking you at your best and say Bitcoin is less secure somehow, which, to be fair, I'm not a cybersecurity expert, I can't comment on that. I'm saying simply on an economics level, where is this additional money coming from? Let's say 100% Hex is
less negative externalities.
Look,
Bitcoin pays billions of dollars a year to blow up the environment, to murder its own price. Hex does not, because we piggyback Ethereum, and Ethereum's already eating that horror, so we don't have to. We pay pennies for security, what Bitcoin pays billions. It's more efficient.
Yeah, look, I'm not comparing you to Bitcoin. I'm trying to ask about Hex on a specific level here. Let's say that every single Hex is staked. Let's say every single Hex is staked.
Okay.
And 3.69% inflation happens. Who's going to buy that 3.68 inflation number? It's not going to actually mean you're getting more money. It's just you said it, stock split, right? So you're going to have 3.69% more. And my question is very simple here. Does new investors need to come and buy that 3.69% to generate you that revenue?
I muted you, Richard, just because you had background noise. Just heads up. So you got to unmute, Richard.
I'm sorry, it'll be quieter. So the reason that Bitcoin's largest gains were when its inflation rate was the highest is because it was easier to on-ramp new users then, because the ratio of new users to old users was multiply. And everyone looks at the demand, everyone looks at the supply side of inflation, but they don't look at the demand side of on-ramping new users. And that is what supply and demand in a speculative instrument is about. We know what the supply increase is because it's mathematically hard-coded within social consensus that Bitcoin is now about, half, it's like 0.79 or something. And then Hex is 3.69. But in Hex, it's delayed so far into the future because you only get paid at the end of your stake, and the average stake is 5.8 years, that it may be more than 0.74%. I'd have to do the math on it. And then furthermore, the Bitcoin inflation has to get sold to pay for electricity and pollution and mining hardware, but the Hex inflation doesn't have to get sold at all. It's very similar to just giving yourself more coins because there's no negative externalities. So we have a system in Hex that has shown price performance of 10,000x in under 2 years, that against Bitcoin is up either 200, I think it's up 250x, but it might be up 750x. I'd have to check the chart. If you'd bought January 5th, 2020, it's at 100% perfect, flawless operation. It was given for free to Bitcoin holders. It's the world's first attempt at time deposits on the blockchain, which is a larger market than what Bitcoin tried to address. There's more money in time deposit. And while we do something that Bitcoin can't do, which is monetizing the time value of money, we also do payments better with cheaper fees. We also do interoperability and on-chain exchange better, which is why Hex is the #1 traded product on Uniswap, period, that's not Ethereum or a stablecoin. And it's been that way every day for like months, years. You know, I'm the guy that made Uniswap popular. I carried Uniswap on my back. I did more to promote Uniswap than Hayden Adams did.
Look, I'm not attacking you as a person. I'm simply talking about the project. Again, my question is very simple. And sorry, I cut out there for a second. So if you answer this, please tell me you did. My question isn't to compare you to anything else. I'm viewing Hex in a vacuum. Is Hex at the end of the day reliant on new investors? And if we want to talk about price action, you're down 96% as of
if you care about the price of anything, every single thing is reliant on new investors. Yes, everything. Okay, if you care about your business, it's reliant on new customers. Everything. Richard, you're framing reality as though it's I lose a point because I'm describing reality. All speculative instruments, Richard, all businesses have this property. All of them.
Exact aspect. So let's just do that exact aspect. So you believe everything would be a Ponzi scheme and a potential Ponzi scheme then? Because as you said before, and
no, you're misusing the word. That is not what a Ponzi scheme means. You're describing bubbles, but then you're saying Ponzi. You have to use strict language here. Okay. Ponzi means there's a middleman. Ponzi has a middleman that screws you and lies about what was going on. Bubbles don't have that. Okay. People can overpay for Beanie Babies. They can overpay for Bitcoin. They can overpay for Hex. Bubbles are just people used to think it was worth more. Now they think it's worth less. And by the way, that particular human thing that the humans do, it's very hard to program that out of them. It's very hard. I don't think you actually can program humans to not engage in bubble behavior. It's part of the human experience. People want it more because the price went up. So they want it more because the price went up. So they want it more because the price went up. They want to pay higher. And when it gets lower, they want to sell it because it's worth less, because like it's reflexive system. It's self-amplifying. The number goes up because it went up, and it goes down because it went down, which is why we fall out of the parabola. We go so deep, and why when we go up, we do blow-off tops. So like this, I don't understand why Bitcoin with a proof of work change somehow like is hard to understand. It's just Bitcoin with proof of work change. We pay you to lock up instead of do SHA-256 mining. We use Ethereum miners instead of Bitcoin miners. That's it. That's it. It's the end of story. It's not hard. It's easy, and it works really good.
Tony, I think dropped out again. Tony, are you there? So while waiting for Tony to join, I'm just going to mute you as well. For anyone waiting, a lot of people are DMing me to start announcing the winners. So while everyone's listening to the debate and we're trying to bring up Tony again, Tony, when you're here, just speak so I know you're back on. We'll be announcing the next winner on Telegram. So maybe even more than one winner. We'll be announcing winners on Telegram. So make sure you go click on the pinned tweet and on top of the space and join Telegram to know if you won. I'm just trying to bring up Tony. KK, can you try to bring up Tony as well? Help me out.
Yeah, I'm just trying to do that in the background.
Cool. So the first winner has just been announced, just for anyone listening. And for anyone that just joined as well, I appreciate you all being here. We've got over 3,500 people in the space, which is the biggest space that we've had. The biggest we've had before was the peak at 2,600. So I think the audience is enjoying the debate. And I really want to bring up Tony as well, because I think the point needs further, further pressing on the question you asked. But while bringing up Tony, Simon, are you with us?
Hey guys, yeah, I'm here.
Sorry, this went longer than expected. I appreciate you being here. So we're going to continue the debate in a bit, but I wanted to take a quick break to go through what happened with Celsius and they declared bankruptcy yesterday, and what that means for the markets. I know you've had, you've been pushing hard to try to get a bailout in place for Celsius. Just want to see the latest updates with that and where things are at the moment. Bail-in, my apologies.
Yeah, no worries.
So the mic is yours, man.
All right. Okay. Yeah. No. So I mean, I did an update earlier on Ivan and Tech. Full disclosure. I think this relates to. Look, I was listening in a little bit, doing some other things on the side. I think the bit that our industry gets wrong across the board is risk management, the risk of these things being securities, and just really managing things. So when I'm investing in this industry, what people do is they tend to say one philosophy, and then the implications is that people hear that philosophy and put all their money in that thing. When really when I'm thinking about how to allocate money, I'm thinking of different scenarios and how I protect from being wrong. And so, we could sit here talking about, Hex all day versus Bitcoin. I don't see that as I put my money in Hex or I put my money in Bitcoin. I see that as what problem does Bitcoin solve, and how do I hedge against being wrong? So when I think about the way my particular way of investing is so that I never blow up. Does that mean that I don't have percentages in my portfolio that blow up? No, because we're always get things wrong and things happen. And so when I'm thinking about how to manage, essentially, how do you manage a portfolio? The way I think about it is whatever goes wrong, I'm still okay, and that's how I think about it. So when I think about the dollar, I think about a debt-based Ponzi scheme that requires central bank digital currencies as the last leg. In order to take out a lot of the debt from the fact that money is created as banks, and then they shift it to central banks. In terms of effect of that, that's a shift, a slow shift away from free market debt-based money created by a private bank over to, depending on whether it's created as crony capitalism with the government, or it's created by the central bank, and depending on the organization of that, then it's a shift from, more, it's a different way of organizing an economy from capitalism to communism and the degrees in between. But in order for the dollar system to continue, I will still bet on the Federal Reserve pushing that. And that will be an eventuality. I also know that every fiat currency blows up and will explode. And that's where gold does come in. Gold is a way of managing the transition. Fiat currency was just a token that sits on top of gold. And every 100 years, we have a transition back to hard money after wars and monetary renegotiations. Then Bitcoin is, for me, a way of having digital hard sound money. And then you think about, well, what eventualities do you need to protect from? So Richard was talking about whether you need to protect from proof of work. And so then you look at, well, what's the proof of stake chain? Well, you have infinitely higher risk by having a chain that's transitioning from proof of work to proof of stake. And therefore, you'd expect higher returns or higher risks. And you're hedging against an eventuality. And so how much do you want to allocate towards that type of eventuality and being wrong about a conviction you might have about Bitcoin? Then you think about, well, not your keys, not your coins. Well, people lose their keys. And therefore, custody is a hedge against not your keys, not your coins. At the same time, you want to protect yourself from those centralized institutions and the custodian. And so what people tend to do is they say, look, here is my map of the world. And then they expose themselves to one eventuality. And that's exactly how you blow yourself up. And Celsius is an example of that. Alex Mazinski fraudulently misrepresented what the product was and told them that you should take your money out of a bank and debank yourself. And so innocent people that didn't know how to analyze the risk took all of their life savings out of the bank and put it into Celsius, not realizing that it wasn't a low risk saving account. It was actually a high risk hedge fund, or even worse, a fractional reserve bank, depending on what happened. And as we got the bankruptcy today, we find out that there's $1 billion hole. And essentially everyone was investing in Alex Mazinski's ability and his team's ability to try and unwind a bunch of shit. And that is fraudulent, a big problem. And it's the reason why the Celsius had to go into Chapter 11. And so all I'm trying to say here is I think the big problem in our industry is people coming up with a map of the world and saying, put all your, essentially, people translate that as put all your money into this one eventuality. And then they expose themselves. And that's why we have these arguments, people blowing up and all those things. So if there's any one thing that comes out of this whole scenario is it's a game of risk management. There is many uncertain eventualities that exist in our world. And Bitcoin is one of those eventualities that it protects you, gives the ability to own your own money, spend your own money, and have a fixed supply. Now, if I'm thinking about something like Hex, and again, excuse me, I'm not too involved in the project and I haven't studied it hard enough to know how to analyze it. But the way that I would think about it is that it's a bet on, okay, so you've got Bitcoin proof of work, then you go higher down the risk curve. You've got Ethereum that's transitioning from proof of work to proof of stake. There's a risk involved in that. Then there's a smart contract that's built on top of that. There's a risk involved in that. And Richard's done a job of articulating, how it's been a flawless smart contract and it's had audits and all those types of things. And then you start looking, then you have exposure to not just the yield that it generates, but also the price of the underlying token. So are you investing for income or capital gains? And then if it's represented as a certificate of deposit, but your expenses are in one currency, then you're in a speculative environment. And what's happened here is if you look at something like Celsius started, or it should have, or what I invested into before it completely changed, was an ability for someone that owns Bitcoin to pull out some dollars so that they don't have to sell their Bitcoin, and it has tax implications depending on your jurisdiction, matched up in an over-collateralized environment and but then suddenly it becomes a high risk security because they're now investing in multiple things. So you're now investing in fund management. Oh, and then it turns out that the hedge funds and the big people get under collateralized and the retail get over collateralized. And it turns out that there's some funds missing. And all of a sudden you have a complete misrepresentation that causes people literally messaging because they're suicidal because they don't want to tell their partner that they've lost the life savings and their children's college accounts. So this is why, and we talk about getting rid of securities laws. Securities laws are not about using just a test. A security law is, did people come into this to make an investment? And if so, securities laws exist around disclosures. Are those disclosures made? Do people know what they're investing in? Are they putting through suitability? Is this product suitable for that person? What percentage of it should they do? And this is, financial planning 101. And securities laws exist not just because we said, oh, this is a security, and we've used legal gymnastics in order to prove that it's not. It's to put these different products in categories. Is this a currency? Is it a commodity? Is it a security? From my perspective, again, stable coins, right? What caused all this mess? Well, a central banker came along and said, let's collateralize a stable coin based upon a hugely speculative security called Luna. And when we'll slap a decentralized ticket on top of it, and then everyone is misrepresented into not understanding the risk of it. And then it turns out you can't pull the dollars out of a bank because when it depegs, the algorithm fails and the collateral shit, and we get cascading liquidations because of these different types of risks. Now, so for me, this whole thing about security, non-security, risk, higher risk, is just about us having a higher standard as an industry and disclosing what you're investing into. And then as individuals, we have to hold ourselves accountable for understanding the different types of risks. And if somebody is just a hardcore crook and completely misrepresented, then saying to that person that really didn't have a framework of analyzing the risks and saying not your keys, not your coins, is not really telling the whole story of they thought that they were just investing into a low risk savings account because someone completely fraudulently. Yeah, go for it.
I mean, I've always considered disclosure as a very low bar. So you make some trash, the trash sucks, and then you slap on the website, hey, this trash sucks. So if you get totally wrecked, be cool with it. I think if this is like people that advertise for bad things, like Peter McCormick. I got a debate with Peter McCormick where I said he was a scumbag for trying to take people's keys out of their hands and promoting centralized lenders. And guess what? Some of those centralized lenders straight up rug pulled, and this was like a year and a half ago maybe. And then now everybody rug pulled, and everyone was promoting all of these guys. And
yeah, sure. So let me unpack it, Richard, because you do 1 point, we'll do one at a time. So how people will interpret that is, oh shit, I need to put all of my money into decentralization. Now, how many people rug pulled in these DeFi contracts? And how many people really have the ability to analyze the technical risks, the volatility risks, the yield risks, and the fact that there may just be, all of the things that you say that make Hex better than the other things. Most people just don't have a framework in order to analyze these things. And so there is a place for putting some money with a custodian if there's a regulatory environment that allows some of the known risks in these models to be minimized and disclosed. And there is a place for DeFi. And the worst, thing that happens with Celsius is you take all the good parts out of DeFi, because essentially, if someone takes a private key and they figure that part out, and then they download MetaMask and they figure that part out, and they figure out how to, buy some ETH, and they figure out how to send that to a wallet where you have self-custody, and they figure out how to execute a smart contract and lock it up, and they figure out how to not lose the key. That's a pretty sophisticated type of technical competence to get there. If you've got there, then great. DeFi's, it's more transparent. You can see the collateral. But then you've got these misrepresentations of people saying it's decentralized that you've always warned against, Richard. And this is where I believe. And then someone comes along, and I believe that there is a great degree of the community that have heard all of your presentations, all of your arguments, and essentially have put all of their money into Hex. Now, that may have worked out beautifully and produced 1,000,000% returns. I don't know how. I haven't put the time in to analyze that. But saying that that is an alternative to Bitcoin is a completely different risk profile, and people interpret these things, and when these things go wrong, that's when securities laws kick in, because securities laws kick in when, oh, I made loads of money on the way up, I don't give a shit, but now all of a sudden I do care, and I contact the regulator, and the regulator will then say, oh, fuck dealing with all these people, let's just allow rich people to do it. So, and that's the end result of all these things. It's cycles. And I don't really know how to solve these things. Disclosure is one way of doing it. Suitability is another way of doing it. But these things just happen in cycles time and time again. And the only thing that we can do is become wiser after each cycle and prepare for different eventualities, and don't put everything into one eventuality based upon, what someone is saying about how this is vastly superior to something else. They're just different outcomes.
Did you invest? I mean, I think I heard that you were you had some. I know. So like Simon Dixon, he invests in the crypto space. So on this call, he probably takes more counterparty risk than anyone else. Probably everyone combined, really. I mean, I think you've been invested in hundreds of crypto deals, like hundreds of crypto businesses, probably.
Yeah, equity, all centralized equity, I own shares in most of the major companies in crypto.
Yeah, so he has a unique position in that he endures literally the most counterparty risk of anyone else on the call. I mean, any of these guys can just decide to embezzle, from the company and just do bad things.
But my equity is 5% of my private key value. So I'm just managing different events. So for me, rather than messing around with all of these shit coins, I just invest in an exchange, and an exchange has 3,000 people that work there that have to analyze what everyone is investing in. And when the market crashes, they get fees. When the market goes up, they get fees. And then you end up with a hugely valuable company. Now, can that end up being, something like Celsius, where it becomes fraudulent? Yes, it can. And this is, you don't find a pension fund or hedge fund or anyone in the world, well, actually hedge funds definitely, but it's about preparing for different eventualities. So just because I say I invest in exchanges, people will then start interpreting that. And at Bank to the Future, we have to literally get people to take an online test so that they can prove they understand the product. And we have to do these things because these regulations exist, and we take the responsibility very seriously that you shouldn't be investing more than 10% of your income in such private equity, and you should be diversifying across 10 deals because it's highly likely that some of these will blow up. That's where I think everyone needs to get to in the end, and it takes a long time for people to learn those lessons and a lot of mistakes along the way.
NF Trade, I see your hand up. You're free to NF Think, sorry. You're free to jump in. You're there, man. You're muted, NF Thinks.
Yeah, so I think I'll kick it off with a question with regards to the Celsius.
I think everything you said is useful.
Perfect.
Go ahead, guys.
Simon, so quick question. So the first question that I had for the audience is the actual pinned tweet with regards to the short-term cause of the Celsius fail. And then the second question that I have, and I want to start off with the second question first, is how does the Chapter 11 filing affect your Celsius recovery plan? And were you aware that the team was going to do a Chapter 11 filing as you're part of the Celsius recovery plan?
Could you take it one question at a time? Because I can't remember three at a time. Do the first one.
Let's start off with the Chapter 11, how it's going to affect depositors.
Okay. So when I realized, and I contacted Alex Majinski and gave them the plan that we implemented for Bitfinex that recovered them from the 119,000 Bitcoins that were hacked from the exchange. I realized that he then put me over to Citibank. Then we gave it to Citibank, and I know that Citibank have a executive board that you need to get things signed off on, so they wouldn't have moved fast enough, and that would create a big problem. And then I realized that this wasn't going to get executed because there was actually fraudulent activity happening here, and Alex Majinski was covering his ass. And when he was started covering his ass, I went public and said, we need to get access to the financials. Once you got access to the financials, we can then put together a recovery plan. And I realized that those financials were not going to come until Alex Majinski was removed from the board via just having a consulting role by a committee moving over to Chapter 11. And so that was an effort in order to make that happen, because by default, the company was actually split up into three. And then they were trying to sell off the two units in order to hide what was happening in the main unit. And that type of activity was what I was trying to support people in understanding. The transparency can only come out in Chapter 11. So what does Chapter 11 mean? Chapter 11 just means that it's not Chapter 7, which is the eventuality you need to avoid, where they just liquidate everything, create cascading liquidations, shit for the whole market again. Lehman Brothers of crypto moment, and instead move to Chapter 11, where a reorg can be completed. And so at the moment, we're submitting plans in order to support all of those victims becoming equity holders in a reorg of a Bitcoin investment bank that can really get back to the roots of what can be achieved here at the sovereign level. And various other things that are happening. The Bitcoin M&A, some of the things that we've been involved with, and really the lessons are as follows. There's leadership. Alex Majinski was completely inappropriate to run a financial services company because he didn't take his responsibilities serious enough in making sure that he's representing the product in the correct way and is willing to do things that are out of line of ethics, like dump sell tokens while telling people to buy. The second one is you need to have the regulations right, because these turned out to be securities, or it was an unlicensed bank. So those need to be sorted as well. And the collateral at the end of the day, and this is where, it becomes important. As you move down the risk curve of these different products, it's incredibly hard to get the risk. You can take a stable coin where you can pull out the dollars. If you can know that the dollars can be pulled out, then that's a completely different risk profile to a stable coin based upon collateralized shit coins. And then Bitcoin's a different risk profile. And then you just go further and further down, and nobody, can manage those risks. Long-term capital market was the smartest people in the room with the highest levels of PhDs that almost took down the precursor to the FDIC system, that almost took down most of the banking system, that required and created the model of government bailouts, basically because no one can manage those risks. So you need to get back to pristine collateral. And what is pristine collateral? Unfortunately, a hugely volatile asset that goes further down the risk curve cannot be compared to collateralizing based upon Bitcoin, just because there may be some technically superior type of design, but a completely different risk profile. These are complicated subjects that we as an industry are trying to allow people to do it in a decentralized way, and also do it in a centralized way with people. And at the end of the day, there's shit regulations and there's good regulations, and good regulations are designed to prevent fraudsters from misrepresenting things. Shit regulations are the ones that make you put all your data on these servers so that they can get hacked and be used for identity theft and all sorts of things for you. But when you have these centralized institutions, and I completely buy into decentralized model. But it's not all or one. It's a combination of different eventualities and different risks.
Man, crypto was invented to solve this, and it does. Crypto is literally invented to solve this, and it literally does. You just had to use it.
It does, and that's why the vast majority of my stack is Bitcoin on a private key, where I own my own money, spend my own money, and I'm happy with the risk profile of that. And that's also why a percentage of that I'm willing to put at risk in centralized, and a percentage of that I'm willing to put at risk in decentralized, and a percentage of that I'm willing to expect higher returns or lower returns based upon whether it successfully transitions from proof of stake to proof of work, and then there's a use case. But it just goes infinitely further down the risk curve, and then therefore a smaller allocation should be dedicated to these solving these problems in your portfolio.
I'm just saying, like, it's on chain. You don't have to wonder whether a guy's under collateralized or not when you can literally just look at his balances. Like we can kind of see their balances now, right? Like there's some website that shows Celsius's actual like known kind of public wallet addresses, so we kind of can see how much they have left.
Yeah, the DeFi part people could see, but what you don't know is the shenanigans that happen. So you could say, okay, DeFi, and then that represents to people that everything's on chain. I have a sneaky suspicion, and I know the market manipulation behaviors that people engage in because I used to work in market making at the investment bank, and it's even worse at many of these exchanges, that there is side contracts that sit on top of DeFi where centralized entities are lending things to each other or having side agreements to put things on chain in order to manipulate people to take certain behaviors. So you still can't say by putting everything on chain, you're removing a lot of those shenanigans. You're just having one risk removed and replacing it with another risk. And then you've got the smart contract hacking, and then you've got the underlying chain, and then you've got the transitions that happen there and the forks.
I want to hear about the shady thing. I want to hear details about that. Because like that sounds juicy, man. Like, because I understand. So like, okay, I'm gonna expand on what he just said. So there's this thing called like proof of keys, right? And it's kind of like, okay, you're gonna see if the exchange is solvent, but in reality, they could have like borrowed that money or encumbered that money and already like encapsulated it and put it at huge risk. And so even though it shows on their balance sheet, it's not really on their balance sheet. And so I think he's describing something similar to that, but way more juicy and spicy. I'd love to hear about it if you've got any like details. You don't have to drop like real names or anything.
It's just what I said, that you can have on top of the danger in DeFi and on-chain transactions is that people rely on them without knowing that a legal agreement can sit on top in the offline world. That's kind of why it's very hard to have gold on a blockchain, because you don't really know whether that gold is owned and where those types of things. And the same thing happens on chain. And so the shenanigans that happen in our market, that happen in the traditional markets, they're never going to go away. But it doesn't solve, it solves one problem and opens up another attack vector.
Can I ask you how much more cascade risk is there, do you think? Like how many other like lenders haven't gone under yet? Or like, I'm trying to guess because I use these to modify my bottom call, right?
Yeah. So you're right. The bottom call would be based upon the centralized entities' counterparty risks at the moment. My belief is that a successful Chapter 11 reorg would prevent liquidations. If it moves into Chapter 7 or liquidations, then I believe that there's a lot more counterparties that would fall out and be shaken out in that situation. And so we are literally, as a decentralized industry, dependent upon this connection between the centralized and decentralized. And I don't think there's any way of getting around that. It's kind of like, look what's happening at the sovereign level right now. So, Bekele says, okay, I'm gonna buy some Bitcoin, and we're gonna create a securities market based upon Bitcoin, and we're gonna have Bitcoin-backed bonds. And then Sam from FTX comes along and said, no, do it all on a shitcoin, and then creates Aurora coin all over again. And we have those, we know that always ends badly. And then he goes to Africa and says, let's take the people that have been most shafted by the British colonial system, that stole all their gold, and their silver by literally creating agribeads and inflating away their currency and selling them off as slaves. And let's do that again with shitcoins. And then you've got other countries that are saying, let's do it at the central bank digital currency level. You've got these three intertwined things. And the key thing to all of this is the fact that we now have choice. And that's what I think the most important part of this is. So when people are saying, when we're debating here, it's all about if we can give people an exit from the traditional financial system, an exit from DeFi, an exit from centralized custodians, then you just need to manage those choices. I still use fiat currency a lot because I know so many people that they were involved in Bitcoin from the early days. They didn't get wealthy because they had to spend it as they go. And so you still need fiat currency in order to manage just the normal risk management of how do you manage your life. Now, and that's essentially, what I'm trying to say here.
Wait, Simon, just a quick question on the Celsius part.
Yeah, let's get back to the Celsius, sorry.
Yeah, it's clearly that they're acting deliberately and they falsified
So,
of their claims.
I believe the answer to that is literally if the community puts together the bail-in solution that we're proposing to Chapter 11 right now, and everybody becomes equity holders in the proposal that we're going to be putting through. And if someone else comes up with a better proposal, that then Chapter 11 will go through and no cascades. If it turns out that these solutions don't get through Chapter 11, then I think you'll move into liquidation of assets in cascades. So really, the courts are going to decide what the price of the industry is.
Simon, you think that Alex went into this entire thing with these intentions?
I think that, look, I just want to focus on solutions right now, but I will give you
I'm all about that too. It's just
the regulators
the
regulators and the lawyers will determine that. That's not my job, but I believe that applying the same rules of how you grow a tech startup to financial services, it can often lead to completely inappropriate leadership. And if people don't take the responsibility seriously, it's kind of right. Dogecoin, a classic example. So it's created as a joke. The economics are horrific, and then the leader of Tesla, Elon, just thinks it's a good idea to just start talking about it, and then people make financial decisions based upon that. There's a certain level of responsibility that we need to understand, and sometimes shit gets out of control. So my personal belief is that Alex had the type of personality where you're involved in the startup world, and in the startup world, you essentially have to over-fabricate the truth in order to get VCs to invest. But in the financial services world, you should under-fabricate the truth just so that people are over-disclosed. And if you take somebody that comes from the other mindset, and doesn't respect the types of compliance requirements that are going to come from running a regulated institution, you're going to end up with this shit. And so I think there's a certain point at which you say, I am in over my head, and these mistakes have been made, and I need to fess up and tell the world that these mistakes have been made. I think that if the bank run didn't happen, and this was allowed to get bigger and bigger and bigger, then it would have just got a lot worse and more financial loss.
Simon,
yeah.
What do you think about the 70,000 Finex hacked coins? Are they going to get given back to Finex or dumped by the feds? And what do you think about the Gox coins? 142,000.
Well, I guess we could just look at the model of what has happened, and those. So the Finex ones are going to be given to Leo token holders and those that invested in the bail-in.
But you think the government's going to give them to Finex? Because I thought the notions were they were trying to sell them. I don't know.
Now this one's a really interesting one, right? Because on one hand, there's DOJ trying to settle, and on the other hand, there's DOJ that's got a bunch of Bitfinex assets. Now, do I have faith in governments that they won't manipulate that scenario into their benefit? I've seen some really mafia style of behaviors from governments and regulators, and you know that. But I do believe that it's more likely that the DOJ is going to be giving those back, and they will go to the token holders. But I don't have much faith in governments doing the right thing as well.
What about Mt. Gox coins? 142,000 Mt. Gox BTC.
So you've got forced hodl for 8 years. I think it really depends how many of those people became wealthy in that time versus the ones that just gambled it too much and didn't end up in a much bigger financial position.
I got a funny anecdote. I got a funny anecdote for that. So
Yeah.
Mt. Gox leaked their whole list. So if you wanted to, you could just actually cold call the list. And I can't tell you how I might know this, but everyone's wrecked. So like everyone on that Gox list is broke as fuck.
Yeah.
Like almost everybody.
And we saw that in a recent exchange that blew up based upon someone we thought was very wealthy that apparently has been liquidated. So,
bro, there's no way. There's no way Roger's fucking wrecked.
I know, it's crazy,
that real?
right?
He's got fucking XRP founder status. He's got fucking BC. Well, okay, wrecked on BCH for sure. I don't know. Like, really, Roger wrecked? I can't fucking. That would be mind blowing.
Can you expand this? Can you expand this for the audience for anyone that doesn't know?
Jerry Springer.
I like Roger. He's like pro freedom and shit. So I'm not gonna like savage him based on fucking like hearsay. But I could tell you what the hearsay is, I guess. So like Roger is like arguing on Twitter with Coin Floor or Coin somebody. I don't know.
Mark Lamb from CoinFlex.
Okay, and they're like arguing over like 40 or 60 million or something, saying each one of them owes the other one, and well, one of them's lying, I guess.
Yeah, I find it very hard to believe that Roger could be wrecked. I find that hard to believe
because I don't think he's like a take margin kind of guy.
We're talking about Roger.
Would you?
Oh my God, you're not talking about Roger Ver, are you?
Yes, we are. Yeah.
Holy shit.
Roger Ver, Bitcoin Jesus.
Yeah, but for anyone,
man, fucking, you know,
so you're chopping up Richard. But for anyone that doesn't know Roger Ver, a lot of the people that joined in the last couple of years been in this space for a long time. The founder of what was Bitcoin's fork called? What was it? Richard, you're chopping it in and out.
Yeah, Richard, you're choppy. Basically invested in many of the early Bitcoin startups. So we co-invested in blockchain.com, Kraken, Ripple Labs, the company, and what other ones? He missed Coinbase. We got Coinbase.
Okay.
Yeah.
Exactly. He's also the CEO of Bitcoin.com. And I remember back in the day, he was a big proponent of Bitcoin Cash. It was a battle between Bitcoin, or it was like Bitcoin Genesis, which is the Bitcoin we all know, and Bitcoin Cash. So Roger being insolvent is hard to believe. I don't know. Are these rumors starting?
Well, no, that's what the exchange is claiming. The exchange is, but then he could just be saying that because, this is just Jerry Springer for Bitcoin. No one knows. This is just agreements and tiffles and centralized institutions, and that's just what it is.
Cool. So you said that this cascade depends on what happened now with Celsius and the Chapter 11 proceedings. So how long will that take, and what should we expect? Because the market seems to be, I wouldn't say stable, but stable-ish. What are investors pricing in?
Again, I don't really do short-term trading, and I never do price calls. But at the moment, it's just the outcome. I think within a couple of months, we'll know whether that's going to be a successful reorg. I'm confident that there's a great outcome that can be achieved, just like it was for Bitfinex. There was a really great outcome. That was one of my best investments. And I believe that there is Celsius, the company, can't exist anymore. It's too much shit in that. The board can't stay. They're engaged in too many bad activities. And the model of using collateral of multiple types of risks, there's no way that anyone can manage those risks.
Simon, by the way, quick question before we wrap up the Celsius segment and proceed to the next point. So for the audience as well, just so that they can understand the short-term cause, is Lido's stake death, the depegging of Lido's stake death, the key reason as to why everything went to shit initially?
Oh, well, the first one was, there's multiple that happened over time. I mean, firstly, it went from a peer-to-peer model to 6 different types of yield. That turns it into a fund. Then you're like, well, what are those different types of yield? And then there was the STE. Then there was hacks, Badger DAOs. Then there was Luna and whatever came from that. And then there was exposure to under-collateralized, centralized hedge funds. And there's a plethora of other things. And then, the fact that a lot of the collateral was sell. So people were actually borrowing against sell, and then using that in order to buy more sell. And then as the market crashed and there's extreme low liquidity, you're ending up in your collateral is an asset that you can't liquidate. And liquidity is a big part of why you should be what you should be considering as your collateral.
Simon, just a quick question there. Do you think that Mt. Gox coin should be released, I think, in August 1st, right? What do you think the markets are gonna? How do you think the market's gonna be affected by that? I don't know if you already answered this.
I didn't answer that. Yeah, you'd expect a lot of liquidity to hit the market. I just don't really care. I'm a DCA guy. I don't trade. I just buy every month. It's worked really well for me for 10 years, and then I prepare for different eventualities, so I never get wrecked all in one go. It's just quite simple for me. I don't bother trying to predict these short-term trends. I know lots of people do. My experience is the people that do end up in a worse position than those that just took a longer-term approach.
Cool. I appreciate the summary there. I think we can move on from the Celsius segment. Tony, are you still there? Did you have any further points you wanted to make? Because I know you dropped out earlier.
Yeah, sorry about that. My internet just kept on kicking me off Twitter Spaces as a speaker. Is Richard still here? I would actually love to continue our conversation with him. I didn't get the chance to finish.
He dropped out. He dropped out. He was on the move. He gave his final thoughts. So do you want to give your final thoughts on the matter, on the Hex matter, before we move on?
Yeah, sure. So here's just my final thoughts on the Hex matter. The way that Hex creates more Hex is by staking Hex to then get more Hex. The only way that people make money on that is by price appreciation of Hex, which is come from new investors, and new investor buys into Hex, and that cycle keeps on going. I think it's very similar to Terra when it comes to its tokenomics. I think it's very similar to Olympus DAO when it comes to what it does. And I just caution everyone to be incredibly careful when people have a website promising you're going to be rich, you're going to see these 10x returns, you're going to see these large returns. I just caution people to be incredibly careful when coming to this. I do believe a lot of what Richard said, he has some good points, but I do also think that he didn't really answer a lot of my questions on whether, hey, look, are these things going to be productive? Are people still going to be using Hex? What's the actual utility of Hex except for just getting more of it? I think these are some answers that he never actually answered instead of the question. I would love for him to respond to these. And honestly, having a conversation with that guy's intelligent, would really want to keep on speaking to him at another date. But yeah, those are just kind of my final thoughts. Just be careful when you're investing. And to be honest, this looks a bit too much Ponzonomics, just personally speaking.
And NFTs, I know you tried to speak earlier. I saw you unmute and put your hand up as well. I want to give you the chance to unmute. You there, bro? All right, cool. If you want to speak again, NFTs, I know you DM me. Just feel free to unmute. But otherwise, just to refresh the room for everyone that joined, and KK will be going through the agenda again. So we've had
cooking.
almost 20. I'm cooking. Okay, man. So while you're cooking, So we've had over, I think, almost 20,000 listeners come in and out of the room so far. So it's been incredible.
Hey, do you mind if I'm
incredible.
going to drop off because I got a flight to catch? Is there anything you wanted me to do before I go, or any questions?
No, I'm all good, man. I appreciate you being here. I think it's always good to have you come in on the segment of mainly Celsius, but also the liquidations that we've been facing. I want to end it with one last question. I know we touched a lot on Celsius. Is there potentially another round of liquidations? Does that depend on Celsius? Could we expect more carnage, or Sam Bankman-Fried was saying earlier that the worst has already come?
Yeah, I would agree with that. I think the Celsius outcome is important and the Voyager outcome is important. I believe that there's a bunch of insolvent exchanges out there that figured out how to survive it. But there's I think everything is on Celsius and Voyager from here. And if those don't go the way they should go, then I think this is going to expose a lot more shit. But that's my best forecast from here. I'm gonna drop off now, but I'll be giving updates on my Twitter and my YouTube with my name until I'm on. There's a certain point where I'm gonna have to be under NDA. So my goal was to just release as much information, as much education, so that we could just forward the conversation and people could understand some of the types of dynamics. But eventually I'm going to have to go under NDA and go back into silent mode.
When are you going under NDA?
Lawyers are negotiating it at the moment, and we're just trying to make sure that I'm able to still be a bit of a voice and discuss certain things, because I don't want to go fully silent, and what things I can't discuss and can discuss. So that's negotiation, and we'll see how those goes. But I'll probably be a bit quieter at some point next week.
Cool. Appreciate it, man. Appreciate you being here. We'll bring you in next week as well. If possible. Not next, next week's show. Just get an update on the Celsius situation and where the markets are at in terms of liquidations. But appreciate you being here, man. Have a safe flight.
Okay, cheers, guys. Bye-bye.
Cool. For everyone still here, so I want to tell you that the first winner was, so anyone that joined for the first time, we have $10,000 giveaways. Usually it's all in fiat. Today it's going to be half of it in fiat, half of it in logged Faith Tribe tokens, which is a project that was on the show a few weeks ago, I think on our first episode or second. So the first winner was announced on Telegram. To join, check the pinned tweet, join Telegram to see if you were announced. Make sure you follow all the speakers. Follow the speakers, to know when we're running the next space. And a lot of the speakers run their own spaces. But also, if you want to participate in the $10,000 giveaway, you must be following all speakers, and you must be, again, check the pinned tweet. Now, I'll announce the second winner. So the second winner is.
By the way, Mario, do you know how many cups of water for every cup of rice?
No,
that's a bad joke. Don't worry.
Okay, that was a shit joke, man.
By the way, Asian, I can tell you it's just up to your fingertips if you dip one finger deep.
That's correct. That's Asian style. Just one finger, and that's all you got to do. One finger.
Can I cook it in a wok?
Oh God, KK.
So we have Meta Habibi. Meta Habibi just won $1,000, $5,000 in fiat, and $5,000 in tokens. I see you're in the space.
$5,000. Wow, you gave all the giveaway already just then. I mean,
no, not 5. He won 500, 500. So 1,000. We have $10,000 in total giveaways. Yeah. So he won 500, 500. What did I say? 5,000, 5,000?
You said that. You said 5,000, 5,000. It's okay.
Holy shit. Yeah. So Meta Habibi, you won 1,000, not 10,000. Don't get too excited. But congratulations, man. I'm looking at Twitter now. I appreciate all the support. I see you retweeted the space a lot of times. So I appreciate the support. Appreciate everyone's support so far, all 20,000 listeners. But let's keep the discussion going. It's been really heated earlier. I think we started off, for anyone that joined later, I think most of the panelists, now Jared, you joined a bit late. It started off so heated. So we had an agenda, everything's pre-planned. And then we had Richard Hart, which is a very controversial figure. We had him debate with Tony, but he came in and he started clashing with other speakers, and it was really rude and interrupting them. And then I kind of froze. I'm like, where the fuck do I go from here? Some of the speakers were insulted. He was also very intelligent. So we had some speakers debate the pros and cons of NFTs and the value of NFTs. No joke, some high-profile people in the space bailed the panel. No joke. And then we messaged them like, "Hey, what's up?" Like, yeah, like, just getting too technical for us. And then Richard was in. No one ready to debate him. Ryan debated him, and then we've had a few speakers come
But
on.
the guy, I'm not like showing anything that he's doing, but the guy is like smart as fuck, honestly.
Yeah,
and
very smart. That's what I mean, like-
he debates really, really well, despite the delivery of whatever he's gonna say. Like, you can find a level with him where you keep it calm, and it's from an educational aspect. It's like there's no.
I
bullshit.
agree, but he's also pretty arrogant. If I'm honest,
Honestly, I want
keep it humble a bit.
Honestly, I want him back to keep on like talking about this. If we have another chance, definitely want to continue the conversation. It's really
the debate is worth
Nah,
it.
you
Like,
guys, hold
I
on.
have a lot of
You guys
concerns with-
fucked up. You let that whole debate happen, and I wasn't even in as a speaker. I would have jumped in with Tony the whole time.
Be there, Mike.
That would be kind of cool.
But guys, he went really technical. Like he started discussing technical.
No, he went. Listen. He went technical, yeah, but he was. Tony was right. He was avoiding the primary questions, and the preliminary ones that actually needed to be answered were not. So I'd like to have it back on. I mean, maybe next week we can get back to.
I think we can get him back on this session. But he also added technicality to NFTs as well.
Listen. I'll give my 2 cents on what he was saying. I feel like it's really more so about perspective, and when you look at it for NFTs and Web3 relations, in my eyes, the way I like to view it is we're paying a premium to gain access to something before everyone else. No matter what that premium is or what the pricing structure may be, and we might not understand it or accept it. At the end of the day, we should be basically grateful to even be in the space as early as we are.
Yeah, and to like go off of that, I think you're 100% right, and I think that we'll start to see a transition. We've seen it to some extent, but we'll start to see a transition where NFTs are simply entry points to social clubs. Some to country clubs, some to sporting clubs, but they'll just be tickets to continue different utility that you may have to purchase within the group, but they're going to just be our version of social clubs, the same way Elks or Freemasons were for the last few
Things.
generations.
I don't know if you were here last week, but actually I think that's exactly what Tony and I were talking about, how when you look at these, Bored Ape Yacht Club or even, AC Milan, soccer clubs, everybody's starting to have their own sort of NFT or coin or ticketing in some way, shape, or form. And I firmly believe that in the next 5 to 10 years, you're not going to have a fucking ticket stub. You're going to get an NFT. You're not going to get a waiting card at a DMV. You're going to get an NFT. Everything is going to be digitally tracked, because at the end of the day, when we run everything through blockchain, there's no more mishaps. There's no more, oh, you didn't check in. Like, no, you can clearly see I checked in on blockchain. I'm right here. Or no, I'm part of this club. I'm member number 799. You know what I mean? These access points that are basically unobtainable anywhere else in the world can give you a solidified place in someone's ecosystem. And by owning like a golden ape or owning something that has mass rarity, you're basically giving yourself almost like supremacy over everyone else in a sense that you stand out more. So the more you pay for your barrier of entry, realistically, or how lucky you get on the mint, that's really going to decide the outcome of how big you will be in that club. If you have 100 Bored Apes, people are going to know who you are. That's a guarantee.
Yeah, but also just to for the record, Richard, he was being confrontational. That got a lot of attention, and a lot of people like that. But at the same time, he agreed on more than one occasion the theoretical value of NFTs. He was again, and then even agreed about punks and apes being good signaling assets to signal a certain identity, like he's doing with his diamond and his luxury clothes. He just thought that the market is too frothy right now, and there's a lot of shit in the market, which we all agree on. but the utility of NFTs, the concept of digital ownership, he was against it initially, but then concluded on more than one occasion that, hey, he does see value in that aspect. So and the purpose of bringing him, just I'll end it with this, and I'll give you guys the mic. But the purpose of bringing him, and we tried really hard to bring a lot of Bitcoin maxis. So anyone that just entered the space in the last 2 years, before pre 2018 or pre 2017. Anyone that didn't enter the space back then, you don't know that there's a concept called Bitcoin maximalism. And these are people that believe Bitcoin is all that matters and everything else is shit. Even Ethereum, everything is shit. And obviously, most people disagree with this theory, but there's a strong group that believes that, and some smart people there. Now, Richard was a Bitcoin maxi. Now he hates Bitcoin. He's got an agenda to do so. But we tried to bring others as well. We did bring a couple that were on stage, and I think one is coming in a bit later. And I wanted to get their take on NFTs. So Richard was a perfect example of that to get that debate going, because I feel like the crypto community kind of split. The OGs pre-NFTs that think NFTs are a scam, some of them not. Simon was obviously an example of a person who doesn't. And we had Andy, who believed in the value of NFTs, even though he's been in the space for a long time. And then others that just think the space is complete shit. And then you've got the NFT community that's building something new. And it's a much more inclusive community, at least for now. But we'll see how that develops. But that was the purpose of doing what we did. I knew it's a risk, and it turned out really well. It was a really good debate.
Next time, let's bring in Antonopoulos, because I think you're completely right. Richard was a Bitcoin maxi, and he can argue with you from the inside. And it's very hard to argue with somebody who switched sides, right? So let's bring in Antonopoulos and have them two debate. Oh my God, that would be just absolutely priceless.
Yeah, so we tried to bring him. He's taking a break from speaking, but we brought another OG, Dennis Porter, who's on the panel right now, and I'm very grateful for him to be here. So it'll be good to continue that discussion and get Dennis's thoughts on NFTs in general. So Dennis, you've been in the space for a long time, and I'd love to ask you the same questions we asked a few other panelists earlier. Like, what's your take on NFTs, the current market, the utility of NFTs, including the whole PFP culture that we're seeing, the digital identity and the communities being built around PFPs? I would love you to introduce yourself as well, since KK is cooking and he usually does the introductions.
Yeah. Dennis Porter here, CEO, co-founder, Satoshi Action Fund, organization focused on going on the offense for Bitcoin miners here in the United States, but also broadly across the world, trying to decentralize Bitcoin mining. And Richard Hart's an interesting character for sure. I would have loved to participate more in the conversation, but was in another podcast and couldn't quite make the earlier part of the show. But he definitely used to be a so-called Bitcoin maximalist. I don't think he really ever truly understood the purpose or the meaning behind Bitcoin. One of the biggest things that I remember happening to Richard Hart, I actually kind of used to watch him quite a bit when I entered the space in 2017. And I remember the moment when he cracked during the ICO phase, and he realized how much potential money that he missed out on. And he said he was going to start building something, kind of alluding to the fact that he was going to build his own token or coin or project. And he is a very smart guy. In fact, very intelligent, very, very good at debating, very good at avoidance. And, his plan and his decision to make something outside of Bitcoin was pretty disappointing to me personally, because I think it really showed him just truly his lack of understanding of Bitcoin. But at the core, but I also knew that when he built it, that he would successfully scam millions of people out of their money, because he is very smart and he is very capable of building something. He essentially, built something that encourages the holders to lock up all their funds. And then he had all of his hex held outside of staking and was able to dump on every single person that was holding hex. And it's, even if you tried to exit your hex contract, your hex smart contract, to try to essentially escape and get out of the protocol, you would be faced with potentially losing all of your hex. So he would win even more if you decided to exit the protocol. So he really built and designed kind of like the perfect Ponzi, in my perception. And hats off to him for his effort there, I guess. He probably thinks he's a brilliant person, It's really sad to see the way that he's just ripped off all the people, and I feel bad for those that have invested in the project. And I hope that it doesn't discourage them from focusing on Bitcoin. You know, as you said, I'm a Bitcoin only guy. I'm Bitcoin focused. I think that Bitcoin has the potential to help solve a lot of the problems that we have in the world. I think a lot of the problems that we have in the world are downstream of money. And I think a lot of the problems that we have, not only with money, but also in the energy markets as well, Bitcoin mining has the potential to really revolutionize the way that we manage energy, the way that we store energy, and has the potential to help lead us towards a more clean, abundant energy future, all being driven by Bitcoin mining. So very excited about the potential there. You know, NFTs are interesting. I don't find them to be particularly world changing. I think they're, you know, something that a lot of people find quite a bit of fascination with. I think the artistic community, for obvious reasons, finds a lot of fascination with NFTs. I don't love them. I don't hate them. I think that they are overpriced and have been overpriced for a very long time. I don't deny the potential for their utility. I think there could be some utility there, but again, it's like you're like saying, like, you know, video games, NFTs, smart contracts, like all these things are happening outside of Bitcoin, and there's so much happening, and nothing's happening on Bitcoin. Well, to me, Bitcoin, what's happening is in the real world, right? We are changing the lives of people in third world countries who do not have access to financial services. There are billions of people on this planet who've never had a bank account, and for the first time ever now, they can have a bank account, a free bank account that doesn't discriminate against them for their sex, their age, their race, their gender, their sexual orientation, their political positions. So it's an incredibly powerful technology for helping to give accessibility to those all over the world and protection against governments that wish to do them harm. Also, Bitcoin mining now has been something that I've been focusing on a lot in my recent career as a Bitcoiner, particularly with regards to how it can impact energy. Bitcoin mining kind of acts as this buyer of first and last resort. It is location agnostic. It is the first technology or first buyer of electricity that can go to the energy. And what I mean by that is wherever there is excess energy, Bitcoin mining will go buy it up. In fact, you could build a nuclear site or a hydro dam in the middle of the mountains. And if the energy was cheap and it was accessible, Bitcoin miners would be there to buy it up. And that's never really happened before in history. We've always had to have buyers of energy before we start to build the energy. It's kind of like a chicken and egg game that we've consistently had to play throughout human history. The Bitcoin mining has fundamentally changed that dynamic. And it's one of the main reasons why I spent all my time trying to defend it politically, although I don't think I need to defend it as much as I just want to keep it here in the United States. And I want to decentralize it as much as possible so it can't be co-opted by those that wish to shut Bitcoin down.
Yeah, I remember the debates back then, and I was one of the idiots that that believed in blockchain and not Bitcoin. And you remember those debates pre-2016, I think 2017 kind of started dying down. And kind of those debates on whether Bitcoin's here to stay or Bitcoin's utility kind of died. No one's talking about that anymore. I think everyone understands that Bitcoin's here to stay. They see the utility. They see they look at it as a store of value, but there's other forms of utility, other things that can be built on top of Bitcoin. We're invested in a few projects trying to do that. But a lot of the attention has shifted to Ethereum, Solana. We could be bringing the co-founder of Solana NFTs could be jumping in shortly. And that's where all the attention, and you can say a lot of the capital is flowing into. So you said you weren't too excited on NFTs. You don't hate them either, which is good. They're overpriced, which is it's hard to determine. But I tend to agree in some ways. But the theoretical concept behind NFTs, beyond profile pictures, which we'll talk about next, the concept of digital ownership and having your identity as an NFT, having your medical records, or having in-game assets as NFTs and being able to trade them. Does that excite you, or do you see flaws in that many of us don't talk about?
So the idea or the theory that NFTs could be used in all the ways that you just listed are very interesting. I just tend to be someone who focuses on technology that's right in front of me. So this is a problem not only with Bitcoin and crypto, it's a problem like in the energy world, right? They are trying to come up with all sorts of solutions to solve the problems that renewable energy assets have created. There is all sort of theories and ideas on advanced batteries and ideas around how batteries can be used to solve all of the major issues that we face with grid infrastructure. Those technologies are not fully developed and they're not fully ready. In theory, they're great, right? I love them. Maybe it'll happen one day. Hoorah for the people that do it. But I want to be focused on technology that's ready now, because oftentimes we get into this game where we say, well, this is going to be used for this and it's going to be used for that. Well, but it's not actually being used for those use cases fully and functionally. Maybe in some sort of beta mode or test mode, it is in some sort of closed environment. You can kind of use it for that sort of an experiment. And that happens also again in the energy markets with batteries. But is it operational at scale? And scale is very important when you're talking about technologies. Bitcoin mining can scale rapidly, is a technology that's ready today and can solve a lot of the problems that renewable energy assets have and have created for the grid. So I like that. I'm going to jump on that. That's something that I can fight for. It's real. I don't have to like theoretically think about the potential. I know what the potential is because it's here and ready and workable. But you know, again, going back to the NFTs, maybe you guys are right. Maybe it will be used for medical records. Maybe it will be used by merchants all around the world for you know, kind of almost like reward points or reward cards. And maybe all of these dreams will come true. And I'm not saying in dreams in a derogatory way, but I'm just saying maybe all of these use cases are realistic, and one day someone will solve them, or someone will create a way to scale them. I won't be surprised if that does happen, but it's not there today, and that's why it doesn't excite me quite as much, because it's not essentially the technology is not ready yet.
So I'm going to give you, so first, it's a valid point. Like, it depends on your risk appetite, whether you want to start believing in something before it becomes practically used. You know, if you look at VR and AR a few years ago, a lot of hype behind it, but it was just too early. If you look at the internet in the 90s, the use of the internet back then was very minimal. It was all based on theories. So, but it's a valid point. Like, you know, until I see, you know, it's very easy to come up with theories, but until I see this in action, then it would make sense. So if I tell you this, as a gamer, I'm not sure if you're a gamer, Dennis, but if you're playing, I'm not a gamer, but I was many years ago. If you're playing a game, you have your assets there. You know, if the game shuts down or is no longer successful, you ended up losing money, you didn't generate any revenue, and your assets are gone. I don't know if you can still hear me. Can you hear me?
You're good.
Yeah. So if you have
Duty, I grew up playing Call of Duty a lot, so I've done a significant amount of gaming. I was also a big fan of Star Wars Battlefront. So any Star Wars Battlefront fans out there, you know what I'm talking about. Even though they made the second, everyone has gotten progressively worse. I still love it. Big Star Wars fan. But anyways, go back to you, Mario.
So you might relate to this point as having assets within those games, being able. So again, it's all based on theory, but that's what we're working towards, and you know, we're still extremely early, and we're still building communities with profile pictures, which are the very, very early stages of something a lot more exciting. So if you're playing a game, you can have the assets. Let's say spaceship within a game. You can own it, and then you can start lending that spaceship or having people use that spaceship to go to a planet and start mining different rare metals that allow you to start building weapons that you can sell. All these are owned by you. Doesn't matter if the game exists or doesn't exist. Now, if the game doesn't exist, you might be like, right, what's the use of these assets? Well, they can move them to a different game, interoperability, which is, again, years away. But in theory, being able to move those assets that you own, obviously sell them to someone else, and use that spaceship in a completely different game, and then that spaceship will have its own utility built into that game, and then be able to generate revenue there. Axie Infinity achieved that in a much smaller scale with a kind of Ponzi-like structure, because it was still very, very early. It wasn't fun to play. People were purely playing it for making money. But if there's a game where you can actually enjoy playing it, you can generate revenue, you can own your assets, allowing you to trade them and then move them from one ecosystem, one game, or one metaverse to another. Does that excite you when I describe it? Does it sound, too hoopy-dud, it's not there yet, too theory-based? Or is there flaws in that theory?
Listen, it's in theory, it's very interesting as someone who's played, especially, I haven't enough time for video games anymore, but all growing up, was playing video games my whole life. The idea of something like this is interesting, but it again just goes back to scalability, functionality, and thinking about it from the perspective of, is this something that game developers are going to even get behind? Because a lot of the profit or a lot of the revenue that comes from games today is from in-app purchases. And if you're essentially saying to a game developer that I don't even have to buy things in their world, I can just buy things in other people's games and other people's worlds and then bring them to there, it's kind of like, where does the revenue stream come from? So maybe one day you can get game developers fully on board and all of this stuff can be integrated, but it's not ready today. And so that's kind of, again, going back to why it doesn't really excite me until the technology is, beyond the threshold of something that can be ready and usable.
I just want to jump in and say I fully agree with that. I think that we are just now starting to see what cross-play compatibility looks like, what it looks like for PC to interchange with Xbox and PlayStation and so forth. And there has to be that visibility of understanding to know that by doing this cross-play or by doing these intermingling cohesive worlds, that there's a greater profit opportunity by sharing than there is by going all in and you're lonesome in that respect. And some of the major hitters, some of the bigger game developers and so forth, are never going to see this. But it doesn't mean that there isn't going to be the opportunity at a smaller scale to show what communities can be built by having this interchangeability. And it's all going to be, just as spoken, like there's a lot of great ideas and so forth, but to actually have something in action is what's going to make change. And right now, that's just, in my opinion, simply investment based on speculation.
And it's fine to speculate. So I'm one of those few Bitcoin maximalists, essentially, right? Some people call me a maximalist, some people don't. Either way, I'm Bitcoin only, right? I'm one of the few who I don't care what you speculate on. I don't have any issue with that. The only thing I kind of have an issue with is people more so on the upper end of these protocols or investment opportunities who are selling things to folks and they're not being totally honest about what they're selling. Not accusing anybody in this room. Some of the people that were in this room earlier, cough, cough, Richard Hart, are selling products like that to people, right? Like telling people that this is an easy way to make money. Just lock up your money into this protocol and I'm going to suck out all the liquidity while you're waiting to get your payout. I mean, it's just fundamentally is a great way to play a Ponzi game where, you cannot lose as the house.
Well, this is, this is all
Dennis,
speculation.
Dennis,
right?
hold on. Dennis, I got a question for you real quick before we jump into, when you say you're a Bitcoin maximalist and you say that you believe in Bitcoin over everything else, are you saying that you feel in the next 5, 10, whatever years to come, Bitcoin will be the only surviving blockchain tech? Or are you saying that based off of what Bitcoin has built is going to be the surviving, the surviving tech past that?
When I say I'm a Bitcoin maximalist, because the term means different things to different people, it means that I believe that Bitcoin is a fundamental moral imperative and that fixing the money is a moral imperative. And then I'm going to spend the next 5 to 10 years, bare minimum of my life, making sure that people understand Bitcoin and that not only individuals adopt Bitcoin, but businesses adopt Bitcoin and governments adopt Bitcoin. Because if we can adopt Bitcoin quickly enough, we can have a smoother transition out of this fiat disaster that is about to implode in our lifetime.
Why Bitcoin over all the other blockchains? Why Bitcoin over ETH? Why over everything else? I just out of curiosity, what do you, fundamentally speaking, what do you see Bitcoin as better than everything else?
There's some things that you can't replicate, like the fair launch, where there was no one really aware of what was going on. I think that's big. I think that proof of work is vital and critical, and is the innovation, is one of the key innovations of Bitcoin. And almost every major crypto project has moved away from proof of work and to proof of stake. I think proof of stake has problems. I'm not going to go into like long-winded debate over what those problems are, but I don't like proof of stake. I think proof of stake is kind of mirroring the old world that we come from, where there is those
very
who
easily
have
manipulated, for sure.
It's more easily manipulated, and it's not as permissionless as Bitcoin. So Bitcoin is permissionless, censorship resistant. It can survive government or state level attacks. And I think that It also provides accessibility to those all over the world. Not all of these crypto projects are available to people all over the world, but the biggest part about Bitcoin is it's one of the biggest key things too is its level of decentralization. And I think decentralization is huge and something that should be really, really focused on when you're talking about a protocol that is going to be used for global money. You don't want anybody being able to control that protocol. Some folks in the ETH camp will say, Ethereum is decentralized enough. I don't want to be decentralized just enough. I want it to be so fundamentally decentralized that any sort of thought that you could possibly co-opt it would never even enter your mind.
So in my mind, what I see becoming a perfect coin is something along the lines of a hybrid between the speed of Ethereum, the quantity, supply limit, fair launch, proof of work of Bitcoin, and obviously, gas fees and things of that nature being relatively eliminated to a point where 0.000, nothing. It's almost ineffective, like pennies to us in the dollar. I think that we're a long way from somebody designing something so impenetrable because of, again, you said it, there is so much manipulation that goes on now. It's almost impossible to have some sort of fair launch or, team tokens that aren't inversely dispersed. A bunch of people, and it's just, I think right now, we have some sort of
Is he breaking up for
I
everyone
think
else?
he's dropping out.
Yeah.
So no, he's cutting out. You're cutting out. But go ahead, Dennis.
No, I'll just close there. I mean, we don't need to get into a huge debate about like the future, the next Bitcoin. I don't think there will ever be a next Bitcoin. I think the Bitcoin that we have today will probably last for hundreds, if not thousands of years.
That argument, Dennis, me being on the wrong side of that argument cost me more money than you can imagine many, many years ago.
We haven't had an evolution in money in our lifetime, let alone like maybe even longer, thousands of years, like a true evolution in money. Gold was the last good money we had, and it got destroyed by the need to increase the speed and the distance of the economy. So gold failed because we had to use paper money, and then digital dollars and all the money that you see in your bank account today is just an extreme and even worse version of that. You lost all of the positive components that gold had to offer. But Bitcoin kind of combines those two worlds. For the first time ever, you have perfect scarce money that is protected by the laws of physics, and also is digital and can be transported anywhere on the earth with the click of a button, right? And with Lightning, you can also send transactions literally instantly and nearly for free. So you're basically taking gold and digitally transporting it anywhere on the earth with the speed of light at almost no cost. And that's a huge advancement. But that doesn't even get into the positive impacts also that Bitcoin mining will have. And I think Bitcoin mining will lead to just insane levels of innovation around energy. Like you wouldn't believe the conversations that people are having and what ways they're trying to innovate on how we create energy, and also how we compute energy, or how we compute the hashes that go through the Bitcoin mining hardware. So it's like you're going to have this massive advancement not only in how energy is created, but also the chip fabrication process. And I think Bitcoin could potentially fundamentally speed up Moore's law, because there will be such a drive due to all of the halvings that are yet to come, which is the main driver for innovation on the energy level with Bitcoin, that you're going to see stuff that like blows your mind. I think we're going to skip right past Renaissance 2.0 and go straight to Renaissance 3.0. I mean, this is arguably how we actually get onto the Kardashev scale, right? Like we will never be able to harness all the energy on our planet without Bitcoin, in my opinion.
Well, to your point, I mean, what you were speaking earlier, Dennis, and I'll make this quick, the industry, like looking towards speculation, I feel like everybody is looking for the next Bitcoin and feels that they're too late to get into Bitcoin based on the hyper growth that they're looking to achieve through these other projects. And that's like for me, everybody likes to be early. Everybody wants to be part of this hype, the excitement, and they're looking towards NFTs. They're looking towards these voids of where they can find that hyper growth that Bitcoin once had because they think they're too late. So what do you say to people in that position?
Yeah, I mean, I wish I was earlier too, man. I think everybody wishes they were earlier, right? Same thing with the house. It's like the same thing with the housing market, right? Like I wish I'd have bought into the housing market earlier, right? It's just like, but you can't let that missed opportunity, dissuade you from making the right decision. And yes, things will pump and there's opportunities to make quick gains, but as we've seen, those can evaporate rapidly and you have to start back over again. And the wealthiest people on the planet will tell you that the worst thing that you can do is start over again. So most people that are extremely wealthy and ultra wealthy, all they do all day is try to figure out how to stay wealthy, not how to get more wealthy, right? So if you are always worried about hitting home runs, the chances of you actually hitting home runs on a regular basis and not striking out is very low. Especially because most people I imagine who are doing that are the folks that are just trying to get off the ground. They're just trying to get to that next level. And so I would fundamentally trying to hit a home run is the worst way that you can look at investing. If you occasionally you will get lucky and you'll be earlier than other people, but I still think that we are early. There is something to be said about where we are with Bitcoin's adoption. I think less than 1% of the planet is fully adopted Bitcoin. If Bitcoin goes on the trajectory that I believe it will, and most ardent Bitcoin only folks do believe, it will be multi-millions per Bitcoin. So you have quite a bit of growth left. And I think that people just need to be patient. And unfortunately, yeah, you're not going to see 10,000x on Bitcoin in a year. You're not going to wake up, put $1,000 into Bitcoin and wake up a millionaire. But also you should want to avoid any projects at that point that are encouraging you to invest in those, promising those types of gains, because typically those are the ones that collapse and are worth nothing by the next cycle.
So Dennis, I have two questions for you, if you don't mind. The first one is, the second one will be based on NFTs again, and getting your thoughts on a use case that's not theoretical. It's already happening right now. But before that, the current state of the markets, what happened with Celsius and liquidations that we've had. What's your take on them as a person who's been purely focused for Bitcoin for so long? Have you gone deep into what we've seen in DeFi over the last 2 years? And the second question, have you looked at building DeFi platforms on top of Bitcoin?
Yeah, I don't know. I was one of the earlier people calling folks to not put their money inside of Celsius or Voyager or any of these lending platforms. I think they are extremely risky, even though they pitch. The worst part is that they would pitch themselves as a low risk way to get yield. And we found out that is not true. I thought it would definitely take longer for them to implode. I didn't think it would happen this quick. Like I didn't think they would be this irresponsible. So that was a little bit surprising to me. But I'm not surprised at all that they eventually collapsed. Just only surprised by the speed of the collapse.
And what's your take on the current market conditions? We saw Tim Dixon was here earlier. He's helping with the rescue package for Celsius. He was an early investor there, and he gave us an overview of the Celsius Chapter 11 filings. Where do you see the market now and over the next few months? I know you've seen corrections more than I have. I've been in the space since 2017. Does this one look any different, or is just same shit, different day?
Yeah, I tend to not make short-term price predictions. I mean, I love to jokingly, kind of facetiously make short-term price movements or kind of predict if it's going to go up or down, but no one really knows. I just am long-term bullish on Bitcoin. I don't do short-term price predictions really. I'm not a market analyst.
I'm the same. I've only made 2 guesses in my life. One recently, and I think I said like 2 weeks ago we've reached bottom. But I have no fucking clue, and it's impossible to know timing.
I don't bet on price. Things that I have bet on are, is Bitcoin going to become a popular political movement? I bet on that, and I won that bet. I bet that Bitcoin miners are going to be the most incentivized to need political protection. I made that bet, and I won that bet. And I think that the next bet is going to be trying to make sure that Bitcoin mining becomes a part of the grid. That's what I'm betting on, and I'm betting on just broadly very bullish on Bitcoin mining.
Okay. And we've had a lot of politicians. I think I'm not looking at the audience now, but we've had politicians in every room since starting the show 5 weeks ago. The next question will be about
NFT. There, if you have a if you're in the United States in particular, if you know your state lawmaker or you're interested in getting in contact with your state lawmakers, please let them know to reach out to me if they're interested in adopting Bitcoin mining. I'm in actively conversations in 10 plus states, having serious conversations in 2 of those states. So what we want to do is educate these people on the benefits of it, and then also lobby for effective policy. So we're doing that. We're actively doing that. We're also looking for people to fund the organization so we can be more effective. So if you haven't been so damaged by this marketplace, it's a tough one to be it's a tough marketplace for everybody right now. We are a nonprofit organization, so we just only operate based off of the money that comes in from our donors.
Well, that shit's not happening in New York, Dennis. So
let's go. We're gonna do it, dude. We're gonna get something done in New York.
So Richard, next question I have. So just anyone that has any of those connections, any politicians listening to this, I know we've had lots. We've had some on the panel 2 weeks ago as well. Definitely hit up Dennis. So then the next question, Dennis, what's the best way to reach you? Just before we go to the next question.
You can DM me. My DMs are open. I check periodically, even my what are they called? Requested DMs. So if you shoot something in there, just don't send me like something that's like 10 miles long. It's hard to read all of them.
All right, so we'll go to the next question. I see the team is pinging me to start announcing more winners. So we've got another 7 winners to go, 8 winners to go. So anyone listening, again, you have to join the group pinned at the top and be in the space as we announce the winners of the $10,000 giveaways. Dennis, the next question I have is one use case right now for NFTs that we're seeing is communities being built around those profile pictures. Now, when I first saw those profile pictures, even though I have a CryptoPunk as a profile picture now, because there's various benefits to that. Before that, I laughed at the CryptoPunks. Now I go around the world talking about them. And the use case that I see, again, that's a short-term use case. It's not as exciting as what we talked about earlier in terms of applications of NFTs, of NFT tech. The use case is, okay, so owning the IP behind the Bored Apes, so you can start building a brand around it. As we saw, Eminem and Snoop Dogg created a video. Clip with a song using their Bored Apes, which might sound childish, but there's a strong community starting to build around it. And then Bored Ape Yacht Club is building a metaverse for that community. They're doing events. So it's almost like a decentralized membership card with IP linked to it. Membership to a community, a pretty exclusive one for now with apes, punks, and meebits. That brings different forms of utility through, like any other community, any other group, just connecting to other people in the space, going to some events, entering the metaverse, and potentially having different forms of utility within that metaverse, within that ecosystem, within that game they're building. So that's happening as we speak. Is that something that you see like, okay, cool, that makes sense to me? Or is that something you completely dismiss?
Again, I love the theoretical ideas around all of the NFTs as a utility, DAOs as a utility, smart contracts, the utility that they have potential to offer. But I just don't I don't personally won't invest in them. I don't know when and how and where they'll be deployed. Not an NFT expert. Generally not bullish on them in the short term. As I said earlier, I think all NFTs are dramatically overpriced, and most of them will probably go to zero. But some will survive. I'm sure. Like what's those ones that the ones that are really popular? I don't know, the frog ones.
Bored Ape Yacht Club.
I don't know.
Hey,
See, I don't even know. That's a problem, man. This is the problem.
I'm gonna jump in because I come from NFTs only. I don't come from crypto. You're looking at the state of crypto.
So you got muted, whoever you're speaking. By the way, I'm inviting.
I don't mean any of that to offend anybody. It's just like I'm also not into other technologies that have nothing to do with crypto. It's not like a slam in the face. It's just like
I think the slam, Dennis. I think the slam comes when you say like it's overvalued.
Yeah.
Like for you,
well, I mean, it is overvalued.
Yeah, but
Come on. Some of them
well,
are
why is it
Bitcoin's
overvalued? I
overvalued.
explained my point earlier today.
Some of them are overvalued. I'm not pointing fingers. I mean,
Some are undervalued as well.
Some.
You know, I come from NFT. I don't know.
So I've got an OG. By the way,
can I just ask
Dennis,
one question? Can I ask one question?
Go ahead. Please do. I want to introduce Tone Vase just joined the room as well, and
It's giving
Tone
me,
is someone
giving
I've
me an
been.
error, so I'm trying to bring him up, but it's telling me Tony.
Yeah.
Blah, blah, blah.
I just
go
want
ahead.
to
Ask the question.
like, how much, Dennis? How much would it cost? What price tag would you put on? Let's say you're new to the space, you know nothing, but you want to go ahead and build your company, and now by buying, let's say, a certain NFT, it allows you to meet, let's say, a Kevin O'Leary or a Mark Cuban or whoever it is. How much? What price tag would you put on that?
I don't know, but do you need an NFT to do that?
Well, if they go ahead and attend parties that, let's say, specifically the Bored Ape Club puts out there, is it worth it to get into a Bored Ape to go ahead and allow your company to go ahead and socialize in that crowd?
I mean, I guess. I really didn't want to get into a debate about NFTs. I've done debates about NFTs. I find them to be interesting. They have some utility, probably. Maybe certain ones will be very valuable in the future. Maybe they'll be used as a reward program, and that will catch on. It hasn't fully caught on. I tend to be like, let it survive a whole cycle, and then let's take a look at it. So curious to see it. Hats off to the people that are driving that space forward, and hopefully you guys can accomplish all the things that you believe NFTs will accomplish.
And I respect the way you approach it, by the way, Dennis. I think you're approaching it in a very logical way, very pragmatic. Instead of hating on it, or obviously being a fan without understanding it, you just like, let it play out. Let's see what it does. Let's see the value it brings over the next few years. It's too early to tell now. And then we might look at it. So that's actually a good way to present it. But I do want to introduce Tone. Tone just joined. I'm really glad to have Tone here. So anyone that's been in the space for a while, Dennis, you know Tone. Tone Vase, I used to listen to you talk with Jimmy Sung. I learned a lot from you guys. So I'd love you to first obviously introduce yourself. Got a lot of people from the NFT community here. We had Richard Hart debating with the NFT guys very heavily. And then we had Tony grill him about Hex. But, would love your take on the market now.
Thanks, man. I'm actually really happy I missed that. The fact that Richard Hart was here debating anyone. I've had debates with Richard Hart. I still owe a huge apology to the entire crypto community for being one of the people that actually helped create Richard Hart by giving him a place to speak. Back in the day on the World Crypto Network, I will never be able to forgive myself for that. But back in the day, he did, was pulling a fast one, pretending to actually be a Bitcoin maximalist until we should have seen the signs. It was totally my fault. Yeah, Dennis, I think what you were thinking of was Rare Pepes. They were the NFTs before the current NFTs. They were just a little too early.
Yeah, that was it. I mean, things like there's certain things, like no matter what industry you're in, where they'll have some sort of historical value, and so I think something like a Rare Pepe, specific Rare Pepes, maybe not all of them, but could hold value. I think doesn't Jason have a ton of those?
I have one. So how much?
Yeah, I mean, a lot of people. Well, not as much, and I'm happy to discuss that kind of thing. Why? They were at 9 months ago, they had a huge value, but right now that value has completely crashed. Yeah, wow, I'm amazed how many people you guys have in here. That is super impressive. So I am not as hostile to NFTs as I am to anything Richard Hart does, or ICOs, or a lot of other stuff. And so Okay, I'll do a brief intro because a lot of people here probably have no idea who I am. I'm not that important, but I was on Wall Street for about 10 years, and I quit that to be a trader. And but I always do everything with like multiple backup plans. So when you're quitting a six-figure job and not knowing how you're going to make money, I had several plans, and I figured at least one of them has to work out. I opened a physical business. That was the biggest disaster of them all. I quit to be a trader, but being a trader is one of the most dangerous jobs, not physically, but financially, because it's one of the few jobs where if you screw up, you actually lose money, and you can lose an infinite amount of money, which is more than if you're opening a business. If you're opening a business, there's a limited amount of money you can lose, unless you're Celsius. But other than that, there's limited amount. If you're a trader, you can really like you can lose everything. It's like going into gambling. So I did that, and then I also started writing articles, thought maybe I could be a writer, and then I ended up traveling the world, speaking at conferences, and started becoming an influencer. So between all those things, something was bound to work out. My trading was doing pretty good, but the reason I quit to be a trader was to have like a free life. No more bosses, I can do whatever I want. And while I can do whatever I want as a trader, what you end up doing is sitting in a basement in front of 5 monitors. So the life of trading on a beach isn't exactly what happens when you become a full-time trader. But the life of being an influencer, even though I don't actually promote anything other than myself and my own work and my education, so like the life of traveling speaker and bringing some professionalism into Bitcoin because of my Wall Street background, that was really enjoyable for me. And that's kind of what I started doing. So I've had a YouTube channel for over 7 years. I became a Bitcoin maximalist probably around late 2014, mid 2015. So somewhere in that zone. So before Ethereum was released, I was already convinced that everything else is insane. So I was pretty early to that train. I even, it was funny, even Saifedean Ammous, who's like one of the top Bitcoin maximalists, apparently the first interaction I ever had with Saifedean was me talking shit saying, oh great, another stupid blockchain book. So he kind of brushed that off when he was writing the Bitcoin Standard.
Tone, I have a few questions for you. So you touched on the ICO hype and how you've never promoted any ICOs. Many people in this, you'd be surprised. And I was shocked. I've been in the space since 2017. I didn't believe in Bitcoin 2 years before that. I believed in blockchain because I'm an idiot. But a lot of people don't even understand the term ICOs or don't know what happened in 2017. You were very outspoken against ICOs. Are you still outspoken against tokens right now? And why is your take on NFTs less aggressive than compared to tokens and ICOs?
Sure. So my general view on tokens, whether they're called ICOs, or whatever the latest buzzword is, to basically, if your token has the origin similar to Ethereum, where you sell the token first in order to get the funding to create whatever it is that you're building, and then that token is used as a utility in order to get around the regulation. To me, you are basically combining the function of a utility token with the function of money, with the function of a security. And I think combining those three is a bad idea. It's a bad idea from a regulatory perspective. It's a bad idea from an economic perspective. It's a bad idea from an ethical perspective. But it's certainly a good idea if you want to get a bunch of money because you can. Again, Richard Hart. If you have the popularity or you have the ability to promote, this is a great idea because you can basically raise a bunch of money and then build whatever you want and then tell the community that, or do the Dan Larimer model, right? So Dan Larimer did 4 of these kinds of scams already. So he started with BitShares, and then Steemit, and then EOS, and then there was one more before even BitShares. And eventually it ends with, I've decided to leave it to the community and I will go work on another project, and then the project dies. So when you start your project with a token first, the moment the price of that token goes to zero, your project dies. That's not how businesses are supposed to work. Businesses are supposed to have a viable business model and then have an equity or a stock of that company, so that the success of your company is not dependent on the success of the token. But that has been all ass backwards in the crypto model. The only reason why the Binance token still worth any money is because like the only reason why Binance still exists as an exchange is because the Binance token is worth money, right? It's ass backwards. Like, for example, if the stock of Apple goes to zero, that means their business failed, not because the stock failed, right? But when the Celsius token goes to zero, their business fails because their business is holding money in Celsius token. This is how all of them function. The moment that token goes low enough, the project dies. This also applies to Litecoin. This applies to Monero. This applies to all of them because the value of the token is literally the project. Now, this could be the future of the entire world. The SEC seems to be powerless to stop it. The SEC might lose the Ripple case, in which case it opens up the world to a completely backwards business model of token first, maybe build something later. That's why we have 5,000 tokens and maybe, 50 viable projects of those tokens? And I use that word loosely, viable, okay? So this could be the future of every single company known to man going forward. It's possible. I am mentally getting ready for that reality. I think it would be a horrible world, but I am mentally getting ready for it, right? It's kind of like if Russia and the US decide to nuke each other, China takes over the world, and those of us that survive will be basically living under a Chinese dictatorship. I am not happy about doing that if I survive, but I am mentally getting prepared for it and adjusting my life as best I can. Now, I shouldn't plan that far ahead, but I will, educate my grandchildren on how to best survive that world. So preparing for something that you disagree with is not exactly a bad plan. But I do want to get into NFTs for a second. So my view on NFTs is NFTs are not new. They're not innovative. NFTs have always been with us. So I wish I kept my old movie theater tickets when I was a kid, because I'm sure that NFT movie theater ticket from me going to Jurassic Park, the original Jurassic Park, or the original Terminator 2, or some of these other classic movies, those are NFTs. When you go on an airplane today, that's an NFT. It was an NFT back when the United app had your QR code, and you're the only person that can use that ticket. That's it. That's an NFT. That's a non-fungible digital token. They can print it out for you, but most of us just use our cell phones. NFTs have always been with us. Anytime you buy an item that is unique to you, now if someone steals your movie theater ticket, they can go and enter the movie as you because it's not assigned to you, right? That in Bitcoin, that's an advantage because then no one can freeze it, right? But sometimes, like with an airline NFT, it's assigned to you. No one else can board that plane but you. But an airplane ticket does not have a speculatory collector value, okay? Just like maybe an old movie theater ticket does. Whether it's digital or whether it's paper may not matter. The reason why paper, physical form, collector value is I believe should be more valuable than digital is that it's easier to destroy, is that people lose them. Like I still have old basketball cards. These are all NFTs, guys, but not every basketball card is unique. There are multiple Jordan rookie cards. They're not all identical. But in the digital realm of today, that Michael Jordan rookie card could actually be identical. It could actually be unique, because even though it's printed on paper, it can have a unique digital signature. My problem with NFT is multiple. One is technological, and one is, I guess, financial. So I don't know which one to go into first. Let's go with the technological one. I think they're both going to be debatable. The technological version is this, and I want to state them both, and then I'm happy to engage in them. Anytime someone tells you that NFTs are decentralized or they're not, it's all bullshit to me, right? There's only one thing in this world that's decentralized, and that's Bitcoin. That's it. Most of the NFTs that people buy are ultimately anchored into some jabroni's domain. And when he forgets to pay his internet bill, or he forgets to renew his domain with an ISP, the track record of that NFT is going to be gone. If you back anchored your NFT into Ethereum, it'll probably be gone, because Ethereum is just not scalable. I don't think it's going to succeed. And also, Ethereum is not decentralized. So if they're going to fork it, whatever, they can change it. You have no control. If you are going to build an NFT and you want to have an honest discussion about the value of an NFT, that NFT better be built on top of Bitcoin. It better be anchored into Bitcoin. If your NFT is not on top of Bitcoin, and they're already technology there for that, liquid sidechain, RGB sidechain, they do the same thing Ethereum does, is just not as popular. So your NFT better be anchored into Bitcoin. Otherwise, I'm not even going to engage in a technological discussion that your NFT is somehow immutable, because it's not. It's factually useless. It's in some guy's Excel spreadsheet. Okay, that's how I see the world. So go ahead.
So just a quick question on that point. So you've got on-chain NFTs. So it is a flaw with NFTs having a code within the blockchain pointing to a JPEG sitting on someone's server, which is completely ridiculous. But we've seen CryptoPunks, they were initially off-chain, they're on-chain now. So we're seeing a lot of NFTs stored on-chain or stored within the NFT itself, like on-chain monkeys. Would that solve that problem? I know you've got the issue with Ethereum not being decentralized.
No, it's not. Because see, it doesn't matter to me if it's stored on someone's Excel spreadsheet or it's stored on a blockchain that is on top of a blockchain that is on top of Ethereum. It's actually the same thing. I still have spreadsheets from 20 years ago, and I guarantee you they've been more immutable than Ethereum. It's actually factually more immutable than Ethereum, because Ethereum altered its history in 2016, right? So a publicly available spreadsheet, like a Google Doc with multiple admins, is more immutable than Ethereum. This is just facts. I'm sorry, guys, but these are facts, right? So if you actually want an immutable NFT, like all the things that the NFT space, whether it's CryptoPunks, whether it's the monkeys, whether it's whatever, right? It doesn't matter to me, right? The technological side of the NFT discussion has to be Bitcoin. You have to build your NFT on top of Bitcoin. If your NFT is anchored into Bitcoin, we can now have an actual honest discussion of the value of that NFT. And I don't have to argue the stupidity of the technological lying that the NFT platforms tell you that, it's on OpenSea and this and that. No, these are just databases controlled by one guy at the end of the day. So the technological, my technological view is, if your NFT is not on top of Bitcoin, it is not immutable like they claim. It is it's a completely different discussion, right? So let's assume that the technological side of the NFT space gets its shit together and starts building NFTs on top of Bitcoin. Okay, now I'll tell you why it's very difficult to sell your NFTs if they're anchored into Bitcoin. When you have an NFT project, you got to find an underlying and I hate to use this word blockchain, you have to find an underlying database. It's a database. There's one blockchain and it's Bitcoin, right? Other than that, it's just databases. And I used to work with databases on Wall Street. So like there's, back in the day, there was a podcast called Bitcoin Uncensored, and they used to call this term turtles all the way down. You can Google what turtles all the way down means. It's like a turtle on top of a turtle on top of a turtle, and eventually it's holding up a flat earth. That's what, I mean, that's how they referred to the crypto space. And this is as far back as 2015. Like, you have to just build on top of Bitcoin. The reason why it's harder is because when you build on top of Bitcoin, you now have to convince Bitcoiners to part with their Bitcoin for whatever it is you're building. And that is a very, very hard challenge. It's a lot easier to convince someone that is holding Ethereum to invest in something. Because if you are a believer in Ethereum, that means you're a believer in a multi-blockchain world. So it's a lot easier to separate you from your wealth to buy basically anything than it is to separate a Bitcoiner from his wealth. Because a Bitcoiner really believes in that Bitcoin. And convincing him to buy something else, whether it's for speculative needs or even a Lambo, is very, very challenging. So that is the biggest challenge that all of these crypto projects have, and why I think they stay away from building on top of Bitcoin, because they lose the pool of people willing to speculate on their projects. Okay, so that's the challenge with doing so. But from a technological perspective, you really want to build on top of Bitcoin, because then I cannot argue against you that your NFT is just in someone's spreadsheet. Okay, so I lose that side of the argument. I see a hand up. But let me just say the second point, and I'm happy to engage. So now we have to talk about the speculative and the monetary value of an NFT above the actual utility and technological and like a value of that NFT, right? So to me, I think it's virtually free to make an NFT. So because it's virtually free to make an NFT, I mean, even Picasso would spend, a few months painting something, right? So there is some work going into it. I don't think it takes that much time to make a picture of a monkey, or like a Bored Ape, or a CryptoPunk, or any of the other ones, right? So there is some creativity involved, but that creativity honestly is very minimal. And there's almost no physical labor involved. There's no actual major effort involved to build it. So now we're strictly talking about collector value and financial premium. And to me, again, this is where I have a little bit of a problem. I don't understand why they have such huge collector premium. Even a Picasso wasn't worth shit at the time. So things take a lot of time to gain value. Even a Michael Jordan rookie card was not worth all that much in real time. I don't understand how NFTs get such a high collector premium in real time, because there are literally infinite amount of NFTs. So how do they pick up this collector premium? I can understand in a few decades, after enough time went by and most of them are lost, data is very valuable. I used to work with data. Historical data is valuable. What's his name? What's Bloomberg's first name? Michael Bloomberg is one of the richest men in the world. He was running for U.S. president. He runs Bloomberg. He's not wealthy because of the Bloomberg, TV channel and covering the news. He is a multi-billionaire because he has historical financial data nobody else does. because eventually databases go up, databases go under. Like I've personally worked with data I will never find again. Bloomberg might have it, but it's too expensive. I can't afford it. Okay. I've read articles online that I will never find again. Like they're gone. So there is value in data, in digital things, but I can't understand how that value gets generated in real time within days, months, even years is just too short. Now, I will before I engage, I will make my one use case for an NFT. So I've actually thought about it. I'm like, okay, what can make an NFT valuable? Because to me, we all live in a physical world. We are interacting in a digital world right now through spaces, but we're all sitting here holding a phone, okay? Because Twitter is still not able to do this over a PC for some God knows what reason. I have no idea what 1,000 employees do at Twitter other than just censor people. But all right, let me get back to the topic. So here's my one use case for an NFT. There's only one Mona Lisa, and I'm just going to use Mona Lisa as an example. Who owns the Mona Lisa? Well, it's a combination of the Louvre in France, the museum that's holding it, and the Saudi family that purchased the rights to it. Now, there's only one Mona Lisa, but guess what? If you are in a virtual world, you don't have anything physical in a virtual world. So, and NFTs are mostly reputation based. So if the Saudi family that owns the Mona Lisa and the Louvre go into some kind of a contract, and of course, all of this has to be built on Bitcoin. Like let's solve the technology problem. Everything is built on Bitcoin. They go into this a smart contract on top of Bitcoin, putting their reputation on the line, that they will create, say, 10 or 20 or 50, some arbitrary number of digital Mona Lisas, and they will sell them or rent them. And I can see how that NFT, and each one will be unique as well. They'll have a number, 1 out of 50, whatever that arbitrary number is. Hopefully it's not too big of a number. Otherwise, the value of each one goes down. And someone can purchase that and put it in their virtual world. Like, I guess I hate using the word metaverse, but let's say virtual reality world. So now you have someone like Elon Musk, who's a billionaire, and he has his virtual reality office. Obviously, that office is going to be on Mars. Where else would it be? And in that office, he has a meeting room, and he can afford one of those digital representations of a Mona Lisa, crypto signed by the Louvre and the Saudi family. And he has it on the wall of his virtual office on Mars. And anyone who's entering that virtual office has to have some kind of 3D goggles, right? They have to have some kind of like Oculus or whatever. And they can sit in his office and they see the Mona Lisa. And those goggles instantly can authenticate that Mona Lisa, that it is actually one of the 50 in existence in that virtual world. But you can also have a million virtual worlds, right? So that's the other issue. So we're talking about like a Ready Player One kind of movie where there's only one virtual world. Everyone interacts with it. So he has one of, 20, 50 Mona Lisas, and your goggles can authenticate that. And the only place you can have one of these things is in that universe, because you can't have that in physical form. There's only one in physical form, and it's sitting at the Louvre. So that kind of NFT, I can understand how that has instant financial premium. And because there's only 50, if Elon Musk decides to sell it, that could be worth a lot of money. And the free market can decide how much it's worth. So that is like my one example of how these NFTs can function. Like, I don't have a problem with NFTs, but I just don't understand why, someone creates a new JPEG and it's suddenly worth millions of dollars. Like, I just don't get it. And I think this bear market is going to prove to the world why that's crazy. All right, I'm going to leave it there. That was my explanation as to how I see the world.
I've got a lot
Tell
of
us
questions.
how you really feel, Tone.
Yeah. I remember Tom's voice. I used to listen to you a lot in the early days of crypto. I learned a lot from you. So it just brings back memories. But before I ask my questions, Funding Jim, I see your hand up. Do you want to jump in before I do?
Sure, just for a couple of minutes. A few topics. One, of course, to Tone's points about NFTs, because that's most of what he was speaking about most recently. Let me give you a tiny bit of background. Some ex-Special Forces medic, deployed in war and all these kinds of things like that. I went into a cardiology career for more than 20 years, speculated in a lot of different startups in Palo Alto and so forth. So I'm part of the Silicon Valley origin story of a lot of these cryptos as well. Now I'm retired. I'm an Act 2022 guy in Puerto Rico. So I'm around all these people that have great wealth. Peter Schiff's a neighbor, Mike Maloney's a neighbor, all these kinds of things, right? So I'm in this environment all the time.
Quick thing on Peter Schiff. Quick thing on Peter Schiff. Quick thing on Peter Schiff. I just had a debate with him over gold versus Bitcoin. It was recorded and it's going to air this Saturday. It was a really awesome debate because the moderator was so good that we did not argue over each other. We both got to state our points. So there's an awesome debate coming out between me and Peter Schiff this weekend.
Oh, I love it. I'll definitely listen to it. Again, I've been on stage with him as well. And his points, you know, of course, everyone likes to talk their bag. It is a little bit of tribalism, no matter where you come from. But let me get back to the NFT thing. So a lot of my hobby of the past 20 years has been these types of collector items. You talked about attending a particular concert or going to a Star Wars movie, or what you were talking about before is the NFT example in the physical world. Same thing with classic cars, same thing with physical art, usually physical art that can have some kind of provenance, or it's a known artist. It's been somehow vetted by the museum that's paid $50 million to hang it on the wall, right? So those types of things, when you go to an authentication, you say it has this kind of paint and this is the type of style that the master would have done it 400 years ago. I get your point about the ability to mass produce versus and anonymously mass produce versus some kind of antiquing or aging, or having that artist come back from the dead to recreate something that we value as human beings. Art has had a significant store of value narrative over long periods of time. So the things that are hanging on the walls, and valued at millions and millions of dollars, sometimes it is simply because there's been some destruction of its competitor. The only one that survived the fire is the one that's hanging on the wall. So I get your point about NFTs, the versions that may have a use case. One of my friends is a multi-billionaire in the art industry, and he's super crazy successful. And he wants to build an NFT museum that would be housed within the Louvre, within the Met, things like that. So you would be paying an admission, and then that admission would be part of the museum tour, and one area of it would be the NFT. Now, what they care about, these guys are paying, hundreds of thousands of dollars for digital art, basically. And what they care about is this represented on a blockchain? Is this actually stored, like you were talking earlier in this stream about IPFS? Is this something that's, quote unquote immutable? Do I own it? That's the question that they have. And then they build all these insurance industries around protecting that property, that intellectual property or digital property. So I get your point about NFTs if they are held on a particular blockchain. Now, what I have a contrary belief in is that there's not one cryptocurrency, whether you call it Bitcoin or something else, Ethereum or something else, that will rule them all and will be the end all service of the function of money, the function of store of value, the function of smart contracts, or whatever you want to call it. I don't believe in that. And the reason that I don't believe in that is because human beings have been around for hundreds of thousands of years. And we do have people that speak English in nations that sit right beside nations that speak German or Spanish or French, and we haven't homogenized. There's not a one tribe that will rule all. So I hear what you're saying about, and you've said it for many years about there's only Bitcoin and everything else is pale by comparison. I don't believe in that narrative. So when you're talking about this maximalism, I don't think it serves the industry very well. And that's one of the things I also don't like is in general toxic communities. These are spaces for ideas, and to shut down someone or a thought is very much to say my culture matters and yours doesn't, without actually investigating the merits. What does that other culture represent? Who are they bringing to the table? If you're wanting a monetary system that is covering 8 billion people, right? You have to be more open-minded, and you have to agree, Tone, that a majority of the OG, whether it is in Bitcoin or OG in Ethereum, or they were the first people that founded, you talked about EOS or something like that, they're all going to have financial incentive to talk about their own bag. I don't like the name calling between communities. I don't like the toxicity. I don't think it actually moves the agenda forward. It doesn't help with political alignments to basically take power away from governments. So I'm friends with people like Tim Draper that is agreeing that coins can serve different purposes. Tokens can have different use cases. Things like Ethereum can launch plenty of shit coins, absolutely rug pulls and all kinds of risk of anonymity and people losing all of their funds in a degenerate gambling kind of mode. I know that exists. I've been in this industry long enough. So does startups. 9 out of 10 times that I would put money into a startup and believe in a particular founder or some intellectual property, or that they were going to have the first mover advantage, that money would go to zero. And 1 out of every 10 or 1 out of every 20 would have the ROI that made it worthwhile to be a VC. So I just want you to be more honest when you're framing the position of a maximalist world.
Oh no, I am nothing but honest, and I disagree with pretty much most of the things that you said. But I am definitely honest. Just because we have 100 different languages around the planet doesn't mean that that's actually helps the world, right? Like the fact that people speak different languages is actually holding back the world. Now, I am not a dictator. I'm not here to force someone in China to speak English. I'm not here to force. I speak a couple of languages. I wish I spoke more. I don't want to waste my brain energy to learn multiple languages in order to communicate, but it's something that I have to do. Just because the world drives on 2 different sides of the road doesn't make the world better, right? It literally causes accidents. There's absolutely no reason why the world has to drive on 2 different, like half the world drives on the left and half the world drives on the right. That doesn't make it better. Apple has a different connector than every other connector in the world, right? The world has moved on to USB-C, but not Apple phones. Maybe you think that's great. I don't. Okay, so there are I'm very happy there's one electric grid, but it would be nice if there was one outlet all around the world. So this view that having multiple things is better is just wrong, right? Like, it's great to have options. It's great to have an Apple phone or an Android phone. It's great to have multiple operating systems. It's great to have multiple browsers to choose from, but all those browsers still ping the same internet. Imagine if we had 5,000 different internets, and every time you had to build a website, you now have to do it on at least 8 different internets. That's not a good world. So that's just a functioning reason as to why there probably should be one blockchain, but I'm not here to force anyone to use it. I'm just here to explain why it's likely to only be Bitcoin, not to mention like a dozen other reasons, and it's not even the first mover advantage. So it's not that I am shilling my bag because I have all Bitcoin and only Bitcoin. It's that I have Bitcoin and only Bitcoin is because Bitcoin is the only thing in crypto that makes sense to me. and everything else just doesn't.
I want to ask a question. I heard you talking. I was down there earlier. I heard you talking. Two things. One, it's hard to debate somebody that refuses a debate. I listened to your convo, but you were talking, and then you literally said you're not going to debate anybody if they don't like Bitcoin NFTs. Doesn't make sense to me. So there wouldn't be a debate there. Second question is, do you have NFTs? Are you in NFTs? Have you been in this space?
I have never even held a single Ethereum token, so I don't know how it's possible for me to ever hold an NFT when I've never even held Ethereum.
So how is it possible for you to give advice?
I wouldn't even know how to receive one.
So how is it possible for you to give any advice on NFTs and how Bitcoin should be the main supporter of NFTs? And if you have an NFT, it should be Bitcoin, and that Ethereum is going to go nowhere. Do you understand? So I'll introduce myself a little bit. My name's Travis, the Bullish Trader. I've been in crypto since 2016. I've lived off it since 2017. I don't have fiat anymore. I live in this space. I've made a shit ton of money in this space and NFTs. You say that Ethereum has no use. Well, Ethereum has the most use in the space right now.
I never said that. Ethereum certainly has a use. It's the greatest platform in the world for scams. That is a hell of a use case.
That's not what you said earlier, but okay. You said there was no use for it, and that eventually it's going to die out. Is exactly what you said.
Eventually it's going to die out because Ethereum has competitors. No, Ethereum created a use case. I don't agree with that use case, but Ethereum created a use case. I don't agree with it, and there are side chains on top of Bitcoin that do what Ethereum does, and eventually it'll all migrate over because it's just more efficient. It's actually has a decentralized underbelly.
Yeah, but that's you have one thing Bitcoin does, and you're strung out on it. So that one thing Bitcoin does, you think is going to change the entire crypto and NFT space. Like that's unrealistic, right? You were talking about facts earlier.
No, that one thing changes the world. That one thing is decentralization. Bitcoin is the only one that has it. That's the only thing that matters here.
What matters is you're up here, you're preaching to 2,600 people that what you're saying is factual, and it's not. You're wrong.
It is
and
factual.
I'm not here to tell you you're wrong. No, you're wrong. It's not factual. If you said something besides factual, I would have been like, okay, whatever, this dude. But you're putting a factual statement in something that's not factual. So you're wrong. You are wrong. And I'm telling you you're wrong, and you can like me or lump it, but it's not a factual statement. You are giving your opinion is what you're doing. You're not stating a fact. No, you're giving your opinion. What you said is not factual. I've been in NFTs since CryptoPunk, since an NFT wasn't even an NFT. All right. I know NFTs like the back of my hand. I've made hundreds of thousands of dollars in NFTs.
That doesn't matter.
Trading them like stocks, right? You were giving people an opinion, not facts. That's what you were.
Don't like the premise of the debate here. It's like you haven't used it, so you know it's shit, and I've made a bunch of money, so it must be great. These aren't good arguments. I also don't think that arguing about.
There is nothing to use. I've been the moment I'm old enough to remember sending text messages on what was that AOL? What was that first text messaging thing? I already forgot what it was.
MSN Messenger, I think.
No, before MSN.
No, it's talking about it was called AIM.
AIM.
Right, if you've ever sent an instant message on AIM, you've used an NFT. I'm sorry, it's digital data. There's nothing innovative in digital data. I don't need to hold an NFT to somehow change. Oh my God, this is incredible. It's all digital data. The reason why Bitcoin sparked, holy shit, this digital data is actually decentralized. That was the thing. I'm sorry, like I know how to send a text message. I don't need to hold an NFT for that.
I just
So
want
I've got
to be factual to our statements when you're not even in space, because you'll mislead a lot of people. And you know, we regardless of it's Bitcoin, ETH, we want people in crypto in general, whether it's Tezos, ETH. We want the masses here, no matter what. Doesn't matter what coin.
That we there is very questionable, right? Like it sounds like you're speaking for the whole world.
So I've got. I'm gonna jump into two questions, Tone. So Tone, the argument you've made.
I added Kirave as well. By the way, man, is my phone getting hot because it's charging, or is it because of the debate?
No, it's because it's charging. Listen, Tone, I've got a question for you, and I know Dennis had his hand up for a while as well as funding. Jim and Karavis just joined, so we'll give them the mic in a second, and David as well. But Tone, the argument of one blockchain to rule them all, it makes sense. You know, I've made the argument that I think there'll be one. I could be wrong. First, I disagree. Just for the record, I disagree that Bitcoin will be the blockchain and ETH has no place in the ecosystem. Obviously, time will tell, and other blockchains as well. I believe there will be multiple blockchains. I think the point of Bitcoin being the only blockchain might have passed. I could be completely wrong, and I haven't been in the space long enough. But the argument, I want to give you credit there, Tone, even though we disagree on a lot of things. The argument that one protocol, you know, you've used the example of one metric, you know, you said one PowerPoint plug, or, you know, you can use the argument of one language or one metric system. It's better for society, makes it more interoperable, makes it more inclusive and less tribal. So that's a good argument to make. So I want to agree with you there. And I said that could be one protocol that runs all metaverses. Now, whether Bitcoin is going to be that one, or there could be a few and each one will have its own application, obviously time will tell. But it does seem like it's leaning towards, a lot of the money is flowing into ecosystems outside of Bitcoin. A lot of the smart money that used to doubt other blockchains, and you've seen a lot of Bitcoin maxis as well, shift their opinion and say, okay, Bitcoin is still going to be there. Bitcoin's still going to have an incredible use case. But maybe there is a place for Ethereum and the applications there. But this is
that's okay. There is a place for Ethereum. I'm just saying Ethereum is not a decentralized platform. Like Ethereum will eventually, like, I don't see much of a difference between Ethereum and Microsoft. Like, it's fine. Ethereum could displace Microsoft. Like, I'm just saying that Ethereum is not a decentralized, it's a database. To me, Ethereum is just, it's not decentralized. And honestly,
would you say,
you're basically saying there should be no diversification in the space. It should just be one rules all, no diversification.
So I'm going to give the mic to Dennis and Funding Jim and David and Kiraverse. But so Tone, do you think that decentralization will take time? So while Ethereum, I would say it's more decentralized than Microsoft. You know, you say shareholders, etc., vote as a public company, but I would say Ethereum is more decentralized than Microsoft. I think you'd agree with this, but it's definitely not as decentralized to many. You can argue it's not as decentralized as Bitcoin, but do you think that it's heading towards complete decentralization that will take time?
No, Ethereum will only get more centralized over time because Ethereum's competitors are growing because they're more centralized, like Cardano, Solana, like every Ethereum's competitor that could eventually overtake Ethereum, they're going to do it because they're faster, cheaper, more efficient. What makes them that way is more centralization.
Centralization, yes. Yeah, that's a valid point. I think Ethereum could head to more decentralization if they play their cards right and if the merge works well. I know there's a technological argument against that, which gets too technical for me. I agree with your point that a lot of the blockchains that, you know, there's a trilemma, and we did a debate on this in the last space, where you have more speed and tends to lead to more centralization. But I do want to give the mic to David. Dennis, you've had your hand up for a while, so I'll give you the mic first before I give it to David, Funding Jim, and Kiraverse.
Yeah, sure. I mean, the interesting thing here is, you know, it's just like this idea of decentralization, or excuse me, of having multiple assets, or like kind of distributing your assets across a wide variety of platforms so that you can kind of hedge against what may or may not survive. But it is actually very likely that one protocol will survive as the decentralized global money of the earth, and that is because not only does money tend to gravitate towards a singular object or a singular type of commodity, it also protocols tend to gravitate as well. We've seen that with the internet. There's only one internet. Tone brought that up a couple of times. I think it's like such a critical point that there is only one internet, and we've built everything on top of the internet. Has a quote unquote better internet come along and displaced it in the first 5 years, in the first 10 years? No, we've just continued to build on top of that protocol. Now, could one day something come along and displace the internet? That is possible, but it's very unlikely that anything will truly ever fully displace the internet. Will other things exist outside of Bitcoin? Probably, yes. Some things will exist. They'll probably turn into companies, right? Like the funny part is during the ICO craze, a bunch of those guys that fundraised off the ICO, some of them are not dead. They just fully converted into real companies. So Ethereum, like what Tone is saying, is kind of just like a company. It's just like Microsoft, and it could become a company in a sense that it starts to market itself like a company with a stock ticker as a registered security. That doesn't mean that just because Bitcoin is the only true total global money protocol doesn't mean other things that exist today won't survive tomorrow. They just can't compete with Bitcoin in any way, shape, or form for that use case. And one of the things I really wanted to talk about, though, was this idea of like tribalism. It's something I've been thinking a lot about recently, and it's something that I talked about on David's podcast recently. So if you want to hear me get into it a little more, I thought I did a really great job of laying out the different, kind of almost like the different sects of Bitcoin, right? You have these Bitcoin moderates, you have the Bitcoin extremists, and you have everybody in between. You have folks that are kind of like, hey, I like Bitcoin, I'm Bitcoin only, but I don't want to like rain on your parade. I don't want to come down on you. Let's all be friends. Let's all be happy. And then you have on the other extreme of Bitcoin is toxic Bitcoin maximalism. It operates very much like, this is the easiest way to describe it. It operates very much like a political party. You have Democrats who have liberals, and then you have Republicans who have conservatives. And although they kind of actually sometimes hate each other, the moderates in the Republican Party and the conservatives, like they always battling for power. Same thing with Democrats. Liberals and moderate Democrats are always battling for power. The same thing is occurring with Bitcoin. You have this extreme toxic maximalism, and then you have Bitcoin moderates. And this is like, it's a political party. And to say that like this is a problem in Bitcoin, it's actually probably one of the reasons why Bitcoin is going to be more successful than everybody else, because I don't fundamentally think that you can have a movement, a global movement, without a highly entrenched body of folks who are willing to go to war for that protocol or for that movement. That's why Republican Party is powerful and strong, and that's why the Democrat Party is powerful and strong, and it's why the Bitcoin Party will be powerful and strong. And it really just comes down to this idea of like tribalism. Like you actually have to have a tribe to succeed. And I think the NFT people are trying to create that tribe, so to speak, but I just don't know if it has the ability to survive the way that Bitcoin has and thrive the way that Bitcoin has.
So I'll give the mic to Finding Jim.
That brings it back to where you say you have a decentralized space, right? Which is Bitcoin, is what you're preaching. And then you're trying to say that we have Ethereum, which is moving to centralized. What's wrong with that? What's wrong with diversification? Some people on the spectrum want centralized. They want to be safer. Maybe it's a way for people to own a cryptocurrency that has more than just the value of what the token holds. You can also get an NFT with it, quote unquote, and you can feel a little safer, right? I feel like there's two sides to this, right? You have people that want to stay decentralized, which I would love to stay decentralized. But then again, it's like I'm on the NFT side. I have a lot of assets in NFTs. So sometimes maybe a decentralized space I can play in, and then a centralized space I can be safe in. So there's always going to be two sides on that spectrum.
So I think you're actually getting to the really important point here, which is that I think most of this stuff actually is a centralized company, and at the very core of that entire argument is that you don't truly own your assets, because on a centralized platform and a centralized protocol, they can be taken from you. So you don't truly own anything. So if you want to live in that world, fully, yeah, that's the world that already exists. Fully endorse that world, but it's not a decentralized world, and you don't truly own those assets if that's what you're arguing for.
Yeah, I think
Everything
Bullish
you
just made the point that
KYC is centralized. 90% of the things everybody uses in crypto is already centralized. The moment you KYC, you're centralizing.
No, that's
No, it's not true.
Majority
KYC is
of
not a
things are
centralizing
KYCing
factor.
nowadays.
No, it's not true. No, it's nothing to do with that. No, but again, like we have to. This is why I broke up my NFT statements as two different things, right? I broke it up from the technological side. Is it immutable, decentralized? Do you actually own it? Versus what is the financial value of an NFT? So you have to separate the two, right? If I'm willing to have a debate, right? But is the debate going to be, is it the technological side of an NFT, or is it the economic, financial, collector value of an NFT? Those are two different arguments. And if your NFT that you're holding is built directly on top of Bitcoin, there's no reason for me to debate the technological side of your NFT. Your NFT is technologically sound. Okay, now we can debate whether your NFT should be worth $1 or $1 billion. You know, that becomes a completely different discussion.
So I want to just kind of sum it up and then see if Funding Jim can help me out. So Bullish, what you said here is, you talked about Ethereum being centralized and that being a possible solution is kind of the argument that Dennis and Tone would make, but that goes against the concept of true ownership, because NFTs allow you to actually own something without a central party saying you own it. And then that goes to the argument that I said earlier, is like Ethereum, you could argue now it's not as decentralized as we'd like it to be, and other blockchains are even less decentralized, arguably. So, but don't you see that it's kind of heading towards decentralization? It was more centralized a few years ago compared to what it is now. Vitalik played a much bigger role back then. And could it keep heading? Is there a possibility that Ethereum, in your mind, that Ethereum could keep heading towards that decentralized, towards that same level of decentralization as Bitcoin? Now, I will give the mic to Funding Jim as well to kind of see if you can help out with that point, man. How decentralized Ethereum is.
So here's my view. Here's how Ethereum can actually become decentralized. So Ethereum is trying to fork between the mining side of Ethereum and the proof of stake side of Ethereum. So the proof of stake side of Ethereum will be with Vitalik. So I have said it long ago. I should have probably trademarked it. There will be a ticker called ETW, standing for Ethereum Work. ETH will stay with Vitalik and proof of stake, and ETW is going to be the mining side of Ethereum. Now, when this fork happens, the ETW, the mining side, because the miners are going to try to convince all of those projects to stay on the mining side of Ethereum. If that side of Ethereum succeeds, that would be a decentralized Ethereum. As long as Vitalik is driving the bus, the only direction Ethereum is going is for more decentralization.
Okay, I think that's a
can I
point
ask this
that
question? Is
more
Bitcoin 100% decentralized?
I think
No.
decentralization is a spectrum more than it is a percentage.
Well, that is true, but also if that spectrum is at all things on Earth, Bitcoin is at 100% and everything else is below it.
See, that's my only issue is that, like, listen, Dennis, I collect Bitcoin at any chance that I get, but like to say that it's 100% decentralized, I would have to.
Well, that's why I
really disagree.
It's a spectrum. The point of decentralization is so that no one can co-opt it, so that no one can control it, and Bitcoin is way beyond that level. Whereas like
But
other
also,
protocols are
but
either
also there's no
gotta-
there's no definition of decentralization, right?
Then we
So
shouldn't.
like,
Then
like
Tone,
there,
then we
there,
shouldn't talk about it. Then like
no, no,
like,
but no, you can't talk about it.
But hold
You
on,
can't. You
Tone,
can't.
honestly,
You
with no
can't.
disrespect, I listened to you for like 40 minutes, and like no disrespect at all. I just wanted to ask you like a few questions because you're an intelligent guy. So like, from a standpoint of decentralization, like nothing can be 100% decentralized, and I don't think it should be. I think like, there should be parts that are centralized. I'm sure the layer twos are not fully decentralized, and that's okay. There's nothing wrong about that. I personally believe there's nothing wrong with that, and somebody needs to do maintenance, and it's fine. My thing is, people who are into NFTs, forget about the 10,000 PFPs, because I think everybody's stuck on the 10,000 PFPs and not looking at NFTs from a different standpoint. You have people that are creative; they can go ahead and create dope ass art, right? And I'm gonna use Times Square as one. I'm sure you're a New Yorker. I'm sure you've been to Times Square, and there are a bunch of guys that are just like going at it, pen to paper, paint, brush, and all, creating really dope art, right? So they're out there, they're getting paid like $10, $15 for a painting. Somebody sits down, if they can luckily get somebody to sit down, they can get $10, $15, $20 out of it, right? Art galleries, you paint something really dope. You put it up in an art gallery. The art gallery takes 50 to 60% of the profits when your painting is actually sold, and then take the 40% that you really do get, and then minus out all the costs, you're probably walking away with 15%. Here's a place now you're presented where Ethereum, I know it's you hate it, and I know it, and it's okay. Everybody can have a difference of opinion on Ethereum, but Ethereum presents a platform now where inspiring artists can now have an opportunity to showcase their work. Where it goes from here, who knows? Because in 5 years, who the fuck knows? But like, Ethereum right now has given people an opportunity to just showcase their art. Again, I'm not talking about the 10,000 PFPs. I'm talking about the individual artists, the Vestas that were here in 2017 promoting crypto art. Not talking about NFT, just promoting crypto art. I looked at Vesta as crazy. I said, this shit is never going to work in 2017. But
people was paintings on the wall. I don't have a problem with art.
But hold on, let me just finish. The value, though, at the end of the day, you said, well, it takes millions and millions of years, or millions of whatever, thousands of years to go ahead and finally get this value, right? But ultimately, it's up to the people. The people put value on stuff. Picasso didn't have social media back when he was painting. Like, it didn't get around the world for people to go ahead and see his actual painting.
I don't have a problem with. I don't have a problem with anything you're saying. I don't have a problem with anything you're saying. I agree with you. I mean, like, I don't see a disagreement there.
We're in a technological world where now people can see things instantly, and that's why value goes up extremely fast, and it doesn't take 1,000 years to go ahead and have that happen. And also the last thing, I promise you can have the mic. I would read more into IPFS and on-chain before saying like this shit, like, it doesn't work and it's saved on like somebody's, IPS and all that stuff, because I really think you're doing a disservice to
David,
those that really put it on the chain.
You conflicted. You conflicted two things. But you conflicted two things. Again,
I didn't conflict anything. I just broke it down for you.
No,
I think what Tony the point Tony's making is that
David, the value of art is subjective. Just because I think a $15 million painting is worthless because I don't see the value in it, that's subjective, right?
That's fine, and that's your
fine.
opinion.
I agree with you. Like, if someone wants to buy a CryptoPunk for $250,000 and I think it's worthless, that's fine. Like, I don't care.
100%.
Like, I don't care.
That's like you saying
but
the
that's
Mona Lisa. Listen. Let me put something out there.
I want to catch that on the point. So, like, I see something, and I look at something, and I think it's worth $4 million. You see it, and you like, yo, this is complete trash. Again,
that's fine. Again, you just
that's like saying the Mona Lisa is subjective. Listen to me. That's like saying the Mona Lisa is subjective and it doesn't deserve to be fucking shown where it's shown. That's literally what you're saying, Tone. Like that's you're basically saying that the Mona Lisa doesn't deserve to be shown where it's at. It should be here. You know what I mean? And that's what he's trying to explain to you. That's what David is.
I don't want everything to be built on Bitcoin. And I told this to Dennis. Like I have this conversation with all Bitcoin maxis, Bitcoin only. Like I don't want things to, like when I look at Bitcoin, I just want us to get out there and talk about Bitcoin in terms of monetary policies. Like that shit hits because that shit will open up doors for people who really need it. I'm talking about countries that really need to fix their monetary policies. Now, I don't want to hear about NFTs being built on Bitcoin now. In the future, great. Not right now. That's not what we need to have happen being talked about on MSM about Bitcoin building NFTs on top of it. No, we have the Ethereums and we have the Solanas of the world that can go ahead and take care of that shit. For Bitcoin, we need to just focus on this issue where it's like, yo, push that agenda that you guys continue to push. That's it. And educate the right way. Fuck everything else. You don't like anything else, Tone? Fine, man. I'm with you, man. You don't have to like it, man. But like, at least bring facts to the table. Not everything is a fucking scam, man. If business like Celsius, man, like I don't know shit about. Listen,
I said earlier.
I don't know what his agenda was, bro. But maybe sometimes just businesses fail. Like businesses just blow up because they're mismanaged. It doesn't mean that they're a fucking scam right off the bat. And I feel like that word scam is just fucking thrown around in the space like instantly. It's like half the people that are coming into this space have never even ran a business. Coming into this space have never even ran a business. And they are honestly trying to run a business and they just flop because they don't know how to brand. They have no marketing or real marketing. They think marketing is like paying somebody like 2 cents to go ahead and scream, buy this. Like 2 cents to go ahead and scream, buy this. There's a lot of like this word scam, like really, just let's think about it. 90% of businesses outside of this space, they fail because they just don't know how to manage one. You have
I gotta take off, but I gotta go. But I know, David, I do kind of agree with that to some extent. The word scam is thrown around quite a bit, and when it comes to this space, that sometimes it is just a mismanagement. I'm not saying that Mashinsky was a scammer or not, but a lot of times it's just massively irresponsible business practices in a nascent industry. There's going to be a lot of trial and error in this space. But that's kind of why I also stick to Bitcoin, right? Just Bitcoin only, because I just feel like it's impossible to know what's going to succeed. Bitcoin's
so Dennis, let's keep it. Why give it out to be central? Succeed. Like, why would any Bitcoiner ever give their Bitcoin to to Celsius? Like, what you're chasing?
I agree.
These ridiculous, stupid percents that that they cannot go ahead and continue to hold up on. Like, no, I would never do that.
How is that different than buying NFTs with Ethereum?
I'm gonna sign off though, guys. It's been fun.
I'll let you go, Dennis.
I appreciate it, Mario, David. Great to see you. Tone. See you guys
later.
So Tone, I think Tone, I'll support your point here. Is even though we disagree on most things, the point you're making is that you kind of agree with everything David said. You're just saying that NFTs are not really true digital ownership because they're built on a blockchain that's not truly decentralized. But for NFTs to be true NFTs, to have true digital ownership, and I want to give the mic to Funding Jim in it right after you, Tone. It needs to be built on Bitcoin because you believe Bitcoin is the only fully decentralized blockchain. would that be a good kind of argument to David? Because you agree on
Yeah,
pretty much everything David said.
From a technological perspective, yes. That, and I don't, well, like, it's crazy that we still have to debate this stuff because it shouldn't be debatable. And anyone that debating it just doesn't understand what a blockchain is.
Yeah, but you also, this is what I want to touch base earlier when you were saying something. Bitcoin's only as decentralized as where you have it. So if you're not keeping it in a decentralized wallet or an area in this space that keep, like, if you bring your Bitcoin to Coinbase, centralized. If you bring Bitcoin to crypto.com, you're centralized because you're KYC.
Tone would agree
on those.
Tone would agree. Bullish Tone would agree with everything you just said. I know Tone. He
Yes.
would agree.
So, like,
holding your own Bitcoin.
Bitcoin itself is always decentralized. You choosing to hold that Bitcoin with Coinbase simply means Coinbase is the holder of the decentralized Bitcoin for you. Bitcoin itself is still decentralized. Just because someone else is holding it for you, it just means that you decided not to actually have the ownership. It is no different than letting your NFT sit on some blockchain instead of in your own actual possession with your own private key. Do you have a private key to your NFT, or does OpenSea have it?
So I'll give the mic to
No, but hold on. What? But no, this is going to be like, how long do we have this room open for? I mean, Tone, like, again, like, half the shit that you said, I agree with you. Half the shit that you're saying is just a theory and an opinion, and it's not factual. That's my only problem. It's like, yeah,
so
you're like,
what do you disagree with? What do you disagree with, David?
Well, half the shit though, we can go into it. I mean, how long do we?
No, I mean, just from the statement of like your NFTs. If you don't hold your NFTs in your wallet, then it's not truly, if you're holding it on OpenSea, then you're holding it within a central entity, and you're still part of the centralized world, which is not against.
Physically hold an NFT on OpenSea.
Yeah, I mean, I don't know. I didn't get that part. Yeah, I agree with that. Like, you can't hold it on OpenSea.
An NFT is simply just a token that you hold like any other token within your MetaMask, which is decentralized.
I think
MetaMask is not decentralized. MetaMask is not decentralized.
Well,
that's a different argument. MetaMask would be a different argument, and I know where this is heading. But Funny Jim, I know you've had your hand up for a while. I'll give you the mic if you want. If you want to unmute.
Thanks for.
Yeah, there you go.
Can I speak now? Thanks for all the commentary. I've seen the back and forth, and there's a couple of points that I really want to highlight. One is, I don't think it's very honest on Tone's part when he talks about trading, and he's trading in and out of Bitcoin. He's trading into something else. What is this something else? Maybe it's Tether, maybe it's some kind of coin that's on a centralized exchange. I really don't know. I've seen some of his content in the past, but he is known as a trader. So he is going in position and out of position into something else. So when he says that it's going to be Bitcoin or nothing, or other things should come to Bitcoin and build on Bitcoin instead of other networks, it goes to the social consensus and the community as far as if something is embraced as a new innovation. I feel like the conversation over the past 20 minutes from Tone's position is that a monopoly is good, that a rotary dial black phone from AT&T is the only technology for communication, and everybody should be one particular political position, one particular dietary choice as far as what they have for dinner, and have such a narrow scope of what is this idea of money, or what is this idea of cryptocurrency. I don't think that that's very fair. I hear what David says. I hear what the other speaker that left says. And I agree to some that, my previous position is that we have diversity. We've been around 100,000 years as civilization. We do not speak the same thing. We don't have the same cultural norms across the planet. To have the naive thought that you're going to win the hearts and minds of 8 billion people to come to one particular thing and call it the blockchain of money is not honest. It's not an honest position. You were born into one cryptocurrency. I think that you were around, Tone, before Ethereum existed. And I think that you participated or watched the markets before Ethereum existed. It's very similar to being born in America as a Christian, speaking English, and not embracing the 95% of the planet that is not inside of the American borders. It's very biased. It's not honest, and I think you should be more genuine about it.
I think we could go ahead and talk about Bitcoin without shitting on other people. I think I spoke about this on multiple podcasts, on Fox, wherever they put me on. Like, we can go ahead and talk about Bitcoin without shitting on other projects. Like,
Tom, would you?
I heard that's not fair. I heard you guys bitching out about Richard Hart, and you talked.
When did I bitch out about Richard Hart?
That has nothing to do with it.
Hold on. When did I bitch out about Richard? What are you talking about? I never said
David
anything.
has.
So
David,
he's referring.
David,
other speakers.
Specifically with David, I talked before with David in a different Twitter space.
Okay.
And I remember that you were talking about the cost of a transaction to buy an NFT. And the conversation that you and I had specifically was that you didn't care about the price point of Ethereum in order to mint or redeem or transfer. If the price of Ethereum goes to $1,000 to do a transaction, then so what? That's a smaller club of people that can buy these things. So
that's me. That's me. That's personally.
That's you specifically, right?
Yeah,
but what I remember
I don't care.
is saying I remember saying something along the lines of a horizontal scaling versus a vertical scaling, and a horizontal scaling would be a fork. If you have a fork of Ethereum and it has all the system state, and you have duplicates of your exact token and your exact NFT. It's the same thing that Richard Hart was saying earlier on, is you can have horizontal scaling. If you like McDonald's, if you like the best steakhouse, why would you only have one in the world? It's the same position that Tone is saying. Tone is saying that there's one or nothing.
Hold on. I'm very blunt. If I attack somebody, I'm going to let you know. So, like, if I attacked Richard Hart, I tell him right in his face. He was in this room.
Right. You didn't attack him.
I didn't attack him.
It was before. I was saying that months ago I had a Twitter space with you specifically, and you were very
like we had a
disagreement.
If we had a disagreement, it doesn't mean that I attack somebody. I will name the name, and that's it. But like, listen, you know what?
No, I was referring earlier to Tone and the guy that departed. That the first opening statement was about Richard Hart.
I just want to say that we don't need to shit on projects in order to go ahead and tell everybody how great Bitcoin is.
I don't.
The reason why I say this,
it was more
say this real quickly, man. We will make Gen Z look at Bitcoin as old finance. Remember my words. I am telling you, in the next 5 years, if the education is done in a matter where we shit on every single thing that is created in the space that's legitimate. Forget the shit coins. Forget the bullshit that comes out from Third Wing with people pretending to be devs. I'm talking about people that are actually creating something that benefits our space. We continue to shit on that. We continue to go on to mass media and tell them that Bitcoin is not a cryptocurrency. Bitcoin will eventually die out just because people do not want to hear that nonsense. I'm telling you, like, take it for whatever it is. You can laugh at me, joke. But
I agree with your position.
I have a question. So, Tone, I have a question for Tone before I give the mic to Kira first. I've been waiting for a while. That kind of things. So, Tone, just one question: Would you say Ethereum has a place in the ecosystem, and you hope it moves towards more decentralization? Or, because I know you used to be against Ethereum a few years ago, but your mindset, your perspective of it has changed. At least that's how I see it.
I honestly, I don't care. Like, the reason why people are getting super upset here at my views on the world, I don't know why. I don't know how much
it wasn't your views. That you said it was factual. That's
go ahead.
Factual.
I'm not upset with you, Tone. I appreciate you what you do for Bitcoin. I'm not upset at you. I just disagree with you.
Go ahead. So, Tone, I'll give a chance for Tone to answer the point about Ethereum.
It's a fact that Ethereum is not decentralized. If it forks and Vitalik goes off and does his proof of stake, and the miners maintain the Ethereum chain with all the shit coins on top of it, if the miners maintain a viable chain after Vitalik and the Ethereum Foundation is gone, that becomes a decentralized Ethereum. Will it survive? I have no idea. Ethereum Classic, that split off from Ethereum, was more centralized than Ethereum run by Barry Silbert. But if Vitalik is gone and the miners are actually fighting with each other for hash share, and they get a bunch of new developers in, that suddenly becomes a decentralized version of Ethereum. Will that decentralized version of Ethereum survive into the future? I have no idea. My guess is it won't, okay? But it might. It has a chance. It has a fighting chance. Just like Bitcoin had a fighting chance to survive after Satoshi left. And it survived. And no other project in crypto, not a single one, has survived after the leader has left. These are just facts, okay? Now, do you need a decentralized blockchain for your NFTs? No, you actually don't, right? So again, what's the argument? Is the argument for the value of NFTs and whether they should be worth X? That's subjective. That's like art. That's like paintings. Fine. But if the argument is that decentralization is needed for this value, then it better be built on top of Bitcoin, because otherwise, you guys are all over the place. Either decentralization matters or it doesn't. If decentralization matters, then you may want to get it on Bitcoin. If decentralization doesn't matter, then fine. Then there's no argument here. I'm a trader. I don't care what you trade. People can trade horse manure for all I care and make money. People used to trade penny stocks and make money. I used to like trading NASDAQ 100 stocks. I never liked trading penny stocks. People that traded penny stocks can make big millions of dollars. Wolf of Wall Street was a penny stock king, okay? You can trade wherever you like. I'm not hating on NFTs and that they're worth millions of dollars and that people are becoming millionaires and billionaires from trading NFTs. That's fine. I don't hate on these people, right? The question is do you need a decentralized layer? And if you do, then it better be on top of a decentralized layer. But if you claim that you have a decentralized ownership of an NFT, no, that's bullshit.
But hold on, Tone.
So
even on Bitcoin, it wouldn't.
Earlier in your combo, you said that NFTs will not survive on Ethereum and that they should be on Bitcoin. That's what you said. So that's
I don't think Ethereum is going to survive.
So I'll sum up what Tone means. So Tone's argument, I think that was a fair way of presenting it. I actually expected it to be more aggressive towards Ethereum and other blockchains. So Tone's saying that he doesn't see Ethereum as decentralized right now, and NFTs, for them to be non-fungible tokens, and Kiraverse and everything, so I'll give you the mic right after this, but for an NFT to actually be non-fungible token, to achieve what NFTs are meant to achieve, which is ownership without a central entity, it needs to be on a decentralized blockchain. Now, Tone said Ethereum could head, and assuming it heads down the path it's heading towards now, with Vitalik leading the way, it will head toward decentralization. He doesn't care. If that happens, great. He doesn't believe it will happen, but that's a fair point to have. And if that doesn't happen, if Ethereum does fail and other blockchains are more centralized than Ethereum, having NFTs on Bitcoin, it's still the same concept. Nothing changes. It's on a different blockchain. Now, I'm a believer in ETH, and I disagree with that view, but I could be completely wrong, and I respect Tone's perspective. So I think you guys all agree more than you think. But Kiraverse, I know you've had your hand up for a while, and you guys are building, you're building a game, you're building a metaverse. So I'd love your take on this, what you have to say.
Well, yeah. So I'm currently right now in the Series A round, right? And I've spoken to most of the top funds in crypto about this exact topic and why NFTs are essentially, especially going into gaming now, right? Just because of the digital ownership aspect itself, right? You purchase an NFT, you own it, you have the rights to do with it as you want. It's completely decentralized, correct? What Tone was saying at first was that Ethereum isn't decentralized, so that's what I really wanted to argue in terms of that. But then he kind of just retracted that statement and said that if it does end up being decentralized, or if it is decentralized, then the use case for NFTs are correct, right? Well, I just wanted to give a little bit more perspective about the use case of NFTs in general, right? So a majority of these funds are investing heavily currently into gaming because why? If you take away the word NFT, it's simply just a digital asset that you purchase. The company sells it to you and you have it in your wallet. However, you cannot do anything with it. When you purchase it as an NFT, now you actually own basically the rights to it. You can sell, transfer, or buy it. It now becomes an investment vehicle, more so than just something that you purchase and use to play with, et cetera, right? And then now I want to bring it more into real world, for example, right? As NFTs grow, there will be way more, as it becomes more mainstream, it will act as a much larger vehicle in real world. Take it, for example, I'm a developer by nature, but well, as my career, correct? I've had multiple companies approach me, and one use case was this real estate company that approached me, and they said to me, "We want to create a software in which now we take NFTs and sell NFTs as a deed or a contract, where all the due diligence, the whole package of basically purchasing a property, from the assignment of contract to the deed of the house, to all the statistics of the home, the square footage, etc., is all assigned and packaged into an NFT and sold on the blockchain. A consumer or investor comes onto our website, purchases that, right? And next is only they basically purchase the whole packet online. They now own that assignment of contract. What's next is the lawyer details are presented to them. They go into, they go now handle it with lawyers, finalize
which is a great utility for NFTs.
Exactly. So there's just so many use cases that I feel like for you not to see it in terms of just mass adoption.
Can I comment on that? Can I comment on that real quick? Look, here's my problem. My one problem with everything you said is the use of the word blockchain. When you say on the blockchain, what I hear is on the database. Like whenever someone says we do this, and then it's on the blockchain, and all I hear is it's on the database. And my question is, what database? Is it your Excel spreadsheet? Is it SQL? Is it Oracle? Is it Ethereum? Is it EOS? Is it Cardano? Or is it Bitcoin? Right? Like what does the word blockchain mean? It has to mean something. There has to be some kind of technological layer. And whenever someone tells you it's on the blockchain, and I've been in these meetings all the time, and I ask them, really, what blockchain? And if they don't give me an answer, it means they know absolutely nothing.
So here I've heard what Tony's arguing is essentially he believes in everything you said, but he says built on the blockchain. The concept, and that's an argument that goes back many years before many people listening to this even joined crypto, is that what makes a decentralized blockchain? We've seen a lot of blockchains come and go. Now Solana's getting a lot of attention. We've seen EOS get a lot of attention. Cardano's still getting some attention. So, and we've seen many others come and go. So that's where the argument comes in. It needs to be decentralized to be called a blockchain. I would call Ethereum a blockchain. Tone, I don't think does yet, but if it does head in the right direction,
well,
we'd call it a blockchain.
Look, it's a blockchain. Ethereum is a blockchain because the world kind of started naming it a blockchain. But what does it matter? Like to me, a Google Doc is also a blockchain by the same definition. Like you can enter data into a Google Doc I put on online, and I know exactly what data you altered, and I could always reverse it, right? Like the word blockchain. The word blockchain came from Bitcoin code. There's 3,000 people in here, 2,500 people in here. So here's where the word blockchain came from. The word blockchain came from the code of Bitcoin. In the code of Bitcoin, Satoshi wanted to add a comment. For those that are not programmers, you put, 2 slashes, and you can write something to explain what that line of code is. So Satoshi used the word blockchain to explain how Bitcoin works. Bitcoin takes transactions, it compiles them into a block, and it sticks them on top of another block. And at first, when Satoshi was writing his, initial work, he actually referred to it as a time chain because Bitcoin is supposed to function on average every 10 minutes. It is an arbitrary word. The reason why the word blockchain became a thing is because Bitcoin was doing a lot of, nefarious things like Silk Road and funding WikiLeaks and Bitcoin had a bad aura around it. So they clung to another word. That word was blockchain. Now, there was a really awesome Google add-on. It was from probably 2016. I remember covering it on my YouTube channel. It was awesome. What it would do is it would literally, anytime you do a Google search and the word blockchain shows up in your Google searches, it would replace the word blockchain with the following sentence: a giant Excel spreadsheets on 1,000 computers. That's literally what that add-on to Google Chrome did, and it gives you a better understanding. So when people use that word blockchain all over the place, it doesn't honestly mean, it doesn't mean anything to me. Whether Ethereum is a blockchain or isn't, doesn't matter. Like, the question is, what is the reason why your data is on this blockchain? And what blockchain did you choose? I can call Ethereum a database. I can call Bitcoin a database. It doesn't matter. Okay. If you've worked with databases, you have an understanding of what I mean. If you haven't worked with databases, please just go to like Coursera or something, or some other free course, and take an MS SQL course. MS SQL is awesome. Like, just learn how to do basic database queries, basic, store procedures. Just learn how to work with a database, because that's all this is. And like, why using it? Most people just like create their own blockchain so they can create their own token, right? So just the word blockchain, it doesn't mean anything to me. What are you using as your data layer?
And I think I'll give you the mic, but I remember, Tone, do you remember the days, Tone, before I give the mic to NFTs, I remember the days where the argument was Bitcoin versus blockchain, then it became centralized blockchains versus decentralized blockchains, and each time you've got a different argument being brought up. But NFTs, I'll give you the mic.
Hey, look, I think it's a really interesting topic, right? And obviously, I mean, actually, this entire day has been unlike your other spaces, Mario. Tempers have never gone this high, I feel like. And, maybe it's refreshing to have it happen once in a while, but I'm surprised at how charged everyone is today.
It's been, we planned
because I'm fucking with their idea of value and money.
Yes,
no,
I
think it's just all
it's
around.
more opinions than factuals.
It's more of an opinion than fact. They're kind of just biased.
And there's almost 3,000 people in this room. How many new
Mario
people are in this room?
Right? Okay.
Yeah, I'll let you go, NFTs. But yeah, we're kind of clashing two different worlds. So I'll try to bring the Bitcoin maximalism and the thought leaders that have been in the space for a while that believe Bitcoin above everything, and Bitcoin is the blockchain to go to, which, by the way, everyone, I expected Tone to be a lot more anti-Ethereum. So it's refreshing to see that his take on Ethereum, and we agreed on a lot more things. If you go back and listen to this, and we get a lot of replays, we probably get like 70,000 people listening to this in total. If someone listens to this again and goes through the point by point, we agreed with more things. Dennis and Tone and Richard earlier, we agreed, and I know Tone, which is a very sensitive person to bring on board, and I took that into consideration. It was a very heated debate, but we agreed on more points than you'd expect. So I just want to say this to everyone, which I was really happy with. But go ahead, NFT. Sorry to take the mic from you.
No, anytime. It's your spaces. But I think what I was going to pivot to, but also focus on, that's been underlying in all of these conversations so far, is that I think there's room, and it makes sense to be bullish on multiple chains, but more importantly, to be bullish on centralization for some things, because there are many benefits to centralization, even in crypto, and also be bullish on decentralization, which Bitcoin obviously has in a way that others don't. And I think that sometimes we get lost in this either or argument, where really what we should be doing is figuring out how to allocate the types of assets and the percentage of our own portfolio into these different types of assets on different chains. And that to me is like a much
more interesting and intricate conversation to have versus one is good and one is not good, better than the other. Because at the end of the day, like if we pull that to equity markets, it's akin to having a conversation about, hey, I think consumer retail is better than the energy sector, and then saying you're going to put all of your money in one or the other, where the path to success is probably diversification.
Yeah, so diversifying your risk. Do you think Bitcoin's going to win and other blockchains won't exist? We'll hold a lot of Bitcoin. If you think other blockchains could exist, hold them as well. I think both arguments make sense. I didn't think I'd agree with as much as we did with Tone, but I feel like we're kind of past the argument of Bitcoin above everything else. I remember that was a strong argument in the early days, but I could be totally wrong. Yeah, KK, I think I see you have your hand up, man. Kiddo, you there? So KK, obviously got his hand up.
No,
Yeah,
I'm here.
you've got your hand up.
I think I had my hand up for something that Tone mentioned, I think fucking 25 to 30 minutes ago, but it's been just super educational and super valuable. I think the quality of the debate is really good. From what I've understood, Tone isn't necessarily against Ethereum, and I think anybody that's just like outright against Ethereum, like without going into the specifications of what they're against, I think that's just like pretty stupid, because there's a lot of market demand for utilities that Ethereum solves. There's a lot of market demand for utilities that Solana solves, that Bitcoin is unable to solve. So, like,
yes, at least I would say not yet. Even though I'm a big believer in Ethereum, Solana, other blockchains, I would say not yet. But at least Bitcoin doesn't solve for now, and only time will tell whether
Okay,
Bitcoin
sure.
will solve better.
But like the market demand is there. I think the analogies of, like, it doesn't serve anyone if we drive on the left side of the road or we drive on the right side of the road, like this duality and this mix. I don't think it really compares to blockchains and utility that much, because I think it's a different example altogether. But I also respect the fact that Tone is essentially from a trading background, so he couldn't give two fucks, as far as I've understood. For him, it's just what he understands, what he believes in, and what he can make a profit from. That's why, because of this, Tone, I want to ask you, do you only trade Bitcoin? And in your TA courses as well that you teach, do you teach traders to only trade Bitcoin? And do they only trade Bitcoin? I'd love to hear your thoughts on that.
No, so I teach trading asset agnostic. So personally, I don't trade that much right now. That's not what my current job is. My current job is like doing this stuff. But I am considering going back to trading. And if I was to go back to trading, I would probably go back to options trading of NASDAQ equities. I mean, that's my specialty. I mean, you trade whatever you can make more money in. So I teach trading asset agnostic. Trade whatever you like on a platform that you like. Now, the way I teach people how to trade actually relies on history and price charts. So I can't see how it would apply to NFTs. So there's nothing I can help you there. But whether a person chooses to trade Bitcoin or Apple stock or the euro versus the dollar, that's really up to them.
Or Ethereum as well.
Sure, or Ethereum or any altcoins.
Exactly.
It's just that the less liquid the asset, the more you have to be an insider of that space. Like I would never trade art, right? But an art dealer sure as hell can. In the world of non-liquid coins, the best way to trade them is to be in proper pump and dump groups, right? Again, is that ethical? Probably not. Am I going to be the world policeman and crack down on that? No, it's your problem. You're going to win, you're going to lose, right? So my problem isn't with people trading this stuff. My problem, you can trade Hex for all I care. My problem is people that have their Hex avatars claiming that Hex is the latest and greatest thing. That's where I get angry, right? Like, trade whatever you like. Just keep your mouth shut and trade whatever you like. Like my friends that used to trade penny stocks, they never used to say, Tone, buy into this company is going to be better than Google. And I'm like, really? What's the what's the price of their stock? Well, it's about 0.5 cent right now, but just wait, like I'm like, no, like if it's gonna be better than Google, why the hell is it worth 0.5 cent right now, right? So that's the problem. Like you never saw that before. You never saw people with avatars of these penny stock companies that no one's heard of, right? So that's where my problem comes in. It's the unethical nature of promoting something fundamentally that it isn't. But like anybody wants to trade NFTs, anybody wants to use NFTs, like for I'm not sure who you would use them for, but like I don't have a problem with that. Like if you profit on stuff, but it's this disingenuous nature of people. Like I promote Bitcoin for Bitcoin. Like I'll eventually stop. I'm getting a little tired of it, but I was never promoting Bitcoin as a way to get rich. I was promoting Bitcoin as a way to live a better life. And if Bitcoin succeeds, then obviously it has to go up in price. It's just how Bitcoin was designed. All right. But I've never promoted anything else. I'm never going to turn my avatar into some other coin because I'm holding that coin. I've never had an avatar of a Bitcoin logo, right? Like my avatar is me and everywhere. And
I think
promote Bitcoin
for
because I think it's better as a technology, financial technology.
I think for the April Fools coming up next, you should change your profile picture to an NFT PFP.
Yeah, that would be amazing. If Tony do this, that would be insane. I'd love to see the other Bitcoin. But Dr. Jeff, I think you've just joined as well.
Before I pass on the mic, the only thing that was mentioned that I sort of disagree with, everything else, like there's a lot of different angles to it, and there's a lot of duality of the yes and no, etc. Because I'm a non-binary person, especially when it comes to these type of debates. The only thing that was mentioned that I call bullshit on. It was mentioned from a very reputable person, very smart, very educated, but I think there's a bit of a misunderstanding there, is that Bitcoin is helping the bankless bank. So people in, let's say, Africa, people in whatever other remote location. I partially disagree with that because from my observations, they're using stable coins. They're not holding fucking Bitcoin because of the volatility. They might get paid like $100. Tomorrow it's 50, the next day it's 150, etc. So that's the only thing that I wanted to add myself, but feel free.
I think I'm gonna say that people are using Bitcoin in Nigeria and other third world countries where their monetary system's all fucked up. And I know the volatility's there, but I know more people that tell me that they use Bitcoin to go ahead and send money over to family members than stablecoins.
But why? Like, why? I'd really like to entertain that thought. Like, doesn't it make sense to just go to stable coins because you know your money's going to be there tomorrow? I mean, of course, unless fucking Tether collapses, but it just makes more sense.
It's just you just named it. Like, look what happened to all the stable coins. Let's look at UST, Algo stable coins went to shit, right? People look at it and say, okay, fuck it, I'm just going to continue to receive things in Bitcoin, and I'll deal with the volatility there. But all the stories that I hear from third world countries or sovereign countries that are fucked up right now is, yeah, my family members send me Bitcoin every single month to go ahead and get by. And now sooner or later it'll become where people will stop spending it and they'll start hodling it because you'll have an expert that goes on and says, well, this shit's going to $500,000. And then they'll get the mindset of hodling instead of using it.
Another point as well to make, KK, remember, stable coins, the ones at least that are operating, are all centralized. USDT, USDC, and the decentralized stable coins, the experiment hasn't worked yet.
I'm not debating the aspect of centralization or decentralization for sure. That's like it's very obvious. I'm just debating the aspect of volatility. As a matter of fact, I'm actually super interested, so I'm gonna post a poll right now on top because I actually want to understand this and just see if I'm wrong as well. Whether you essentially trade in stable coins or BTC, I'm super interested.
So while you put that poll up,
what makes money.
Hey Jeff, thanks for joining us, Dr. Jeff. Hey, Dr. Jeff, I don't know at which point you joined, but I've been at this in this group for like over an hour. So I already explained like the whole NFT thing. So I don't know how much of that you caught, but yeah. So because I'm curious, so if you can let me know at which point you joined the conversation before you start, that'd be great.
Yeah, hey Tone, hey Mario, thanks for having me up. I've actually been listening. I've been listening for like an hour maybe, so I heard actually most of it, and didn't know if I wanted to come up. I actually can't stand arguing with people about this kind of stuff, but that's just kind of my personality. So I'll just jump in here. I don't know if that was my intro, but just hey everybody, I don't know a lot of you guys, but here's my take on it, and I don't know if I'm going to make enemies just by saying this, but my point of view is that Bitcoin and the majority of cryptos literally have nothing to do with each other. And so I think trying to debate which one is better is just completely pointless. And a lot of people don't like that. I hear people all the time doing rooms on like Bitcoin versus Ethereum. Which is better. It's like comparing like a bike versus a spaceship and which is better for traveling. It completely depends on everything. And one Bitcoin, right, is simply better money. That was the problem that needed to be solved. We needed a stable, an appreciating store of value that was scarce, decentralized, politically neutral. And that's what Bitcoin was, right? It's like inventing the wheel. We got it. It's better money for the world. I think of basically all of the rest of crypto as having nothing to do with that. They're basically tech platforms. Ethereum is a great example, right? It's basically a jack of all trades tech platform that you can do tons of different things with. It's not money. It's not trying to be money. It has value, but it's not money. It will never be the world's money, nor will any of these other things. Cardano, go down the list. None of that matters. And so I just think that comparing the two of these things is just basically a waste of time. It doesn't really help anybody. It serves nobody, and it doesn't serve any great purpose.
By the way,
Jeff, I think you've made a really good point.
Back to the poll that I was talking about. Like 50 votes, like 50% stable coins, 40% Bitcoin, give or take.
Oh, fascinating. So Jeff, just goes back to the point. I think you've made a really good point. Like comparing the utility of Bitcoin versus the utility of let's say Ethereum, it just doesn't make sense. And that comparison might have made sense in the early days when Ethereum was trying to find its, was trying to implement its utility, and Bitcoin had the opportunity to offer that utility. But it didn't, and people opted for Ethereum. So would you say there is a place for Ethereum, and it has the potential to decentralize and be a decentralized, and I'm going to use the term blockchain, for the applications that it has right now?
So here's my take on this is so again, getting back to it, right? Bitcoin is just better money for the world, and that's it. It's competing with government fiat currencies. It's competing with gold, silver, and then a handful of small proof of work cryptos like Litecoin, Monero, Dogecoin. I think you can compare Bitcoin to them because that's an apples to apples comparison, and you can decide which one is doing better than the other one. Ethereum and all these other things, all of the rest of crypto, I think will always be with us. I shouldn't say that. Hold on. I think all of crypto will always be with us, and it will grow. Why? Because people love to speculate. They love to be entertained. They love to play video games. They love to do art. They love to do all that kind of stuff. So that kind of stuff definitely has value to people. But again, comparing those two is sort of like comparing like a baseball card shop dealer with somebody who works in the U.S. Treasury. Like they don't really have much to do with each other. And so I think they do have some value for some people. But again, we're just talking about two different things. We're on two totally different planes.
Right. But hey,
I
Jeff,
agree.
Can I? I'm gonna intervene on this one. So I agree with everything you say, obviously, but now that Ethereum has, and I really hate myself for saying this, now that Ethereum has proven that there is a use case to building all this insanity tokens on top of it, whether they're ICOs or NFTs, Bitcoin had to eventually compete. And we now have Bitcoin side chains like the Liquid sidechain, RGB, Rootstock, and what's the other one? Stacks. And I listed them in order of the order that I think that is optimal. Like I would choose Liquid over RGB, RGB over Rootstock, and Rootstock over Stacks. And these platforms do compete with Ethereum directly. And they are probably a little more centralized than Ethereum, but they are anchored into Bitcoin, which is obviously more decentralized than Ethereum. Now, speaking of these platforms versus Ethereum is a real conversation. And I feel that if the NFT space wants to be taken seriously, that there is some element of immutability. They need to start looking at these Bitcoin sidechains as their database anchor.
Yeah, Tone, I think you bring up reasonable points. And I think a lot of the things you see in crypto currently, a lot of the tech advances and use cases will eventually make their way onto Bitcoin as the Bitcoin base layer. Definitely possible. I think that's a good point. And by the way, coming back to Ethereum, I'm not convinced Ethereum is going to make it. Not because it's competing with Bitcoin, but because it's, as a tech platform, is competing with all of the other base layers that are trying to be bigger, faster, stronger, cheaper than Ethereum, right? So Ethereum has everybody coming after it and gunning after it. I think its days are numbered.
Yeah, but that's no different than
Bitcoin side,
Gucci and going
including
to
the Bitcoin
Chinatown
side.
to grab a purse. That's like comparing grabbing a Gucci knockoff of Chinatown.
Yeah. So when you say like trying to,
there's always going to be the good one that costs more, and there's going to be the one that's going to be cheaper. I don't think one's ever going to outweigh the other. Ethereum's going to be where people that have money go. They don't care about the transaction fees. They don't care about this. They don't care about that. They have money. They know they can spend it. So they're going to
wait.
That's a super oversimplification.
Yeah. Can I yes. So here's one of the hypocrisies that I really so a lot of people that are saying that, oh, you're crazy, you think Bitcoin is going to be the only one, what about competition? I mean, we had David, you were one of the vocal advocates of this, about this multi-blockchain world. But then most of the people that say that,
I didn't say that.
No, but okay, fine, I shouldn't pick on you then.
He said he believes in diversification. That's what he said.
Right. But also the majority of these people that believe in this diversification, the majority of them are believers in Ethereum. And when you use their own logic to challenge them
on
Ethereum, they start to get very upset.
I don't believe Ethereum right now is in any position to go and overtake Bitcoin. And for me, it just comes down to
No. Okay, my statement was misunderstood. My statement was misunderstood. It was that the people that believe in this multi-blockchain world also have a hard time believing that other chains are going to completely overtake Ethereum, and Ethereum can still trend towards zero. So this is this is the issue that I have with a lot of the people.
I don't disagree with you there, actually. In fact, I do agree with you that sometimes when we hear the argument, it's only with Ethereum. I started out on Ethereum, but a lot of my holdings are on Solana now. And it's not just for the cheaper transaction fees. I mean, frankly, I could care less about the cost of the transaction fee for myself personally. But I think that what it does is it enables different types of utility, whether that's on NFTs or in DeFi. On Solana, you're able to have more economically viable utilities that wouldn't be viable on Ethereum.
Oh, I have a great question for you. I'm genuinely curious. Do you feel that Solana is more centralized than Ethereum? And this is an honest question. It's not like some catch-22.
Yeah, we had a debate. Yeah, so we had a whole debate about it last week. I'll let NFTs answer, but it's a very controversial question.
Well, I'm specifically asking his opinion on it because, as he said, he moved over from Ethereum to Solana, and I'm curious if he feels Solana is more or less decentralized than Ethereum, and whether that matters.
So right now, it is more centralized than Ethereum. However, I don't think that will be the case long term. In fact, I'm of the belief that their new phone is going to actually be a node. having said that, I don't have a problem with centralization at the beginning of a technological, um, whether you're going to call it a chain or a company. Let's call it a company right now, or a new endeavor. I think centralization actually brings some really important things during the nascent stages, and then decentralization is something you strive for in time. Being nimble and being able to pivot and having a core team be able to upgrade and to make the necessary partnerships with builders on the chain for it to flourish and gain adoption during its nascent stage is actually extremely important in my opinion. And we saw that with ETH too when it started. And then I think the goal over time is to decentralize. So with that in mind, I think that as time goes on, Solana will actually become more decentralized than ETH.
Let me just comment on that real quick. So I agree with you moving over from Ethereum to Solana for the reasons that you mentioned. It's faster, it's cheaper. But I don't agree that Solana will be more decentralized over time. I don't believe that these projects become more decentralized over time. I believe that there's a very, very small window in the very early stages of a project where it could be left to its own devices. Like, for example, the story of what's that? Like, there's Mowgli and there's one more, like the Kid in the Jungle, right? So, well, what was that?
Talk about the Jungle Book.
Yeah, the Jungle Book, right? So, like, that kid grew up on his own in a like decentralized world, basically, of the jungle, but he didn't start living that way, right? Like at some point, like he didn't start doing it the moment he was born, right? Like it had to take. There was a very small window where his parents would have dropped him off, and then he had to survive that very, very small window. And the if it becomes these, if you let that kid go into the wild super early, there is zero chance of survival. If you let him go late, there's no way he'll survive either. There's that very, very short window, and I think Solana is way past it already.
That's a fundamentally very important argument, because what you're saying now is that Bitcoin took steps in the early stages to ensure it's decentralized, where no one knew who Satoshi is. Whereas, so what you're saying is that the concept of, and that's a very common concept and discussed a lot among VCs, you know, they talk about games starting as centralized games, or metaverses starting as centralized metaverses and heading towards decentralization. What you're saying is that the concept of starting in a more centralized structure and then moving towards decentralization, I think Tezos were the first to really discuss that, you know, very, very publicly and get the debate on, is flawed, because I think it's a very important argument. Many people won't understand how important of an argument this is, because if this is true, then any ecosystem that comes up now that exists right now that's more centralized than Ethereum, which some will argue is everything except Bitcoin, cannot compete with Ethereum. And you're also saying that Ethereum cannot succeed versus Bitcoin as the blockchain for you know, various applications.
Yeah, pretty much. But yeah. So look, the decentralization is actually not needed for like 99% of things. Decentralization is great for digital possession. That's it. Like, look at Bitcoin. It draws a shit ton of energy. It's slow. It's expensive sometimes. It's written in an old archaic language. It's impossible to make any changes. That's what gives it strength. That's not a weakness. That's its strength. The fact that Bitcoin can't adopt really quickly to anything because it's so hard to alter the code. That's its strength. And you have to build on top of that. Look, the internet sucks. We have no privacy on the internet. It's terrible, but it's what we got. And you got to build tools on top of it. To make it as best as it can be, because it's not going anywhere. And not only does Ethereum have a lot of competition from other blockchains, sure, I use the word. Not only does it have a lot of competition from other blockchains with their own tokens, it has a lot of competition, or about to, from Bitcoin side chains that don't even have tokens. So you don't have this, perverse economic incentive to use the chain with a speculative token. That's a huge advantage for these projects as long as they have enough developers to keep them secure.
So, but adoption is one of the weaknesses for Bitcoin right now in terms of replacing Ethereum through sidechains. What would it take? It would take a catalyst of an event for developers and creators and entrepreneurs to move from Ethereum to a Bitcoin sidechain, such as Bitcoin completely failing or heading down the wrong path.
Well, yes and no, right? Because there's this inherent assumption that all this stuff that's built on Ethereum has some kind of a real world utility. And I'm about to say something controversial because it really doesn't. I'm a trader, and I will be the first to tell you, trading an asset and making money is not real life utility. Like the use case of your token has to be more than I can trade it and make money. So what has Ethereum actually built that is fundamentally needed in this world other than for speculation and trading?
Can we just say the NFT market? I mean, like, and just having the NFTs on Ethereum is, forget about the art. So let's escape the art now, and I'm gonna just focus on what we have pinned up here. Alfa Romeo bringing in NFTs to embed them into their vehicles. Like, that is a real world utility, man. That's it appreciates the vehicle. It has that use.
No, but I disagree with that. Like, that's
but how can you disagree with it?
Speculative trading.
I don't. It's not trading. I'm not. There's no trading involved. It's a technology that is embedded into the vehicle. There's no.
All right. So what is the value of an art on your wall? I think I might be the only one that will give an answer, right? So you buy a piece of art and you put that piece of art on your wall. I don't think that's all that different from an NFT, right? You buy a Picasso, you put it on your wall. What is how does what is the world benefit? Like, what is the real utility of that?
But you're talking about a painting, Tony. Tony, you're talking about a painting. I'm talking about, you asked for the technology and use case, and I told you that forget about the artwork. Then let's take NFTs and put them where they belong. So, like, I gave you one use case, which is into vehicles. You get rid of Carfax because now you have an NFT which is embedded into the vehicle, and it will tell you if there was an accident on that shit or not, if somebody rolled back the mileage on it or not. There's a lot of things that I can go ahead and lay out for you.
But we had that.
No, we
but
don't
that
have
use
that.
case existed before
We
Ethereum.
don't.
I don't see how it's different.
We don't have it. Absolutely, you don't, because
I
Carfax
don't
is not
understand.
a real use case. Carfax
No,
can be
but
manipulated.
but so can that. Like I'm sorry,
No, it can.
blockchain.
How can something like that be manipulated?
What do you mean? Like you're talking about blockchain voting here, right?
No. How can something that is put onto a blockchain be manipulated?
I can
it's
put a lie
open
into
for
the
public.
blockchain. A lie in the blockchain doesn't make the line true just because it's immutable. Like
Tone, like, if you want to win the battle, fine, win it. I mean, you can have the win, but I'm telling you, like, NFTs are effective. In the future, you will see, like, when even in real estate, in titling, it will get you away from this whole Picasso shit, the Mona Lisas, the 10,000 PFPs that are created, and you will see the technology will make it easier for us to all live. It'll make transactions happen within seconds rather than
let me
waiting
agree with
4
you.
to 5 days.
Let me agree with you for a second. Let me agree with you for a second. I generally disagree, right? But if I agreed with you, let's say I agreed. If I agreed, I would only agree if that data is on an immutable blockchain. And to me, the only immutable blockchain in the world is Bitcoin. So even if I did agree with that, it would have to be on Bitcoin because it's the only one that's immutable to me.
So let me ask you a question, Tony. If it's on Bitcoin, then NFTs do work, right? Then the concept of NFTs work.
I don't understand what that means, right? Like I don't
So
have a problem with that.
the concept. So I'll rephrase the question. So Tony, would you say? And I think your answer will be yes, because we kind of touched on this earlier. The concept of digital ownership, having your ID, on the blockchain, on the, let's say, Bitcoin. In this case, the Bitcoin blockchain, or having in-game assets on the Bitcoin blockchain. Would then NFTs have a use case that could improve society?
Potentially, right? Yes, because now you may actually hold something that is anchored into an immutable layer. Again, if it's built right? Like I'm just saying, like just because you built your NFT on a Bitcoin sidechain doesn't mean that it's subtly more immutable than the Ethereum version. You could be build it on in a crappy way. You could build it on a crappy sidechain. That's not automatically makes it amazing, right?
Yeah, but I'm going off of what you're saying is like, if you build it on a Bitcoin, then it is amazing.
It depends if that's amazing to you. I don't find that use case all that revolutionary. I don't find that use case all that important, but that's an opinion. That's my opinion.
If your car can appreciate by having an NFT embedded into it, because most cars, not right now in this current market, we understand what's happening, but in the previous market where cars depreciated, you lose $5,000 when you take a new car off the block, right? What if you have an NFT embedded into it, and in 3 years your car really does appreciate in value instead of continue to go ahead and depreciate? How can you not see the value in that?
So I see the value in that. I absolutely see the value in that. I just don't understand how a decentralized layer is going to be that much better.
So I'll give you this.
Then say Carfax itself. Like what is wrong with Carfax? Do you really think Carfax is altering data?
Because
David doesn't care whether it's
I'll give you different arguments. So David, I know you've got your hands up. I'll give you the mic. Yeah, sure. Go ahead, man.
All I want to say is Carfax can go ahead and be changed up. You can't see if somebody rolled back their miles, but if it's done with you can't do that shit with an NFT embedded into a vehicle. Like, it will not happen. Like,
Tone, I think David here doesn't quite understand the difference between a decentralized and centralized entity as the way you see it. So I think that the root here above everything else, these conversations, I've been in here for like a little over an hour. I think the conversation here is rooted in how BTC started, which is why you vouch for BTC, Bitcoin, Tone. And I think the people who are vouching for NFTs on this platform, Ethereum, is arguing a completely different case. For them, they're saying that NFTs are great. They have a lot of use case. I don't think you're disagreeing with these people, Tone. I think you agree with that. It's more so the foundational layer of these platforms, which is the currency itself, right? Like anything besides Bitcoin, and I've launched an NFT before, and I'm also a Bitcoin fan. And I would say that I think the thing here that I think needs to be communicated is the way that Bitcoin started and the way and where it is today. It is completely decentralized. There's no leader. There's no one who can influence it. There's no one who can fork the code. It is governed by the technology itself. It's like the technology is the god. It is the currency. Ethereum and every other chain is centralized. It's like having a video game on your video game app on your phone, and it has its own currency. That's essentially what Ethereum is. It's a game, and it is governed by people. It's governed by the founders, and eventually everything that is centralized is bound to become corrupt, because that's how humans are. Bitcoin is the only thing that is incorruptible. Nobody can change the code. No one can change it. And I think that's the main point here. Everything else, it can survive. You can run your Cardanos, you can run your Ethereum networks, you can do all that. You can make your money on it and convince people that there's utility, and there probably is. But if you're talking about currency itself, I think what Tone's point is that whatever's built using the currency of Bitcoin is the most sound, it's the most ethical, and it's you can't manipulate it, much like our current fiat system. So I just wanted to say that.
No,
what does currency have to do with what I just went ahead and put out there?
No, so
NFTs.
So what the argument is being made here? So David, not Troy, David. So I have my AirPods don't work anymore, but David Gochstein. So what the argument being made here is this a fundamental argument that's really difficult to answer now? Will Ethereum be decentralized? Because everything doesn't matter.
Mario, I want to get back to a specific point, the odometer thing. I just want to comment on it real quick. Okay, so fine, that's a use case, right? There is always a use case to make sure that mileage on a car is not rolled back. And what the argument that I was trying to make is a decentralized entity to track that is not necessarily all that innovative, because there will always be a centralized entity that cares a lot, so much that this doesn't happen, that their entire reputation is on it. For example, in the case of the odometer, when the government of the West starts taxing you for the amount of miles you have driven on your car, they suddenly become very incentivized to make sure you are not able to roll that back. And they don't need NFTs. They don't need a decentralization. They just got to tell the car manufacturer to make sure, because they're taxing you on it, that it's impossible to do. and it will not be possible to do. Okay, so what I'm saying is that these use cases are not all that innovative, and moving it to a decentralized blockchain is just using unnecessary energy.
So I would make an argument there. So maybe the use case of the car is I'll make a different use case. Let's look at your medical records or deeds to a house or ownership as a concept. There's many countries where governments are not even able to keep track of who owns what. I've seen that in a lot of third world countries. Or your medical records. I travel the world, having my medical records immutably without a central party that can get hacked, for example.
No, that's a bad idea. Oh, no, that's a bad idea. That's a horrible idea. Because if your medical records are just like house deeds, and again, we've discussed all of this back in like 2014, 2015. I was just rehashing everything we said 7 years ago.
Hey guys, I just want to say real quick, it was a pleasure to talk to all of you. I'm just going to work out. I don't want to just skeet out here and act like I'm leaving because but
all good, man. Hey, Dave. I got you. I'll come on your podcast. We'll continue the conversation.
That would be a great thing to go ahead and discuss Bitcoin. I'm all about Bitcoin. I want to see it succeed. I don't know where the narrative went to I don't see, at the end of the day, I don't see Ethereum playing in the same ballpark as Bitcoin. But I'm more so I appreciate technology, and I don't think we, as Bitcoiners, we don't need to go ahead and shit on everything. That's really my perspective, and God bless everybody. I just hope we all win. That's really it.
Later, David.
Appreciate it.
David and I have crossed paths before for a while now in this space.
100%. And so love, man.
So okay, so let me just squash the use cases of medical records, real estate, and also voting on the blockchain. So real quick. You don't want that. You really don't. So voting on the blockchain is easy. You put a line to the blockchain, into the Bitcoin blockchain. It's now that set is now immutable. It doesn't make it true, right? So sticking blockchain into the supply chain is actually meaningless because you can still stick a lie into that supply chain, right? So you're better off letting you can use a centralized database for that. It literally serves the same exact function. Okay, next, the medical records and real estate. You don't want that because what the Bitcoin's greatest asset and its greatest curse is that I can lose my private key or I can send my Bitcoin to someone else and I've now lost possession of it. You don't want that with your medical records, and you don't want that with your property titles because then all of a sudden your neighbor accidentally owns your property. And if you say, no, there are backups for that not to happen, then I will tell you, then it's not a decentralized database. So you don't.
They're coming up with decentralized solutions to this, like decentralized multi-sig wallets. Without getting too technical for the audience and even for myself, there are solutions to the. So you're mentioning issues like the voting one. Okay, so there's the Oracle issue of the information getting onto the blockchain doesn't make it true. But at least once, so this is still a problem that needs to be solved. So blockchain is not a utopian solution to everything. But at the same time, once it is on the blockchain, then it cannot be altered. So if we have less problem right now in voting, we have the problem of the information getting into the database, and then we have the information of the database itself controlled by a central entity getting altered. So at least we solve one of those problems. Would you agree?
Yeah, look, you can put your medical records through a multi-sig so that there is a way to access them, say as you're dying, or you got hit by a car and you're unconscious and someone has to access your medical records. So you have a key, someone else has a key, and now there is a third party that can access that second key if you are incapacitated. But then you are not exactly fully control of that data now, are you? And again, if you are going to do any of this stuff, it boils down to doing it on Bitcoin, because doing it on any other blockchain, A, there is a higher probability of that blockchain just imploding and going away. And B, there is a higher probability of the masters of that blockchain simply rolling back and changing your data. I'm not saying those probabilities are 100%, but both of those things are significantly higher than Bitcoin, and now you got to multiply them together because they are two different risk factors. One, your whole thing just dies, and two, more people have the ability to change shit.
All right, so I think I've got someone in the audience I want to try to bring up, and if it is true, by the way, but while bringing someone up from the audience, it's going to be a bit of a surprise. But just a quick question to Jeff. I know Jeff, you're with us as well. Jeff, what is your take on this point? And then I know a lot of people are waiting to announce some winners, so I'll do that right after this. But Jeff, what's your take on the use case of NFTs? So Tone, what you're saying is that blockchain, which is NFTs, essentially ownership on the blockchain. Blockchain is not a solution to everything, and I know that's a debate we've had for years, and it's not a utopian solution to the world, which I agree. But I think you also agree there are great use cases for NFTs, and there's problems if we fix them. NFTs could have great use cases. Jeff, are you in the same boat, or are you more pessimistic on the technology known as non-fungible tokens?
No, I think NFTs definitely have utility, and they definitely have value. I think the whole point is, once again, that they don't have anything to do with what is money, right? Just because something has value doesn't make it a money for the world. And so again, trying to compare Bitcoin with NFTs to me is stupid and fruitless. But will NFTs someday come onto the Bitcoin blockchain? Quite possibly. I think it's definitely possible, and then that will give them, you'll be able to value them based on what it's worth in terms of Bitcoin. So yeah, I think that's the way the world's going, and kind of what we talked about before. Like, I think a good example is, my boys play video games, and and if they develop some super duper bazooka that just a flamethrower and shoots out death rays and kills aliens, that's worth a lot to my teenage boys, and it's literally worth nothing to me. And so, but there's always going to be a subset of the population that wants that kind of utility and wants to be able to transfer that kind of value. So definitely they have value, definitely they have utility, but they're not money and they're not Bitcoin. So we don't need to compare the two.
Hey, real quick, that was well said, Jeff. Yeah, and I believe that NFTs mostly have collector value. And while I don't understand why that collector value is so high in real time, that is, of course, a debatable. Hey, to each their own. But real quick, there is a utility to putting art on your wall that no one really thinks about. When you buy a unique piece of art and you put it in a place, you are actually depriving other people from being able to see it, like at a museum. So that is an additional utility for art that no one really thinks about often.
And Tone, before I announce some winners, if you think that ETH, you don't think ETH has a chance to win, but it does have. There's a possibility that ETH does get decentralized if they make the right decisions.
I don't know what win means. Like, I'm sorry. Like, I don't
not
know.
Win, sorry, win as in not win as in achieve what they're hoping to achieve. So that's what I mean. Not win as in be Bitcoin.
No one knows what they're hoping to achieve. Not even Ethereum, like developers. You ask 3 different developers what Ethereum is and what it's for, and you're gonna get 3 completely different answers.
So let's say they achieve decentralization.
Ethereum tries to do everything.
So if they try to achieve decentralization, a platform for people to build on, if they achieve that, would it make sense for you to bet on it as a possibility to hedge your risk? You don't need to bet on it because if you're all in on Bitcoin, Bitcoin obviously has the highest likelihood of always being there.
The only way they can achieve that is by walking away. You can't. Like, the only way they can achieve it is by walking away and seeing if it survives. Like you can't achieve creating what do you call it, Mowgli from the Jungle Book, right? You can't achieve to create him. You have to just throw him into the jungle and hope he survives. And it will be a once in a million shot, and there ain't going to be another one. not for multiple generations, right? And if another person just tries to go and learn his skill set, he will never be able to compete. Like that's decentralization is it just happens. Like you can't create it.
Funding, Jim, you've got your hand up, man.
A couple of the topics were I asked earlier about trading, and it's not about a specific person, but if you do believe in Bitcoin, then you hold a position at an all-time high. When you see market sentiment waning, then you usually trade into something else. Maybe it's dollar, maybe it's a different kind of coin. So I don't see that on the Bitcoin network, and I still think that that's because it's a cultural fence that people, entrepreneurs over the years have tried to build something on Bitcoin, and the culture has been toxic for it when it's been maximalist. Outside of that, inside of Ethereum, of course, there is Uniswap as an example of a DEX that is a smart contract. And there are stable coins, whether they're issued by entities such as Coinbase, issuing out USDC or TUSD from Stanford or Gemini dollar, or anything else, right? That's considered a stable coin, whether it's backed by dollar or some kind of algorithm kind of, hocus pocus. But I don't see those kinds of things. And I just want Tone to comment about, do you think that that has to do with the product of Bitcoin, the nature of Bitcoin itself, or of the cultural fence of the supporters? Because it's been around 13 years. Why is it being built on other blockchains if you don't value them?
I'm sorry, can you just repeat that last question?
I was just asking, why is it that these things, these inventions or innovations or shit coins or worthless NFTs, why are they being built on other things outside of Bitcoin today?
In other words, so Bitcoin had its had its chance to be in, to do what ETH is doing, and didn't miss that chance, and why?
Okay, so I answered that in one way. So obviously, Ethereum was first to market on that by several years. Bitcoin has only recently built layers to compete with Ethereum. And as I mentioned earlier, no one really wants to build on those layers because the pool of their, I want to try to pick a better politically correct word here because I don't want to be too, toxic maxi here. The pool of investors or the pool of speculators, I could use many other words there,